Good morning, everybody. Give me 1 second, please, while I send the links out. Today is January 7th, 2026. We are live from Princeton, New Jersey. What we will do in this live stream is best analyze the intraday stock market using cyclical analysis, time confirmation, and more to find the wind direction, trend direction. Time is 9:27 on the board. One second.
Continue indefinitely. So oil sales from Venezuela to the U.S. and the Western world will be more than 50 million barrels of oil. That was not a one-time thing. That was not a one-time.
The news we have overnight is that
the sales from Venezuela to the United States and other Western nations will continue indefinitely.
Dow
so
rally, fresh highs. S&P futures are a little changed.
15 to 25 super tankers worth of oil. That will continue indefinitely. There's some other breaking news.
This opening between the 4 p.m. close and the 1 minute gap it created yesterday on
rolled back. They will be dialed back, kind of a carrot, if you will, according to my sources.
IWM
over
is
that.
opening
So in other
at
words,
yesterday's
Venezuela
close
will
at
sell the United States
250
and the Western world sanctioned oil that would have normally gone to, say, a China, is now going to be sold or rerouted to the United States or other Western refiners that can handle the
Nvidia
heavy sour
is opening
crude
on this
that is Venezuela.
green trend line.
The proceeds from those sales will largely go back to Venezuela or the United States.
Tesla.
But the breaking news is that we're going to have more than 50 million barrels of Venezuelan oil by far sold.
Wow.
That
Holy
oil
shit,
will be
did they
sold
play?
to the United States
Opening on
and
a
Western
horizontal
nations.
sloping
Some of that
support.
money
Hey, Brian.
will be
This
paid
could
back
find
to
support
Venezuela.
here on Tesla.
We're confused. I mean, that's a different story than we thought to this point, where it was going to be oil that was given to the United States.
Good morning, Henry. Good morning, Captain. Good morning, Osama. Good morning, Almighty. Let's do a quick legal disclaimer. Please consult your personal financial advisor before you make any decisions regarding your personal financial situation. I am not a financial advisor, and I do not recommend that you buy or sell any securities or investments. There are some news coming out today. We have a live
close to the Whitehouse. I just off the phone
from
minutes
Goldman
ago,
Sachs today,
telling me that the United States is going to acquire more than 50
right now,
million barrels of
about
oil.
energy. They're talking about energy right now.
As part of that deal, long-term deal,
QQQ
Venezuelan
pushing north, filling the 4 p.m. close gap from yesterday.
Venezuelan sanctions will be rolled back. This is happening right now.
Very big news.
What I'm trying to understand is there's a negotiation. This is part of a negotiation. Who has negotiated this deal on the Venezuelan side? How is this even working?
They said we were getting this oil. The president said they were giving this oil to us and we were going to sell it, and then the proceeds were going to be used to help Venezuela and the United States.
QQQ fighting like crazy. 4 p.m. gap closed. All right, gap filled. Morning open.
Sanctioned oil. This is completely different. Are they fixing that story, Brian? Because it was a weird story. We were talking about it earlier. Why is it? Was it blackmail that they're giving us?
Yesterday's close.
Or was it to make up for assets that have been seized from the
SPX is at yesterday's close.
Yeah,
IWM is flying above yesterday's close. New high, 256, 3/3 bullish cycle. Nvidia going lower, Tesla going lower, testing the low. This is bearish on Nvidia.
What we saw
Tesla
from the
bearish.
Last night, 30 to 50 million barrels of oil. That sort of
Nvidia, Tesla bearish. Not yet on SPY.
Assumption of that Venezuelan oil. What I am reporting right now from the White House is
not yet on SPY and QQQ showing. All right, fully. This is just direction deciding cycling.
I don't know the price at which we will acquire that oil, whether it will be given to us or whether we will simply buy it at a discount. There's not
IWM is
many
bullish.
refineries
Nvidia just pushing
that
lower.
accommodate
Tesla
this
pushing
heavy
lower.
crude
Testing
sour
yesterday's
oil,
low.
But this is oil.
Nvidia
Becky
testing yesterday's low.
This is
Broke
oil
yesterday's
that would have
low.
normally been rerouted
Trying to go
say,
lower.
China. This
Let's
is
see what happens.
Previously sanctioned oil. Remember, about one
Crazy
third
open on Nvidia.
of
Tesla,
Venezuelan oil,
SPY,
not all
and QQQ
Venezuelan
is at
oil.
yesterday's
About
open.
1/3 is sanctioned. This is the sanctioned oil that would have gone to China or another nation.
Destroying 190
that is
calls
now
on
going to be
Nvidia somehow this week.
rerouted to the U.S. or the Western world. The proceeds will be put largely back into Venezuela,
just on retest is doing it. Just on retest is destroying 190, and there was 130,000 calls.
Brian, here's what
there
I'm
was
kind of
40,000 or
reading
38,000 puts.
If this is the case, if they are now saying that we're going to be getting all
I think they're going to go lower on Nvidia and Tesla, and they're going to show bearish on Nvidia, and then they're going to get more bears enticed down there, and they're going to most likely bear trap in probably a day or two.
Or rare earths, and
that's
now
just
we're
my
trying
thought.
to fix that.
There's a box down there very close.
This is a global
Tesla
play
is already at the horizontal sloping support. This should get bear trap today. There's just because a candle coming big red does not mean there's a fuck ton of bears on Tesla. Do realize Tesla's been going down for about multiple days in a fucking row, right? Since the market update video, we did the market update video at 500. We did it at the tippity fucking top. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 12 days or 10 days. This is a fucking motherfucker.
For
you know what I'm saying?
Anything that's been taken from U.S. assets in the past when they nationalized all those assets.
Yes, I'm going to give you some more details, but I want to get it right
SPY
here.
is mixed. QQQ is rocketing now. Wind direction is north into 935. There's a divergence at the roof.
The United States is selectively rolling back
sanctions. Things are going to happen super fast in the morning cycle. Everybody is not focused. Everybody is literally, that's the most important to pay attention. IWM is rejecting from 930 into 935. QQQ is trying to go back up from 930 to 935. There's a divergence at the roof. Now there's a divergence at the roof.
Apologies for the noise behind us.
The implication initially
divergence
was
at the roof at 9:35, and time is only 9:35.
Giving the United States 30 to 50, and Andrew rightly pointed out that's impossible.
Time
this makes
is
no
only
sense.
9:35.
It would have to be in repayment for something, or
but that's what we
to
thought.
Stay in it brought up all kinds of quid pro quo.
All right. Okay, the live stream just ended with Goldman Sachs. Man, that video we watched had 2,000 views, and it was just posted like 30 minutes ago. Everybody today is anticipating. Everybody today is.
Now, Anastasia Amoroso, Chief Investment Strategist for Private Wealth at Partners Group, and it's good to see you. Your
935
and your feelings about the S&P are
volume is bullish here
like deja vu all over again. A
IWM
lot of people, 76 to 7,700.
Not that bearish.
That's right.
Not quite double-digit return.
At 9:30. Bears are trapped that morning
return.
open
So
at
back
9:35. Time is only 9:35.
But not like this
is not bullish or bearish. This is just deciding.
Right. But to
until
be
the
fair,
low of the
like
9:35 candle breaks, though, all bears, all morning cycle puts are kind of scary, but also that does not mean bullish cycle. That just means divergence at the roof.
Is it a safe forecast, Anastasia?
Based on the numbers, I feel like it is a reasonable forecast because we're assuming the multiple is going to stay where it is today. The Fed is going to continue to deliver some support for the labor market and the economy, and at the same time, the earnings growth is going to come through at 12% this year and about 10% the following year. So you square all of that, and that's how you get to that 7,700. Look, other than the endpoint estimate itself, I will say there are a lot of positives that are lining up for the market and for the economy. I mean, on the earnings growth front, I want to bring up one point, which is around AI and productivity. We get the new productivity print on Thursday, and the estimates are looking for a 5% quarter-over-quarter increase, which I think is like the best in 20 years.
High.
So we are seeing material increases in productivity, which in turn are driving corporate margins. And one thing, Joe, that's interesting for this year, corporate margins are projected to expand to 13.9%. So that is very positive and perhaps not fully reflected in that forecast. And then the other side of that is, of course, the midterms agenda and the fact that affordability is front and center. I think a lot will be done this year.
Risk is there, upside because Tesla and Nvidia looks bearish.
How can you not be positive looking at that?
Downside risk is there because we're at all-time highs.
AI is it's stretched,
so
and that is a risk
scary for bulls and bears.
Valuations. At the same time, the payoff is going to start more than just trickling in for everybody else.
Yeah.
Almost 50-50.
It almost balances
one of them
out.
confusing.
So the risk
one of them trapping. Either the indexes are trapping or either the big names are trapping. So
Look, there are pockets that you have to watch, right? And when you look at, for example, late-stage AI valuations in private markets relative to earlier stages, for example, or non-AI valuations, there's a huge premium, something like 200% that we're seeing. So maybe you have to be watchful of those valuations. But at the same time, Joe, I think any of us around the table, we're likely using more AI this year than we did this time last year. And we're using it in more facets of our personal and professional lives. So as long as the adoption curve is rising and as long as we're seeing tangible kind of productivity increases and therefore cost savings, I think there's this virtuous cycle that is playing out in AI. I will say for us at Partners Group, implementing artificial intelligence is a big focus across our portfolio companies. And again, depending on the company, the industry, the vertical, infrastructure, private equity, we are seeing 20, 30, 40% productivity increases. That is tangible because that accrues to the bottom line, even if it doesn't drive the top line just yet. But I think that is still to come.
You mentioned, so multiples stay the same and earnings rise 12%, but they're still only looking for 9%, so I don't know why you're not looking for 12%. And you also talked about margins improving.
They're creating liquidity at the top. They're not clearing the divergence at the top for a reason right now.
Earnings per share growth.
Right.
So I just think you're still kind of safe at 9%. Are you not?
Well, it is a baseline.
So multiples do come down a little bit?
I don't think multiples necessarily come down. The reason why we're looking for 7,600, 7,700 on the S&P is because it's not really the next year's earnings that going to matter at the end of next year, but it's the year after that. So if you assume that 309, which is what we're projecting for this year earnings, that actually ends up growing another 10% in 2027, that's where you assign the multiples to. So that's what gets us to around 7,700.
When do we have a down year?
When AI disappoints. I think, that's probably the biggest risk in the market today because how much CapEx is related to artificial intelligence, how many efforts, across the economy are related to it. So I think if we do hit a hiccup, if we hit a disappointment, if we end up overspending and perhaps that we don't need as many semiconductors as we thought we did, or we don't need as much data center capacity. Perhaps there's a technology breakthrough. So that is probably the biggest identifiable potential catalyst for a down year. And of course, there's the unpredictable stuff.
Could we have a 10% move down, 15% move down?
Wind direction is south on IWM. Wind direction is north on QQQ.
I think so. I mean, take a look at last year, right? We had, a significant move to the downside, which ended up being a tremendous buying opportunity. But look, the stats are that every quarter, just about, you should have a 5% correction. Every year, you're likely to have a 10% correction.
Divergence is clearing right now. Divergence just cleared.
And this is why, by the way, Joe, we've titled our outlook for this year investing
40
at
bounce
high
into
altitude.
942. So
we're looking at high valuations. We're looking at tight credit spreads. So it feels a little, up there. But what do you do in that case? Maybe you have some dry powder. You're prepared to take advantage of some of those valuations. And I think, much like maybe our geopolitical approach these days, you want to be surgical and you want to be precise as far as what kind of opportunities you deploy in capital to. We're finding plenty of those across sectors like private equity, infrastructure, et cetera.
Joining us now, former St. Louis Fed President James Bullard. He is now Dean of Purdue University's Mitch Daniels School of Business. Now I can call you. I introduce you as James and then call you Jim. Welcome, Jim. It's good to have you on. I'll just put this out there. So the Dow's almost at 50,000.
QQQ is flying into 940.
The labor market might be showing signs of weakening a little, but for every bad number we get some numbers that say, no, it's not that bad, and it's 4.6%. Inflation may be stubborn, but it looks kind of
flying on Tesla,
like it might be anchored, and it could eventually come down. Is this the greatest Federal Reserve in history in terms of managing things that you were part of?
Running into 945 showing.
I think the committee's in pretty good shape right now. They've got, on the labor side, I would just stress, Joe, that you've got to take the immigration policy into effect. Some of the estimates that I've seen around the Fed and elsewhere.
Guys, if you guys, I am not showing my bad. Guys, if you guys cannot not say unnecessary things in the WhatsApp group at most important times during market open, then you cannot be in the WhatsApp group. I'm kind of sorry to say, but all the things people are doing that are distracting, right, are for the YouTube chat. While I kind of share what I think and what I'm doing live, it's kind of really, really not possible to think, right, when people are saying good morning at 9:40, when everyone else said good morning at 9:25, 9:20 into 9:30, right? So I'm not trying to say anything, but I'm just trying to say people are very not focused, right? That's why we need to be focused. That's what the market is all about. So I'm not meaning any way when I say this. I just am like this. So hope you understand. Hope you respect what I'm trying to say. But at the end of the day, there needs to be some sort of focus.
Immigration policy that the U.S. has
at market open
starting last year
at all times.
The new run rate for non-farm payrolls would only be 30 to 50,000 or something like that. So when you get a number like 70,000,
945 is deciding what to do.
You're actually above
cleared the roof
the run
divergence
rate.
into 940. Candle spiked up into 941, which is still 940.
In their thinking.
Time is 9:45. Market is deciding the roof what to do here
like
with
that.
the wind
so
direction
I
north
think,
on QQQ and
that's
SPY.
been tough.
But IWM is
and we didn't have this immigration policy before, so it's all different.
Right. This is the new
HOD,
so I think that's new all-time high. We are at.
On other indicators seems fine. You've got unemployment insurance claims, for instance.
We need to pay attention.
Very, very stable and very low. So. So it doesn't seem to be any problem on that side.
Right, the divergence just cleared, so things are happening clearly, right? We opened in between the 4 p.m. close, 1 minute gap, and we just boomed up and cleared the divergence despite
the natural rate of
QQQ.
unemployment, mid 4% range. So pretty good outcomes there. And then inflation's hanging up a
right,
little
is the
bit
most
high,
important
so
time
the
to
committee
pay
wants to
attention.
stay
Basically,
up a little bit
937
above
focusing,
neutral,
right?
the neutral
Creating the
policy
cycle.
rate to try to continue
direction is north.
to push inflation down. And if inflation does continue to come down during 2026 here, then they'll have a little room to maneuver a little bit farther. Not a lot farther, I think. But right now, I think they're in a good place,
Hopefully
and they're probably reluctant to move too much from here without seeing more data.
And some of it might be AI related on both sides of the dual mandate. Some of the, the reason that companies may not be hiring as much, but aren't really laying people off as much, that could be AI related. And then, obviously productivity and inflation. Remember what happened to inflation the first time around with the internet? I mean, how long did that tamp down inflation? Just the long-term effects of the new world.
As a famous episode in U.S. monetary policy, and Alan Greenspan called it. He said, "I think we've got a productivity boom going on, and we could be on the cusp of that once more here." And I
look
think
where Tesla's at.
The late '90s is a good benchmark. Is that we're not exactly
probably gonna
like
shop
that,
here, play around here, do
but
something
it's a
with the
good
box
benchmark to think about and to look at. And when you think about how the internet, sort of
spiking up into 945, so they did go from 940 into 945. Now it's showing with an algo range at 942.
Examples where all of a sudden it did something that's really noticeable, but it permeates the whole economy, and that's where the productivity gains come from. And the productivity numbers have been good for the last 2 years, and look like they'll probably be good for this year too. So that's pretty good news for the U.S. economy.
And people that want to criticize the current economy say, have you ever seen the unemployment rate rise a half a point and not indicate either a recession or a slowdown? And I hate to say it's different this time, but just what you said, 4.6 is not far in this economy. That's probably not far from full employment. But the
I think the way to think about this, it's great to look at macroeconomic history and try to infer things, but this time was a little bit different. You had this gigantic pandemic, and then you had that, very rapid recovery from that pandemic, and that drove the unemployment rate way down into the 3% range. It's the 3% numbers that are kind of abnormal for the U.S. economy. And then that kind of all settled down.
I'm into
now
Friday SPX. I'm getting squeezed
and
into the shit.
Is closer to the natural rate.
Friday.
Yeah, I mean, Jay Powell
0 DT on IWM
suffers the slings and arrows
from around
of
255 point
of
somewhere.
But deep down, I think, A lot of the things the president says are bluster. He's always going to want lower interest rates. He's always going to, want it his way. But I mean, things are in the stock market, job market, inflation. Things are pretty good. I think deep down he knows that, President Trump.
Yeah, it's a bit of a mixed message. I think that this pro-business administration has done a lot of good things, and we're looking pretty good for growth. They don't really need the lower interest rates, and they don't need to take the risk that inflation would reignite here. That would be very troublesome for the economy, for markets, and politically, I think. So that's what you want to be guarding against here, and let the economy run, because it's running pretty well.
What does that indicate to you on who the president picks? That he doesn't need to pick a rubber stamp, and I'm not going to name names, but he could pick someone that is really good at this and would raise rates when you have to, and not raise them not cut them when you shouldn't. Who do you think he's going to pick when it's all set? You think he'll make the right? You think he'll make the right choice?
I think he's got a good set of candidates.
One of these algo ranges coming.
So I don't. There's not really a wrong answer.
Or
I think
they
from
extend
the president's
it and
point
then
of
do
view,
it real hard. But I mean,
all of these people have skills that they can bring to the table and would do, I think, a good job. I don't think that you really need to have this story about driving nominal interest rates, really, really low. I think if you get to a really low nominal interest rate or zero interest rates or something, that probably is not a good day for the U.S. economy. It probably means that something has gone badly wrong, and that's why you're at this super low rate. So I think I don't think the White House probably doesn't need to press so hard on that issue, and you really want competent management, and you want reform at the Fed, which is something that Secretary Bessent has emphasized.
This year and next, bell curve for GDP. What's it right in the center? You think, I mean, 4% would be on the right side of the bell curve. Would 2% be on the left side, or is 3 in the middle, or is it 1 and then 3 and 2 in the middle? Where are we? Have we moved up?
I'd put down a 3 for this year, 3% growth. Acknowledging that there are risks out there, but I think there is some upside even to that.
Even to
where
3.
You could get faster growth this year. So I think it will be a good year for the U.S. economy.
That'd be amazing. That'd help with the debt. That'd help with that $40 trillion. It's going to be $40 trillion, like next month or something, or like in 4 months.
I mean, one thing that happened in the second half of the 90s, you did get rapid growth, rapid productivity growth, and that did help a lot. I mean, I don't want to take Congress off the hook. They do have to control.
Don't say that.
Oh, my mic is muted. Sorry. They're building liquidity right now. I said they're being used right now. This is the 3/3 cycle building. 1/3, 2/3, 3/3 plan. All right, one of these algo ranges coming. All right, that's what I said also. My mic was muted. Sorry, I said that literally 2 minutes ago. Now at 9:50, I said bulls are being used for the 1/3, 2/3.
Market kicking off 2026 with big moves across assets, from equities holding near record levels to gold and other commodities also higher despite geopolitical tensions. Chip makers rallying as AI-driven demand tightens supply chains, fueling expectations for higher prices there. And we want to look ahead to 2026 to suss out what looks like the best long-term investments in a volatile environment if we get one. Joining us right now to talk more about that is the Chief Investment Officer of Citi Wealth, Kate Moore. Kate, great to see you.
Great to see you. Happy January.
Yeah, you too. Happy New Year. So give us the backdrop first in terms of some of the macro issues that you're looking at as you decide how to allocate capital and recommend.
Yeah, so a big thing I want to say, Maria, is that instead of giving a full year outlook, which we think can be very, very challenging, we're really focusing on, investing for the next quarter or the next 2 quarters. And so right now we have a very constructive view. I heard you guys talking about this a moment ago on the macro economy. We're seeing not just in the U.S., but elsewhere, benefits from monetary stimulus that came through the course of 2025, as well as what we expect will be targeted fiscal stimulus. And unlike some folks that want to rotate just kind of for rotation's sake, we're still really constructive on the tech and AI theme, powering earnings, which we think has to be really
I'm scalping this shit right here.
And we just got the ADP numbers in terms of the backdrop on the macro story. How do you see things with regard to affordability and inflation and growth and jobs?
Yeah, like a lot of people, we've been talking about the K-shape for the better part of the last 4 quarters. And I think the K-shape in the economy and the consumer is going to be very present. Some people are feeling really good about the future if they have gearing towards asset prices and have appreciated over the last 12 months. Or some people have been pinched a little bit by inflation and a slightly more challenging but not deteriorating labor market. That said, we do think the first half of 2026 is going to be strong in the U.S., and we want to invest alongside of that. So not step away or rotate into defensives.
All right, so you've warned about the risk of narrative fitting, where investors focus only on data confirming their view. Tell us about allocating capital then. And are you talking about across equities, or are you also looking at commodities and some things like hard assets, which of course have been rallying recently?
Yeah, totally, Maria. So I've been fixated with this idea of narrative fitting a little bit because people decide what the story is and then cherry pick the data to really kind of fit their story. What we really are trying to do is look at the broad,
every single fucking 5 minutes
data, sentiment, technicals, fundamentals, and all of it is looking really quite positive. But you mentioned this, we're kind of constructive on equities, of course. We like U.S. equities. We've had a strong position in Chinese and emerging Asia, actually also because of our tech news.
Of the morning cycle.
We have been looking upstream and downstream across the tech spectrum, and we continue to like gold in the portfolio. So we're looking also at industrial metals as well as precious to really fit the whole portfolio.
Wow, that moved so
yesterday, nickel
fast.
had a really good day, and we also saw strength in gold and silver. Are you spread out across commodities, or just looking at just gold, as you just mentioned?
I mean, gold has a significant portfolio anchor for us, both because of our views on duration, which we're not as constructive on, and because we think it's a nice balance to our overweight in equities. That said, we haven't dipped into something like nickel at this point, but are talking to our clients a lot about how they can play the industrial metals that really benefit from the AI technology investments.
So is it the industrial metals benefiting from the AI boom and not necessarily because people want to hold hard assets in uncertainty around geopolitical events?
Top of the algo range testing
holding some of those hard assets for a lot of clients is actually quite difficult.
This is not
so we're more
bullish
focused
or
on the
bearish.
thematic side of it around technology.
What's your take on the Fed and the affordability push in terms of the Federal Reserve's moves on interest rates?
Yeah, so the Fed did, a significant amount of easing we see in the second half of 2025. We're going to see a lot of that play out in the economy over the first half of 2026. We have to remember that cuts in interest rates work with a sometimes long and variable lag, but we're expecting to see those dividends kind of pay off in the first part of this year. That will certainly help affordability, we think, and we think it will be very positive for overall consumer activity. But I don't think it's a slam dunk the Fed cuts at every policy meeting in the first part of this year. If it were me, and no one's asking me to be an FOMC voting member, I would say let's wait and see what the lagged effects are and how that impacts activity. And so we're going to watch inflation. Of course, we're going to watch the labor market report coming up on Friday and listen very closely to companies as they report fourth quarter about how they think about their workforce in the future.
I mean, you've got so much money in money market accounts, and I wonder how much you focus on this, because the last number was, what, $8 trillion in money market accounts?
Yeah.
If you've got rates going lower and eventually rates go lower in money market accounts, do investors say, hey, I've got all this money in money market accounts, I might as well take that out while getting a better yield in the stock market?
Absolutely.
So do you think that's going to be a catalyst for this market?
It should be a support. And it's a conversation that we're having with our clients all the time, which is to say, we understand you want sleep at night money.
Right.
We understand you want to have a little bit of balance, but you really need to take advantage of what are some very high quality opportunities to really grow your assets significantly above what you can get in a money market account.
And a moment ago, you mentioned that you're looking at Chinese equities, you're looking across the world. Are there other areas in addition to America that you would be recommending right now?
So, China and EM Asia is our second kind of largest overweight. That's where we're most concentrated.
Yesterday's close.
In other areas of the world, let's say Europe, for example, we want to be more selective. I know people got very excited over the course of 2025 around fiscal stimulus in particular and thinking about defense spending. We do think that's going to play out, but some of that is, in our view, already in the price. So we want to be more selective elsewhere, perhaps use some active management to engage there.
And they're trying to go up north.
We really want to invest alongside tech, and we think those folks that are calling for a rotation away from it in 2026 are going to find themselves disappointed.
Well, we've got like two major decisions that we need to hear on. We've got to know who the president is going to choose as the next chairman of the Federal Reserve.
Yep.
Do markets care if it's Kevin Hassett or Kevin Warsh? Will we see a market reaction if it's someone else?
I think if it was someone else, we would get a bit of a reaction. But I think we've vetted and know many of these candidates for a significant, period of time. And people are expecting that the next Fed chair will likely have a slightly more dovish tilt and look to ease policy over the course of 26.
The other issue is tariffs and the Supreme Court decision. The Supreme Court has called this Friday, January 9th, an opinion day, meaning they'll release opinions after 10 a.m. I don't know if they're going to release the IEPA opinion, but they could, because we're expecting any day now. If that, a lot of people expect the Supreme Court to go against President Trump. I'm not sure, but certainly the president has done a lot with these tariffs. Do you think markets react if, in fact, the Supreme Court goes against the president?
Look, I would say if the Supreme Court was to overturn the IEPA tariffs, you might get an immediate positive reaction in the equity market. Oh, we don't have to worry about this as being a margin pressure. But we know this administration cares a lot about using tariffs as a policy tool. And even if we're not using IEPA tariffs, we would expect to see a whole other range of tariffs actually get introduced, sectoral tariffs. We know that the administration already has many of those things in the works. So I think we should expect this as an important policy tool for the duration of President Trump's term.
And of course, you started off by talking about this AI boom, Kate. Tell us how you want to suss that out. I mean, in this AI boom, we've already seen huge valuations in companies like Nvidia. I mean, come on, it almost hit $5 trillion in market value.
Yeah.
Is that what you mean when you say the AI boom, or is there broadening out into energy and other areas as a result of this boom?
Yeah, so we're watching a couple of things. We think the investment in AI is going to continue in a significant way over the course of 2026. But a big risk, Maria, that we have in the market is that some of this investment doesn't play out on the exact timeline that people want it to, or there's a disappointment in terms of the delivery of some of these AI data centers. So that's a risk. So we're actually looking at a lot of different ways to invest. Of course, we like the hardware. We're looking at the software. And we're also paying very close attention, frankly, to how companies across all industries are employing AI tools to really drive their bottom line. That's where I'm most excited, I think, in the equity market this year.
Great. Kate, it's great to have you this morning. Thank you so much.
Awesome to see you, Maria.
We'll be watching your work at Citi. Kate Moore, we will be hearing from the Energy Department in moments. President Trump's historic action on Venezuelan oil reserves. We're going to take you to the Goldman Sachs Energy Conference next. Stay with us.
Sorry, I'm clearing something.
Say it is time to buy air when it's at all-time high and it's got a big valuation now. And the answer is that if you come in now, you better have a darn good reason ahead, not before. Air already reported. SanDisk has already raised prices. We already know what's going on at Seagate. You have to have something that nobody has. And there are not many that are like that.
Let's get the opening bell on the CNBC Real-Time Exchange. With the big board, it's Coastal South Bank shares celebrating a recent IPO at the NASDAQ. Lyra Health, provider of mental health services. We did keep a close eye on the XLV yesterday, Jim, and healthcare in general.
Well, look, I think you have to. I mean, we had a double upgrade for Generon, showing that there may be new life.
Turning it to 3/3 right now. Turning it to 3/3 right now.
Obviously, Eli Lilly.
Oh, they're going to break down low. They're going to break down low.
Seems to have leaked. I thought that deal was going to come next week. This is a deal, very small deal, $1 billion, but I thought that it would be announced. Ventix, it's TYX. A lot of buying ahead of that, by the way. Just want to point that out. Not like Polymarket.
What the fuck? Break it. Break the floor.
DK trade.
Break the floor. Break the floor. 10. Yo, what the fuck is that? I told you they're building liquidity, right? Look at that one.
Let's get the opening bell.
Look at that one.
It's Coastal South Bank
35.
Celebrating a recent IPO at the NASDAQ, Lyra Health, provider of mental health services. We did keep a close eye on the XLV yesterday, Jim.
65.35.
In general.
Well, look,
bullish.
I think you have to. I mean, we had a double up
And they
for
pushed up.
Regeneron showing that there may be new life. Leah, we have obviously Eli Lilly about to do a deal, and I think somehow seems to have leaked. I thought that deal was going to come next week. This is a deal, very small deal, $1 billion, but I thought they would be announced. Ventex, it's TYX. A lot of buying ahead of that, by the way. Just want to point that out. Not like
shit going on.
Polymarket.
IWM heading lower here.
Venezuela.
They want to break the floor. They want to break the fucking floor. 1/3, 2/3, 3/3 cooking. I literally called out 10 minutes ago, right? When at the tippity top, when it looked fucking bullish. Let's see when I called it out. 9:50 in the morning. 9:50 was up here. I said 3/3 bulls being used for 1/3, 2/3. There's a divergence at the roof, and they're doing this shit. Dangerous for medium and long term, right? Puts liquidity building and dump. Fucking 10 dump. They're about to break the floor. Time is 10:05 here in basically 20 seconds, 30 seconds. Look at the fake out on the video. 190 fake out, right? Calls got revived 50% in the video. 190, and they're fucking destroying it now. Oh my god, I love setup, man. Setup traders versus what? Everybody say it with me. Setup traders versus what? Candle traders. Say it with me, folks. 254.14 is in danger here. 254.14 on IWM is the 0.5 Fibonacci. Tesla is testing the previous day low. This is why I need focus at market open. This is why I don't really care about distractions. This is why I don't give a fuck. Right, market too dangerous, right? People are too distracted, and people do not give a shit about cycle and confirmation and time confirmation and MACD and volume and true time confirmation and all that shit. When direction is south now, bears are in control here, that they don't give a shit. All right, LOD broke. Wind, bears are here. Wind is south. Time is 10:05. I'm telling you, they're about to go lower. 10:05 is only 10:05, and they just broke the floor. They can go lower for 5 or 10 more minutes here, or they could bounce and then reload and then do it. So, if there's a divergence at the roof though, so it's fucking dangerous shit. I ain't gonna lie. IWM looks like it wants to go though. IWM looks like it's gonna go more. So at least cents on the dollar. I'm hoping this shit burns all fucking everything up there on the video, but fuck. Alright, this could be a bounce candle, or this could be a spike too. Go crazy lower. So we'll see. This is the new all-time high, and this is what they do. This is what they do, because everybody bullish as shit at every single new all-time high, so that's what they fucking do, man. Now, there's a 1/3, 2/3, 3/3 intraday cycle that is deciding what to do at the new all-time high.
News just out, literally as we've been speaking, ADP's monthly employment report, private payroll is rebounding in December, added 41,000 jobs led by education, healthcare, and leisure and hospitality sectors. Joining us right now is Nella Richardson. She is ADP's chief economist. Tell us what's going on.
I'm telling you, dude, candle traders versus fucking deduction traders every fucking day. You heard the president live yesterday. How many times did he say the word deduct,
still leading healthcare services and
15
leisure and
times.
hospitality.
My internet was
Goods
down.
down, but those
losses narrowed in December. So
basically every sector that lost jobs in November lost fewer jobs in December. So that's kind of good news. And we also saw a rebound in small businesses. It's not a strong push, but it was a increase in hiring in the last month of the year. And I think that's a great sign going into 2026.
So the thing that, we saw some of the GDP numbers that I think surprised people earlier last December. If you look at these numbers now, we're going to see the jobs number on Friday. What do you think this portends, and how?
Bulls are winning on Nvidia right here. No, time is 10:05, so they're showing still
I'll take
north.
that second question first. Remember, these numbers have been benchmarked. So ADP benchmarked the numbers with the QCW, the formal census, in August. And so when those people who were looking at Chair Powell's remarks, talking about
divergence
perhaps
at the roof,
BLS numbers being biased towards the upside, you won't see that in the ADP number. And both series will be re-benchmarked for the full year in 2025 in February. That means that there's not going to be a lot of comparison between the full number ADP and the full number BLS on Friday. Right. One's been benchmarked, one hasn't. But you'll still see, I think, the strong sectors stay strong. Health services and leisure and hospitality. Now, turning to the first part of your question, it's not lost on me that the strong sectors have been the sectors where there's been a benefit from this K-shaped economy. Health services is an expensive sector, and leisure and hospitality is an optional, a discretionary sector. And so that is reflective of what we've seen in the overall economy, where high-income consumers are really driving spending.
God damn.
Okay, Neil, we're going to leave the conversation. We're going to leave the conversation
there.
We appreciate it, and we look forward to what we hear on Friday and see how things match up. Thanks.
Crazy. Today is Wednesday. 2 days before Friday, and they're fucking going crazy higher, man. Oh, not liking it. Yo. Oh, wow. We have a press conference.
News just out, literally as we've been speaking, ADP's.
We have a Whitehouse press conference today. What time is that thing at? Let's check, guys. I think it's around 1. Oh, shit.
We're talking about the broadening. I think it's also important to note the S&P hit a record high, and so did the S&P equal weight yesterday. What does that say to you about these first couple early trading days of the year? The fact that we're shaking off headline risk, the VIX pretty close to a year low, and also we're seeing the market cap weighted and the equal weight hit an all-time high at the same time.
Yeah, well, I think when you look at where earnings growth has been, it's been quite strong. Tech earnings growth and revenue growth has been very strong as well.
11 a.m.
Interest rate policy, if they cut rates in a subsequent meeting, that could be pretty positive for equities, and I think they've really been responding to that.
All right. Right now, where do you see the most attractive sectors? Is defense especially attractive based on these headlines? Because people seem to be shaking off headline risk, but they're certainly responding to headlines. We saw the oil majors move higher. We saw defense move higher as well. Is that genuinely attractive considering some of these geopolitical tensions that we're seeing?
Certainly. I think if you look at a Chevron, for example, that's certainly an area where they could benefit. If you look at Northrop Grumman or Raytheon, or used to be known as Raytheon, those companies
Whitehouse press conference at 11 a.m., guys.
The clearest benefit is actually the gold miners.
That's fucking huge.
Where this uncertainty is making emerging market nations de-dollarize, and the more that they buy gold as a replacement for treasuries, the better that is for those gold miners.
Walk me through it, very quickly, because we had our Jim Cramer
into 11 a.m.
soundbite from him
during
saying
11
that
a.m.
a lot of the gains in the oil market are already priced in. It's going to take years for it to materialize. And in all fairness, we already saw in Europe they plan to increase defense spending, and here in the U.S. we have plans to increase defense spending. What's not already priced in? If that spending has already been approved or is on its way to being approved, And
Wind
we're already
direction
expecting
is
to see
south
more
on
spending.
IWM and
What does
SPY,
this potentially lead to when it comes to defense or oil? What upside are you seeing, at least in the near term?
Nvidia.
So certainly for oil, it would take enormous investment to really get Venezuela back online. And nobody's going to want to do that with Brent and WTI prices where they currently are. It doesn't make sense as an investment. If you look at are people going to be investing more in defense? Yes, certainly, especially Europe. But they were doing that anyway. So that isn't a huge change either. But if you're an emerging market nation and you're considering, do you want to hold your money in U.S. Treasury bills as a reserve, or do you want to hold it as gold? And let's say you're China and you hold 760 billion of U.S. T-bills, and you just saw that they took out Maduro, I'd feel a lot more comfortable if I had 760 billion of gold bars sitting in a vault in Beijing that we couldn't easily get our hands on. Okay. So I think that's where the real incremental move is.
So really bullish when it comes to gold. You're making that very clear right now. We got to talk to you about technology. Obviously, we have CES this week. We're going to be talking to somebody from CES later. We saw Jensen Huang coming out saying that the new generation of chips are in production. He believes demand is strong. How do you view the AI trade that's powered the market over these last couple of years? Do you stick with that, or do you broaden out?
Pulling back.
Well, I think the best way to broaden out within the AI trade is these companies more like an Arista network that are powering these data centers with their software.
My Monday
and
up,
enable,
I laddered up
the
1,
growth
2,
of AI
3.
without that
Yesterday, I laddered up to positive into close 1, 2, 3.
that you have to make to get into the name like an Nvidia. I think you can get the same type of revenue and earnings growth.
I need Nvidia to pull
cheaper.
down hard, like 180 fucking for it. Hard. We'll see, man. Things are just all over the fucking place for me, I'm not gonna lie. SPY is Nvidia is squeezing. Just a big ass game on Nvidia, this shit is, and I'm fucking holding through cycles like crazy here. This cycle fucking crazy, just destroying. It's just set up. I can't even call this bullshit because it's literally just set up. It's playing in that yellow box like crazy, so good for them, right? Playing in this entire fucking week range, good for them, but wow. Let's see what the fuck happens. There's usually a fucking pump on the video before it drops, so I mean, I'm literally hoping here. But, this is it. This is it on NVDA. I ain't gonna lie, this is fucking it. If this shit does not drop into tomorrow, I am fucked. There's usually a big ass fucking pump up though on the video before it drops, so I don't know, man. I'm fucking almost hoping. Morgan Stanley launching crypto.
Amy Wu Silverman, head of derivatives strategy at RBC Capital Markets, joins us now. I was talking about you're going to go across the universe in terms of markets that you're watching right now.
New all-time high, folks.
We're setting up what are options or derivatives telling us about the tail. What is the tail telling us about the dollar?
Oh, my Lord.
So look, we just put out our 2026 volatility outlook, 4 main predictions, but the gist of it is that it's going to look similar to last year, but it's going to rhyme. And one of the key things we discuss is you've seen a lot of this exuberance in call options, the YOLO, FOMO, and the AI side. One of our predictions is that you're actually going to see this mechanism, but in an industry you wouldn't expect, so perhaps like healthcare. And a lot of that has to do with this retail leg of the stool we've talked about, where people are waiting for this leg of the stool to be taken out. I don't think that's what happens, Joe. I think you're actually just going to perhaps see a move on because there's so many other things that you can use to express optionality with the prediction market, cryptocurrency. So it's possible that retail could just move to something shinier, but not necessarily something scarier.
This is now 3/3 bear cycle.
And there's plenty of new things, new shiny things that you just mentioned. And you mentioned, I guess, crypto is one, obviously, prediction markets
1/3, 2/3,
is another short-term option. They all go into this. So some interest comes away from traditional retail
everything
buying and
Friday
just equities and goes into these things.
I'm in all my
equities come
fucking
down, but
zero
not for any
DT,
horrific
fucking
reason.
everything into Friday, still on
no,
Nvidia.
I think, look, it's probably still going to be a relatively strong
everybody
year
good.
for the market. I think a lot of people have been asking, if you take away the sustained retail buy the dip, does that scare the market? I think actually what happens is if you lose that support, again, it could be to something different like zero-day options, changing your tenor or changing how you express things. Just think about what occurred with Venezuela. You're actually seeing people play that in the prediction markets itself. 10 years ago, there was really only one venue, which was the option markets. And so you do see some sort of disintermediation. And what that has created, the one thing I think is really interesting to think about is there is this shadow hedging complex, which we talked about last time, which is this idea that there are people who are interested in hedging, but because you have these April 2nd situations where the whiplash is so high on the right tail back up, there's a lot of reluctance until we see downside momentum confirmation.
Why? You don't really usually dabble in fundamentals. These are not all exactly the same. YOLO, FOMO, and MOMO, but they're all kind of the same. So you only live once. You fear of missing out. MOMO's momentum.
Momentum.
Why would you say it could move in the options craze away from AI to healthcare? So you're picking why healthcare? Are you seeing technical signs of that, or you think there's a reason for it?
So one thing we see that's an indicator is this idea of option skew, which simple definition is just the demand imbalance between put options and call options. Usually, and this has been true for 30 years, the put option demand is higher than the call option demand because most folks are long and they're trying to hedge. And what happened post-COVID is this totally flipped on its head. We had to take the playbook from 30 years, throw it out the window, and a lot of that had to do with retail, which really prefers to buy call options.
SPX, but I am not out still.
We're starting to see signs of that in kind of not boring industries, but industries that you typically wouldn't expect. So we've seen it in AI already. We saw it in your meme stocks. But we're starting to see it shift into other industries. The reason is people are looking for a show me for AI. They're saying, great, AI is wonderful. There's all this CapEx expenditure. But what is it going to help? Is it going to help?
2 SPX constructs I joined for 2K. I am out for 1.4K profit right now.
Show me ideas bubble up. To some degree, it is an extension of the AI story, but the technical indicators I
still
think
have a
will
lot
start
of
to
fucking
map
puts here on SPX
that you haven't seen in the last
Friday.
few years.
So if you're not using puts because you're already long, then this is
time is 10:20.
Skewing the calls, then it's FOMO. You're not in, and you're trying to cover yourself by having calls. So is that bullish?
So
overall,
you know what I would say?
I
call it the reluctant rally in the sense that if you're a portfolio manager on day one and you've been living through this market the last 3 years, you know how heavily concentrated the market is in certain things. And just because you have to participate, because you have to meet a certain benchmark return, does that mean you're bullish? I don't know, but it still means you have to participate. And we capture that
sounds
through
like the
momentum
opposite
factor.
of what he's talking about, though.
But it doesn't mean that you're not in the market.
I'm in the market, but I'm afraid.
But I'm reluctantly in the market. And that's why I call it shadow hedging, meaning a lot of these folks actually do want to hedge. They do feel rather bearish, but they're afraid to because what happened April 2nd?
Right.
You got that sharp sell-off, but you got that whipsaw back up. They spent most of that year chasing the right tail, not protecting their left tail. And so it's, again, the same mechanism of every investor I have these macro roundtable dinners with, they tell me they're pretty bearish, and then I say, well, are you in the market? Absolutely, I have to be. And so I think this continues, and then you even see that chase more to industries that you wouldn't expect.
You know, you never catch your tail if you chase it. And
my cat does.
Yeah, my new German Shepherd
my cat can catch his tail.
He just saw his tail. He's 7 months old, and he just saw it. It's like, wow.
Pretty exciting.
I was going to go on to something else here. So you think, okay, again, you're mostly technical. Taiwan and Greenland loom large in your mind at this point.
It does. And I will tell you, when the Venezuela news initially came out,
my average was 70 cents on IWM.
The first 3 pings I got were about Taiwan, about the Taiwan tail, because obviously this is essentially a precedent for other of these situations happening. I mean, and it's not like the PRC hasn't discussed it. It's not like Trump hasn't discussed Greenland. I will tell you, we go to these volatility conferences, and every year the Taiwan tail is thrown out as something that could possibly happen, but has never felt more real to clients.
Yeah, it feels like a fatter and fatter tail.
It's a much fatter tail this year. People are much more explicitly asking, how do I express this?
So you don't believe John Thune?
I mean, You know what I would say is there are so many things that have happened that you could use the word unprecedented in front of it, Andrew, that we've had to then.
So you should raise these questions.
I think so. I mean, I think your Overton window of what is possible in this administration is just larger. And so when you think back to what other countries have said, if we go to these
I've been told I shouldn't ask these questions every day.
No, I'm not saying.
Because these questions somehow are inappropriate because we every day listen to these things and we've become so inured to it that I'm supposed to just,
whether or not we ask it or not, I can tell you the market is asking it of us.
They are.
So it's
I heard about
clients,
that.
That's why we talk about it. I'm not telling you not to ask it. I'm just telling you that the worst case scenario probably isn't going to happen normally.
And that's always a matter of perspective in the sense of it might be a worst case scenario for some and not others. And that's a market question in terms of.
Oh, it's a perception question,
of
too.
Of course.
I mean, there was a candlelight vigil about a 5-year anniversary yesterday of January 6th. And so once I look at that, and I almost. I think it looked silly. I think it was ridiculous. On the other side is like it looked like a pall was cast upon me.
And so, Joe, that's what makes a market.
That's what makes a debate, and that's what makes a morning TV show. And
I can tell you that the tails are fatter wherever you stand.
But you can't get, if they're fatter, you ought to be able to catch them because they're moving slowly.
And the thing I would say is what I thought was really interesting about the way the Venezuela situation worked is it went straight back to AI in the sense that think about what was first on clients' minds. They saw this kind of geopolitical event happen, obviously impacted energy, but they worried about Taiwan and they worried about the chips.
We have this Whitehouse press conference coming out at 11.
What I thought was so interesting about the calls I received is what's still on investors' minds, no matter what happens geopolitically.
I said during, after, important, right? And then 5 minutes later, they fucking did it.
I think geopolitically, this has always been difficult for markets to price, especially.
That is wild.
Welcome in our first guest, Chris Versace, Portfolio Manager of the Street Pro Portfolio and Chief Investment Officer of Tematica Research to help us set up the day. Chris, am I still allowed to say Happy New Year? I'm just going to say a Happy New Year because we haven't talked so far in 2026. Let's get into it, Chris, with your take on these records that we have pretty much to start the year.
Look, I think we had this big event, maybe you heard of it, something called CES that really reinvigorated the AI trade. And when we, take a look at the composition of the S&P 500, the NASDAQ, it's really no surprise that the market has moving higher. I do think, though, Diane, that folks are going to start to question how much more do we have to go. And, I've been pretty vocal saying that to me, when we look at where the PE multiple is for the S&P 500 in particular, the upcoming earnings season is going to be critical. Are we going to get reassurance of that 14% EPS growth that the market seems to think that overall market basket will deliver in 2026?
By then it might be way too late, too.
So, obviously, CES is front and center. We heard from Jensen Huang, we heard from Lisa Su, Nvidia, AMD. Didn't move the needle too much on their shares, but again, we're seeing the memory names off to the races. A little lower today as expected after those huge moves yesterday. What's your takeaways when you look at some of the things that are coming out of a CES, the, faster chips? It feels like it's all about super chips now.
Super chips, robots, autonomous. Did I miss something? I'm not sure. Look, this is a big showcase event where companies kind of trot out all the things and wares that they'll be bringing to market either later this year in the case of AI PCs, smartphones, smart glasses and other things. But then at the same time, we have these keynotes that really give a multi-year big picture look. I think the best example of that is Lisa Su, who said that, we're going to have 1 billion AI users going to 5 billion over the next 5 years. Now, very impressive numbers. Will we actually get those numbers? We'll see. To me, as an investor, it's more the vector, the velocity that matters, the direction. And obviously, we're going to see that number continue to climb with rising consumer AI adoption, enterprise adoption, and adoption elsewhere. But for me, Diane, as I've been talking with the Street Pro folks, it's all about rising usage levels. That matters much, much more. And when we think about that, we like to connect it back to what I call the second derivative plays. I think that explains why some of the storage names are up. That's why some of the chip names outside of Nvidia, AMD have been moving nicely.
Look at how hard.
So do you think that
please
this is
pay
going
attention
to be...
and look at how hard it is to fucking see it. And I drew it as it happened, before it happened, right? Because it's happening. It's just there for people to see. Some people choose to see it. Some people don't. You get what I'm saying? Like, it's just really up to whoever gets to see it, whoever chooses to see it, and whoever decides and deducts the right move. That's
year
all
where we hear more about the second and third tier. We thought last year would be that year, but again, Nvidia showed us that it was still the leader and, more than a workhorse when it comes to the AI arms race, and obviously
this is at the
Google
fucking floor.
Well.
If
do you think
Nvidia has
this is the year
to drop,
that it's second
if
tier and third tier?
Then possible. But.
So let me just first say, I do think that Nvidia came out, with the Rubin chip, really saying to everybody, look, we're backing up the truck. We're going to roll over people and go forward.
Bullshit. 1, 2, 3, 4, 5 fucking days
because of the
up and down, up
capacity
and down,
constraints
up and
that are
down.
out there is ample room for other chip suppliers, whether it's Marvell, Broadcom, and their partners that happen to be other hyperscalers. So let me just put that out there first. Second, though, second in other areas, I think it's incumbent that we see confirmation of this rising AI adoption. How are we going to find that? Look, we're going to want to pay attention to what Salesforce has to say, CRM. We also want to see what ServiceNow is going to have to say, and others. Because as we see those numbers tick higher, I think we're going to see people come around and believing that's not the AI bubble. We're actually seeing this unfold. And I think that's going to be critical.
News catalyst and the major
so that's critical. And then there is that question of,
hey guys, we have 125 people here, 130 almost. Let's get the like button.
In the early innings. What's your thought on that?
Yeah, I agree. We are in the early innings, but as I've said, to me, just when you look back at other tech adoption cycles, whether it's smartphone, internet, you really want to track that combination of AI, in this case for AI adoption and usage, and we're very early in both. And I think that kind of gives us a little bit of credence, providing we get the confirmation, like I just mentioned, from these other companies that are seeing the adoption in their business models. That's going to allow us to say, yes, we are, maybe not first, maybe not second. Some are saying top of the third inning, something like that. I think we'll have confirmation of that. But yeah, I would agree.
Okay, and I want to get your final thoughts on the year ahead, your expectations. Will we continue to see more records?
You got the floor too.
Geez, from here, it's going to, like I said, it's really going to depend. But I would also push back on that question. It's a question that I have to be honest, we're friends, we know each other. I don't like that question. And the reason being is that there are investors out there that do buy, SPY, which is the proxy for the S&P 500. But the vast majority of folks are buying individual stocks. So I tend to prefer to look for companies that are better positioned than the S&P 500. I'll be mindful of the market. So having said that, I do think that we can see the market tread higher, but I think it's going to be capped based on what we see in the upcoming earnings season. Like I said, given the market multiple, 2026 initial expectations, that's going to be key.
Okay, that is certainly key, and we've got the earnings season coming very soon. Thank you, Chris. That is Chris Versace, Chief Investment Officer of Tematica Research. Thank you so much, Chris.
Nvidia is so strong for the first 1 hour of the market. 1 hour.
Damn, are these wildly different companies despite all hawking AI chips?
AI chips, man. Artificial intelligence.
set you up for this trading day. Definitely waiting to go through some of those numbers when it comes to jobs and so much more. CBOE, we go straight to Kevin Hinks and our pre-bell playbook. Good morning to you. Okay, so let's go through some of your thoughts pertaining to jobs and what we're getting in.
Good morning, Nicole. Yeah, we got some data out this morning. It was timely. It was accurate. And in terms of jobs, we got the ADP private payroll report up 41,000, a little less than expected, but a nice jump. Remember, last month we were negative 32,000. That was revised to negative 29,000. Plus 41,000 jobs. Companies with between 1 and 19 employees added 4,000. 20 to 49 employees added 5,000. The lion's share, 29,000 in companies between 50 and 249,000, and then 250 and above, all the way 500 above, only about 7,000 jobs. So the no hire, no fire economy still happening, but we did get a nice jump in that 50 to 249 job. Now, where are the jobs? Education and health services added 39,000 jobs. Leisure and hospitality, 24,000 jobs. The biggest loser, professional business services, lost 29,000 jobs. So a good solid number out of ADP private payrolls. The new normal, lower numbers as lack of government hiring and an overall economy that is no hire, no fire. It's a nice positive number, a slightly less than expected though, at 41,000 jobs.
I wonder how the Fed will interpret this little piece of data. I know this isn't their favorite piece of data, but you know, what say you about what the Fed may or may not be thinking for the next meeting? I saw Goldman Sachs still thinks there's a cut coming.
I think, here's what I think. When we get the payroll numbers on Friday, they're going to look at two things. They're going to look at the unemployment rate to make sure the labor market is not weakening significantly, and they're going to look at the wages data. And long as the wages data is benign to slightly lower, then they're not as worried about inflation. And then they can focus on a 4.6 unemployment rate. So I think as long as inflation is stable to working its way lower like it has been, I think as long as the unemployment rate is 4.6 and holding,
man, my Friday fucking puts are getting played around with the
pressure is still going to be lower on overall interest rates, especially with President Trump sometime in January is expected to announce the new Fed chair. That Fed chair is probably going to lean slightly on the dovish side. So, yeah, I think the trend is lower interest rates. It's just a matter when that date starts coming up. When does the date come into focus of when the next cut's coming, Nicole?
All right, next up, we're talking about turning over barrels of oil from Venezuela to the United States. And it's not that the United States needs oil. This is a story about not having our adversaries across the world, you know, and this should be good for the Venezuelan people, from what I understand.
That 30 algo range traded and went higher on it too.
There's the general message right there. The original
all those algo ranges at the roof, and now they're creating
Venezuela
all these fucking algo ranges
or
at the
the
floor
U.S.
again.
taking
This is
30 to
fucking dangerous, and we have the White
million
House press
barrels of
conference
oil
coming in 20
to the
minutes
U.S.
at the midpoint.
Well, that's not. Turns out that's not the real story. They are going to be giving 30 to 50 million barrels of this heavy sour crude to the U.S. that the U.S. is then going to sell on the open market. Everyone, you know, that set up a bunch of red flags. However, this money is going to be stored in U.S. banks, and then when the Venezuelan government is stable and not corrupt, it's going to be given back to the Venezuelan people. So this is not a grab of crude oil coming out of Venezuela. It's actually a way to monetize their crude oil that they have, store it, and give it back to the Venezuelan people eventually. So, and this is going to happen, you know, 30 to 50 million barrels is just the first wave. They're going to do it over a significant amount of time, and then they're going to, like I said, store it in U.S. banks, then back to the Venezuelan people.
And from what I understand, you remember that Trump met with
So many of the drug CEOs during COVID, they were all rushing to the White House. Then we had the tech CEOs rushing to the White House. Now we're going to have the energy CEOs rushing to the White House on Friday. From what I understand, it's going to be Chevron, ConocoPhillips, Exxon, and other domestic oil producers meeting with the president and making significant investments in Venezuela's oil sector, somewhat if they want to or not. There's certainly this sense that the president is going to push for that. I'm not sure whether or not the companies want that, but that seems to be the plan too, in order to ensure some, solidarity and solidify.
Here's what it is, Nicole, real quick. Chevron has still a relationship in Venezuela in business, but ConocoPhillips and ExxonMobil, the other two companies you mentioned, their land, their developments there were nationalized by the Chavez government. Now they have an arbitration ruling against Venezuela for those proceeds of that oil. So that's all got to be figured out as well. But yes, those are the three big players in Venezuela. I would imagine that ConocoPhillips and ExxonMobil want to get back into Venezuela, and just like Chevron's already there. So yeah, this is going to play out over time, but I think the general theme is more supply of crude coming on the market that will benefit the Venezuelan people.
All right. Thank you. Kevin Hinks, live at CBOE. Great to see you.
Man, the CBOE. Motherfuckers wild. Oh, yeah. Oh, yeah. About 10 people that left. I'm telling you, it's about that time. Candle trader needs to go. Candle traders need to go.
Capital, because unlike other investing strategies, this is a cash investing strategy. What I mean by that is our investors are in a drawdown fund, and all that really matters is how much money did we give them back versus what they invested. Yes, you take a report card along the way. You want to know how the companies are doing. You want to mark the portfolio to market. But simply put, private equity is you give me $1, I give you back $2.50 in 5 years, and you're happy. I give you back $5, you're really happy. I give you back $1 or less than $1, you are not happy.
Not happy.
If I do it inside of 5 years, it's great. If it takes 10 years, which is kind of where the industry's trending, the average hold period for investment now is 6.5 years, drags down returns. So we just got to get back to basics.
Where have you spent the bulk of your time, let's say the past 3 months? Is it focusing more on opportunities or thinking about how to exit a company?
So it's got to be all's answer. I know that's probably not a helpful answer.
Coming on the video here.
You have to be buying. We're not shifting towards buying or selling. Obviously, the environment becomes more conducive to one or the other at certain points in time based on your view of value. But we are constantly investing, and we want to be investing. We want to be opportunistic, but we're finding good opportunities even in bad markets, which is a little bit different for us versus other people. So in 2022 and 23, when rates spiked, we were very active deploying.
Oh my God.
When the industry went down 70% from 2021 to 2023.
I told you candle traders need to go. Candle traders need to go. Candle traders be gone.
7 to 9 billion per annum over that time period. It was a tougher time to exit during that time period.
Candle traders be gone thoughts. 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 I'm kidding. I'm kidding. I'm kidding. Oh my God. Oh my God. What the fuck?
And I am on the board.
Yo.
Yahoo's a great example.
Yo, what the fuck? Look at that setup on the video. Oh my God.
Contrarian investment.
Yo, I literally said 1 minute ago in the WhatsApp group in the video going lower at 10:38. Oh my God.
Strategically sourced, well capitalized.
Look at that. At 10:38, I said fucking Nvidia going lower. I was going to say that fucking 4 minutes ago, but I was waiting until I was certain. Look at that shit.
Amazing.
Look at the video. Oh my God.
Hustling to return capital.
Look at that fucking trap on the video.
That capital to investors. That's private equity.
Where are you? The market is trading at very rich valuations. How does a company like Apollo find opportunities in a market?
What is this shit?
From the outside looking in, every day it seems to be going.
Yeah, nah, the market bullshitting, bro. Look at this shit. Fucking market bullshitting.
More rate cuts. Like, how do you find opportunities?
There's the narrative that's out there. and I know you spend your time
Oh my God!
across
What the?
all the investing asset classes, but a lot of the
That's
talk's
the most
around public
craziest shit
markets.
ever. I literally
Right.
said at
There's a
10:38,
public
1
markets
minute
narrative
before
that's
that
out
candle
there
came
that
in.
I
That
think
shit.
is certainly a narrative that tells you something, but that's not really applicable to the world we live in. That's not applicable to not only is that not applicable to Main Street America, that's not applicable to most of the economy.
Man, I should have took IWM when it was at the bottom. I ain't gonna
90%
lie,
of
I'm getting
companies in
greedy
America
as
with
shit.
$100 million or more revenue are private.
Oh my God.
Today, there are half as many public companies as there were in America 25 years ago. 9,000 going to about 4,500. And every year, for many reasons, year, more companies are taking private than deposited back into the public markets. And we've been a big driver of that with our strategy.
You know what's crazy? There's a 1 minute gap down there, and they're doing
the
all
public
this shit
markets have become a less hospitable place for non-simple, non-thematic companies. And you could see it in the returns. So you're right. The aggregate valuation in the S&P is in the top 5% historically. The concentration for the S&P is also in the top 5% historically.
Man, what is this shit? Look at this.
Of those 7 companies,
5 minutes did it, 10:30 to 10:40, 1/3, 2/3, 3/3.
With regards to valuations, with regards to returns over the last 1, 3, and 5 year period,
0.5 fit perfectly.
Find value. And we have been finding value in the public markets. So when you look below the surface and you question these narratives, you can find interesting
I'm about to throw up almost.
How do you know there is untapped value? I imagine it goes beyond seeing something trade at 10 times forward earnings.
Maybe a Tesla. Now what's going on is there's a huge fucking box here. Right? Now there's a huge intraday box here, and they're playing here. Right? You can think of it as an intraday locked range.
Try to keep
it simple. Breaks out of it on the 5 or 15 minute.
What do I mean by that? I mean,
they could go back and forth.
Capital through attractive purchase price or really through.
There's a lot of fucking liquidity here, though. I don't know if that can. Look at Nvidia. I think Nvidia leading here. Look at Nvidia right now.
That same return.
It's fighting crazy. Look at the 5 minute pullback at 10:25 into 10:30. Fucking insane.
The risk reward in your favor through active management, all the stuff we talked about, the strategy of the company, the management team, how you change the portfolio.
We said in the WhatsApp pre-market today, watch Nvidia and Tesla,
so
right? And I think today Nvidia is the biggest big boy. Nvidia leading right now.
Valuations for a reason. So the trick is making sure you're finding that company that you feel like you're buying. And this is different for us. Most people, a lot
Whitehouse
of people
press conference in 20 minutes here.
From this,
they're about to go test the low of this fucking little spike candle, I think.
And they're less focused on feeling like they're playing with the lead
up front. Chop, and they're going to go to 691 again. Then they're going to figure it out. That's what I think. It's bearish.
Alpha on the buy, alpha on the build, and alpha on the exit.
This is fucking insane, though. There's just new money cycling going lower, so they might be able to a lot of fucking liquidity get down here, go a little bit lower, and then fucking boom up too.
To make my portfolio companies better.
I have no idea. That's what they could be showing.
And you really have to also have a way to create alpha on the exit now too, because
Tesla's so crazy,
and that's both cyclical and secular.
Oh, not Tesla. I'm sorry. Nvidia's so crazy.
We have to play. We have to buy something where we feel like
I'm telling
there's some margin of safety up front. There's some asymmetry to the return profile. But then we're doing all the things that we need to do to make the company grow faster, be more profitable,
this is
allocate capital better, and then manage that company and manage the portfolio along the way to be de-risking and returning capital to our investors, which is the business model.
5 minute range.
You got to do all
when I was in school, let's say early days of college, and you're reading about private equity.
Playing inside of it right now.
Private equity, they come in.
Oh my God! I'm telling you, look at this shit, right? 1, 2, 3 candles stacking, and they're going from the top of the purple box, 1040, 1045. They're fucking nuts. Why am I saying the shit I'm saying? Am I fucking making shit up? No, I just seen this shit before, going up or down, man. I've seen this during FOMC, when motherfucking Daddy Powell, Jerome Powell, Granddaddy Powell was live talking.
The structure.
Right, the realest watchers on my stream remember, but I'm telling you, I ain't making shit up.
What I mean by that is private equity got larger, these companies got bigger, and you either to take these companies public, or you're selling to a strategic, or selling to another sponsor. And the way the world has evolved,
20 minute down on Nvidia and bouncing try now again.
That's the name of the game in the public market.
Nvidia.
Whenever we buy a company,
moving
we're focused
so
on
crazy.
Profitably growing the
190 calls they're playing with.
You can see that
190 puts they're fucking playing with.
Innovation in the product.
They're playing
with. Improving the underlying products, trying new things, like a bunch of the stuff that's going to be rolled out regarding AI across the platform, I think
Such a
is
crazy cycle
truly
here
revolutionary.
on SPX at the all-time
You know,
highs.
a lot of that's driven, or a lot of those discussions happen in the boardroom because of this focus on growth, profitable growth.
Right.
So in the early days of private
this is what's
equity,
going on,
when it
guys.
was
The
a much
market has
smaller
created
industry,
a range at the
you know, you could buy a
top
business,
to play
let's say
with
with 50 million of EBITDA, and if you could cut a bunch of costs because it wasn't efficiently run and get that 50 to 75 or 100, there'd be a long list of people willing to buy it. Now, because of the scale of the industry and because of the change in capital markets, I think that game doesn't work anymore. And oh, by the way, I think that also was just like a poor trope. If you look at earnings growth, and we talk about this all the time in investment committee, margin improvement or cost cutting, whatever you want to call it, efficiency, is important. Every company, whether it's owned, there's 3 ways to own businesses in America. And the system is the same.
Volume.
The way people run businesses is generally the same. The goals are the same. Companies could be owned by an individual. They could be owned institutionally by a private equity owner, or they could be owned institutionally
insane
in the
candle
public
to
markets.
throw it off, and
They're
then
usually run the
insane
same.
candles
People are trying
coming
to
now.
maximize profits and maximize returns, more or less. If you think about private equity and the way we're running businesses now, it's because of the, you know, you're trying to maximize returns. When you cut costs, you get a pop in earnings.
Time is
but it's
10:50 here in 25 seconds.
growth
If it rejects before in 20 seconds, it's creating an algo range at 10:40. If not, it's going to go up to 10:50 and then figure it out.
Growth is revenue-driven growth. That's what you want. You have to create a machine that drives revenues. And I do think that's what most people focus on. Certainly what we focus on.
What are those investment committee meetings like?
Wow.
Our investment committee, so this is Apollo investment committee.
Until it breaks higher or
is
lower
kind of
on
run
these
very similar
boxes,
to the way it's always
ranges,
been run. Even though the firm's grown a lot, and in many ways our private equity business has grown a lot, we still try to stay true to our principles.
691.03.
Everyone,
on the higher candles, 5:15.
So it's not like there's a room of folks, 5 people behind the curtain.
Best to watch.
Everyone's invited, and in fact, everyone's expected to have read all the memos. And I'll often call
fucking insane, basically. Inside the purple box, thinking higher or lower, basically. Oh, wow.
Paul Hickey, co-founder of Bespoke Investment Group, talk about, I guess, Paul, the degree to which Brent deserves to trade lower, how high production can actually get once we stop just pulling out of storage there.
Yeah, no, I mean, I think the news out of what we saw in Venezuela over the weekend
they're running into 10:50 from 10:45 now, too.
serves the potential to increase supply going forward. But it's a factor for the energy sector, which we've seen multiple examples over the last year, where you see these events impacting the sector, and
bigger liquidity and cycle building than the
decline. So all last year we saw oil prices decline. We're pretty much lower now on crude than where we were to close last week, and that's very positive for the inflation backdrop. And in the long run, that's a good thing for the overall market, as inflation is still high. And above the Fed's target has been declining. The last print in CPI was at a 4-year low. And when you get those backdrops where you have inflation declining but still above target, market performance in terms of equities has been very strong. It's been a sweet spot for the market.
Right. I guess the question will be how much faith we have. You know, this is a good step 1, but how much faith the market has in steps 2 through 10, as Schumer put it yesterday. I mean, this time last year we were talking about, you know, trade deals coming into effect, which really still hasn't happened. How much faith do you think the market should have in this?
Oh my fuck.
So I think, I mean, as far as the tariff situation, I think we're past the worst in the worst headline risk in tariffs, and so we're going to be moving on from that. Broader market perspective overall, we've seen the economy holding up well. The job market has been mixed. As you mentioned, the creation of private payrolls by ADP last year was the lowest since 2011, outside of the COVID year.
It's like we're at FOMC at all time.
The government shutdown was a negative on the economy and a short-term headwind. And as we've moved out of the shutdown, we've seen a rebound in these economic indicators. Jobs numbers, the employment component of the ISM services report today was very positive. The ISM services headline was positive, and prices paid saw a modest decline. So I think what was really concerning during the shutdown was the negative impact on consumer stocks. But as the market, as the economy, or as the shutdown ended and the government workers got back to work, we've seen these consumer stocks rebound, and I think that's going to be a positive sector to look at in the year ahead here.
Major cycle.
Everything you just laid out
already happened, but happening.
A case for the bullish momentum we've seen in the market and the economy, as well as the fiscal impulse that we're supposed to get
until Caroline comes out. I think it's about to be crazy. There's 10 minutes left. ETA 10 minutes.
The chances that the Fed cuts rates. How much is that embedded in the bullish forecast?
You know, so I've always been with the view, Sarah, that the less the Fed has to cut, the better it is.
Caroline,
as long as usually when the Fed is cutting rates, it's because something is negative.
Where's Caroline? We need Caroline now. And now, Caroline's coming.
This is going to be the most important number of the morning on job openings. Expecting a number around 7.6 million. Buckle up. 7,146,000. A huge miss. And a big downward revision in the rearview mirror. From our last look at 7,670,000 now becomes 7,449,000. So the new read at 7,146,000, that would be the smallest jobs opening since the end of 2020. Now, let's look at the ISM picture on the services side. These are PMIs. On the December read, 54.4, much better than expected. That'll be the strongest read of the year. We'll find a stronger read, you're going back to the fall of last year. Now, let's look at the prices paid component, an area we'd like to go down a bit. And indeed, a little less than expectations. 64.3, definitely less than 65.4 in the rearview mirror. 64.3 be the lowest since March of 25. On the new orders front, 57.9, a whopper of a number, much better than expected. 57.9 be the best since September of 24. And on the employment front, considering we had 41,000 on ADP, big jobs report Friday, this number comes in at 52. It popped above 50. It had been under in contraction territory. 52.0 would be the best read since February when it was 53.9. Sorry, folks, it doesn't end there. Get comfortable. Here we go with factory orders for October, minus 1.3%. That's a big miss. You have to go to June of 25 to find a smaller number. Strip out transportation, a huge improvement, but still negative. Minus 0.2. Minus 0.2 would be the weakest since April, minus 0.6. Now let's look at durable good orders, shall we? Durable good orders coming in at minus 2.2, exactly as expected, and doubling up exactly the read we had last month. So we are not looking good there. The last positive number was September when it was up 0.7. But do remember, we had May when it was up 16.5. That was a historic pop, but we have been deteriorating ever since. If you strip out transportation, it not only improves, it moves up above zero, up 0.1, and that would be, well, last month was up 0.2 to give you an idea, and that now becomes, there is a revision there, it becomes 0.1. Now, let's look at capital good orders, non-defense, ex-aircraft, a proxy for capital spending, and that comes in at up that's up 0.5%, That's a nice gain. And you look at shipments up 0.8%. So those numbers are pretty decent. After all of that, what do we see? We see deterioration in the equity space.
Yo, what the fuck are those candles? 10:35 to 10:40.
Higher. I'm very impressed that the market isn't much lower on interest rates.
5 minute cycle.
Looking at that weak jolts because the labor area of the U.S. economy seems to be the area the Federal Reserve's paying closest attention to. Sarah, back to you.
I'm just digging in a little bit. It looks like the layoffs level in the JOLTS number was a little bit lower than expectations, and quits was a little higher. So those are actually some good components maybe in that overall headline miss. A little bit of both there, Rick.
And strong ISM, and that also helps, especially on the service side.
Yep, yeah, really strong ISM there, as Rick reported, 54.4 versus the 52 expected. Thank you.
If there was one more red candle, I maybe would have left, but that shit was so fucking fast. That was so fast, bro. Trump might be trolling this ass, man.
The White House is still interested in Greenland and says it is crucial for our national security. Press Secretary Caroline Leavitt also says that using the military is always an option. Liz Peek is joining me this morning. Liz, forgive me, but before we talk about Greenland, which I find very interesting, I want to talk about the Venezuelan oil news. I think that's a huge political plus for the president.
Well, yeah, and I think it actually brings home that there is something advantageous to the United States about what went on in Caracas, right? We aren't just eliminating a strong man, a terrible man, someone who has thrown his country into abject poverty, caused millions to leave their country, et cetera. We are also really guaranteeing, Stuart, the energy security of North and South America writ large. Canada, and the United States, and South America will dominate oil for the foreseeable future. And it wasn't that long ago that every time there was a disruption in the Middle East, we would all be horrified watching oil prices, watching what would happen to the price of gasoline. That threat from the Middle East in terms of disruption and controlling prices is really reduced. It isn't gone, but it is certainly reduced. And when Venezuelan oil production gets back closer to what it was before it was torched under Maduro, more like 3.5, 4 million barrels a day, you know, that's a significant increment to, again, our regional security. So this is a good heads up. Frankly, where I'd like to see that oil go, Strategic Petroleum Reserve. We don't even talk about it anymore, but if you remember, Biden completely flushed out the oil in the Strategic Petroleum Reserve, took it down to a level it hasn't seen forever. I just said we don't have as much risk, but nonetheless, it is always a vital commodity. We should always have that reserve fully stocked.
You have a brief comment?
The message to China that President Trump is sending: we'll continue to sell you Venezuelan oil, but you're not going to get it at a deep discount, and you're going to buy it in U.S. dollars, not yuan.
Precisely. $57 a barrel right now. All right, let's get back to Greenland, shall we? Okay. Would it be political dynamite? Any action to seize Greenland by the United States, would that be political dynamite, bad news for Trump?
I think it would be actually a big mistake. And frankly, I think he's just pranking Democrats here by even talking about it. He didn't say we're going to invade Greenland. No. Caroline Leavitt said military options are always on the table. But immediately, Europeans gathered in really one of the more hilarious developments of the last week, all aflutter that this was going to happen. They were going to ruin NATO. When is everybody going to stop running to the, jumping off the cliff point every time President Trump has a sort of novel idea? It seems so incredible. He's been president for 5 years. Don't we get it yet that he sort of lofts these things out there and everybody goes crazy, and then a few days later, everyone's like, oh, I guess he's not going to do that. No, I don't think he's going to do it. But by the way, I wish we had Greenland. I think it's a tremendous asset, tremendous for national security, huge amount of rare earths, which is a big issue for the United States.
I'll just leave it with this. Trump is wonderful for the news industry.
No question.
And they did it, though, before.
We used to have to walk in the door and wonder, what's the lead story today?
And it doesn't even matter if he's on vacation, Stuart. He still is popping things out. It's great.
Liz,
great.
Thanks for being here. Appreciate it.
Thank you for having me.
They did it before, into, and now during. Let's go to the White House press conference. And now it's about to be during. Good morning, everyone. Good afternoon. Hello, everyone. Make sure you say good afternoon. All right, God bless America. Please hit the like button. Thank you very much, guys. Smack the like button, man. This is all-time high territories. Market is jumpy. real jumpy. Alright. All we can do is watch the cycle and deduct that best right here. It's jumpy as shit. This is new all-time high territory. Is higher than Tuesday. Today is Wednesday, so 6,950 we are at. They're really showing 7,000 on SPX. 7,000. Wow. 50 points higher. Does it come within fucking days, a week? Holy shit, I don't know. Divergence at the fucking roof. Oh my god. Oh my god. It's looking like one of those days. QQQ is fucking running. This is some fucking crazy shit now. 11. Man, divergence at the roof. This is fucking dangerous. Puts. I am not in any zero. I left my zero DT at 10:20 at the fucking bottom. I am in my Friday puts, but this shit is getting fucking grinded upon. Like, what the fuck is this? Nvidia is getting grinded upon too. I'm in 190 puts into Friday here still. And they are theta fucking grinding. This shit is IWM just today. Yesterday, today. 11 a.m. until it stops. I don't know when, where. I have no fucking idea when, where, how far. 6:30, 6:28, 6:29. Shit, we're at 6:26. SPX put to call ratio. Yeah, we'll draw it on the board too. That's kind of trash. There's a line of spiked puts, but I mean, there's a lot of calls up here too. President is president. Why are there so many fucking puts at 6,925? I don't know. Oh, fuck that. Burn. QQQ going higher with Tesla here. Looks like time is 11:05. Bounce. 11 bounce into 11:05. It kind of aligns. bit sus, folks. It's getting a little bit sus. All-time high testing. Groove testing. What the f... Man, these candles are so fucking scary. MACD coming in. Crisscrossed. Crazy. I am not doing 0DT new money short right now. I'm just waiting. Oh my lord. I'm just waiting. I am waiting. HOD divergence at the roof too. I don't know, man. I don't even know if they can clear this shit today. Okay, we could easily clear it today. We're so fucking close. What am I saying? I mean, it's just looking so fucking scary. This is how we always fucking do this shit, though. I mean, fucking like they make it look terrifying, and I go fucking gap or go divergence clear. Fuck. Purple box. MACD coming in, no volume. This shit could fly up or down. Just nobody fucking knows. Everyone's waiting. Most likely. Let's do a poll. HOD divergence break or VWAP or chop. But I mean, one of them's gonna come, so. Right, this is the personal opinion poll. HOD divergence clear or reject to VWAP. Everybody vote please before the candles come. Everybody vote please before the candles come. We have 4 people voting HOD divergence clear. 5 people voting reject to VWAP. Oh. I voted reject. So we'll see. Small cycles. Rejecting. Alright, coming back into the purple box. Trying. Trying. Terrible. Active volume did it. Candle's not doing it. We're 60 cents above yesterday's close. Gap filled and never came back on Nvidia too. Kind of crazy ass fucking shit happening, man. Oh yeah. HOD into 11:15. This is truly IWM from yesterday, just going higher every 5:15. Until it stops, I don't know what it's doing. IWM rejecting and QQQ is flying. Confusion cycles happening. I think they want to go lower, but I mean, I don't know. Nvidia now flipping up too. Give me 1 second. I'll be back in 1 minute. I gotta get a cup of water. I'm back too. working out, trying or something. Holy fuck. Look at how it broke down the algo range and then came back to every single fucking one of them. Literally every single one of them. That is so disgusting. Like, I don't even want to fucking extend it. Oh my god. Oh. Creating a Longhorns fucking horn pattern, bro. What the fuck is this? It's just knifing up. Inverse knife up. Till when? I don't know. It's just going up and up and up and up and up, so. This shit is really on its, I don't even know, man. I'm on a journey. You could kind of say how it's on a fucking journey. So, IWM truly, I'm sorry, QQQ, I can literally call it fucking IWM. QQQ is acting like IWM right now. Running and going. Everything else is slowly. Faking and they could catch up. That's what is the IWM known for a lot. They don't start the stream so early. It's scheduled for 11. They just come out madly. That's why all these people are fucking waiting. They don't know that the live streams start 15, 10, 20 minutes later after the scheduled time, and then they get everybody involved. They get everybody anticipated. They're like, ah, shit. And then sound cuts off. So perfect, dramatic. That's what the yo, this is fucking, oh my lord. Back in volume bullish on the 5, hovering at 6,950. Sick. I did not shut the sound off. The stream ended, or the internet, or the sound ended on the stream, so fake out, breakout on the video. Could be a breakout. I don't even know, dude. Hovering at the roof. This is dangerous. It's so bullish on QQQ. The 1 hour on QQQ. Just went knifing up. Actually just went knifing up today. $6.22 to $6.24, like, bro. It's the most fucking absolute fucking timing. I don't know if this live stream is off or what, but we gotta restart it.
Welcome to
I want to go back to the Associated Press. There's like 20 people watching this, and there's like thousands of people. Just the sound off. There it is. It's back. America. America. Let's get some 07s and folks, guys. Sean says, bullish ASF. And then, what the fuck, crying face. What happened? Oh my god, what the fuck? What the fuck happened? What the fuck? Alright, we're back. Back into the purple box. What the fuck happened? Back into the purple box. Maybe going to VWAP. Let's see. The poll earlier said 11 people said reject the VWAP, and 6 people said HOD divergence break at 10:10, and time is now 10:21. It's been 11 minutes since the poll ended ejection until literally 2 minutes before. So perfectly right. 9 minutes. Check, and then into the purple box. But I said coming into the range, purple box trying at when 11:11 a.m. 11:11 make a wish was right here. I don't know.
Everybody, good morning.
Good morning, Caroline.
Lovely officials with me today. All right. Dr. Carson, come on up. Thank you so much. Good morning and Happy New Year, everybody. It's great to see you. It's great to be with a very packed room. I'm sorry we kept you all very busy over the holiday break. And I know there is a lot of news out there today, both here at home and around the world. I will be happy to take all of your questions on all of that news. But first, I'm really honored to be standing up here today with esteemed members of the President's Cabinet and his health team to make an important announcement with respect to the President's domestic promise to make America healthy again as we kick off the new year. In less than a year in office, the President and his incredible MAHA team have made real progress on this front. Here are just a few of the significant MAHA achievements thus far. More than a dozen food manufacturers and trade associations have made commitments to remove artificial and petroleum-based food dyes from their products. The Trump administration took strong action to bar hospitals from performing dangerous, irreversible, life-altering transgender procedures on children. The Trump administration announced funding awards to states through the Rural Health Transformation Program, an unprecedented $50 billion investment established under President Trump's One Big Beautiful Bill. The Trump administration has also worked with 18 states across the country to ban junk food purchases using SNAP benefits starting this year. And thank you for
Friday and 0DT a little bit too, but I'm mostly short on Nvidia here. SPX Friday huge.
And secured deals
Today, tiny
with
bit
major
right here.
pharmaceutical companies to massively lower the cost of prescription drugs. And those effects are being implemented as we speak. Americans are going to continue to see the results of these incredible deals the president cut. And I know President Trump and this team behind me worked incredibly hard to lower those drug costs for Americans. On Monday, the CDC adopted common sense updates to America's childhood vaccination schedule based solely on the gold standard of science. This action empowers parents and physicians to make the best individualized decisions to protect our children, while also restoring much-needed confidence in our public health system. And as a MAHA mom myself, I'm very grateful for that. So thank you, Secretary.
I'm still in the IW. I'm a little bit too.
To build on this progress, the Trump administration is now updating federal nutrition standards and guidelines to ensure that Americans have the most accurate, data-driven information supported by science and hard facts, not special interests or partisan ideology. President Trump has tasked two of the great individuals behind me, USDA Secretary Rollins and HHS Secretary Kennedy, with collaborating on this vitally important project. And today they are here to officially unveil the 2025 to 2030 dietary guidelines for America. These new guidelines are informed by the best and most reliable research on health and nutrition, particularly as it relates to the role of our diets and the prevalence of chronic disease in the country.
Downside is fucking crazy.
These guidelines are easy to read and understand, so every
I
American,
really want LOD.
young and old, can access
I want
this
LOD test
information
like 1040 level, but I mean I may be fucking
lives.
hoping here big
But
time,
these are not
but I
just
am in
an updated
SPX 0
guideline.
DT
These
like
are
fucking
the foundation to all federal food programs in our country. These new guidelines are going to update the food that is served to America's children in our public schools, to the plates that are served to our great men in uniform in our military, our veterans, and the food that they are consuming at the VA. And these new guidelines are also going to impact nutritional programs for the needy in our country, such as WIC and Head Start.
Right, I told you it's forming a knife, and I said it might just break apart sometime, and this is what they were waiting for news.
Processed foods that lead to scores of long-term health issues, which means Americans have gone broke because of these health issues. Faulty dietary guidelines of the past stack the deck against healthy eating and food options for everyday American families, which has fueled the chronic disease epidemic and jacked up the healthcare costs of households across the country. This failed approach in our public health system ends today. When these guidelines are followed, Americans will be saving themselves thousands of dollars. If we want to cut healthcare costs in our country, we must become a healthier country. According to the CEA, poor diet is the root cause of obesity, which accounts for $400 billion in medical spending each year. A healthier America will lead to a more affordable America. The new dietary guidelines from the Trump administration will ensure federal dollars go to real food to improve public health and therefore save the American people their hard-earned cash over the course of their lives. So with that, I am going to hand it over to Secretary Kennedy. The great people behind me will give remarks, and then we'll get into Q&A for the officials that are here on this specific topic. They will leave because they're all very busy people, and then I will open it up to Q&A with the rest of you on the rest of the news in the world. So thank you, and we'll start with Secretary Kennedy.
Oh, fuck my legs. The purple box in play right now. This is event time. Volatility is here, liquidity is here, volume is here.
Made possible by President Trump's leadership and the work of
Setup is here.
And public health advocates who demanded reform. Today, in accordance with President Trump's directive,
is possible. One more dollar down on QQQ
dietary guidelines for Americans 2025 to 2030. The most significant reset of federal nutrition policy in history. These guidelines replace corporate-driven assumptions
IWM just fucking
with common-sense goals and gold standard scientific integrity. These new guidelines will revolutionize our nation's food culture and make America healthy.
The gray box chop.
For decades, Americans have grown sicker while healthcare costs have soared.
Nvidia, I wanted to pull back 188.23, 188.23, I think incoming.
Protect corporate profit-taking. Telling us that these
showing 190 calls again.
Were beneficial to public health.
Bears are here at 3/3 bearish cycle.
Policy promoted and subsidized highly processed
big
foods
cycle confirmation now.
And
LOD testing coming.
To the disastrous consequences.
Or maybe trapped
stop.
right before.
The new guidelines recognize that whole
holy shit.
Food
go! Let's go! Let's go! Zero
protein and healthy fats are essential, and we're wrongly discouraged in prior dietary
time is 11:30.
We're ending the war on saturated fats.
VWAP below we are.
Vegetables
flipping it now.
Fruits
we're burning all calls above VWAP.
More effectively than many drugs. Whole grains.
LOD testing. Purple box is being used. Volume and liquidity is here. I said that 2 minutes ago in the green candle, right? Now we are.
And today our government declares war on added sugar.
Let's get a fucking finale. Come on, man.
Loaded with
don't do some bullshit.
Sugar and excess salt damage health and should be avoided.
10 minutes. I'm gonna leave.
Of Health and Human Services.
All SPX0DT here.
Real food. Nothing matters more for healthcare outcomes.
Friday, I'm still fucking in through all this horseshit.
Readiness and fiscal stability. The dietary guidelines shape dozens of federal feeding programs, including Head Start.
It is so fucking
These
up and
standards
down
affect
today.
45 million school lunches every day. Meals for 1.3 million active duty service members, and food served to 9 million veterans in VA hospitals.
Oh my fucking Robin Hood is fucking bugging out. I don't know if my internet.
Whole nutrient-dense food. Implementation requires coordination across the government. I'm working, and I thank also the American Academy of Pediatrics for partnering on this effort. I also look forward to working with Dr. Jay Bhattacharya and Dr. Marty McCary to fund and prioritize rigorous nutrition research at the NIH and at the FDA.
I'm scared.
The stakes are measurable and severe.
Fuck. I'm fucking scared
Johns
now.
Hopkins analysis estimates that 48% of every federal taxpayer dollar now goes to healthcare. The CDC reports that 90% of healthcare spending
look at this shit. Purple box everywhere. Purple box, purple box, purple box. PTSD,
40%,
purple box.
30 cents of every dollar that taxpayers pay in this country is going to treat diseases that could be averted through good food. The United States has the highest obesity and type 2 diabetes rate in the developed world, We spend 3 times more per capita than the European Union on health care, yet our life expectancy is 5 years lower, largely due to diet-related chronic disease. Our childhood obesity rate is 5 times higher than countries like France. 1/3 of U.S. teens have prediabetes, over 35% are
really
overweight
the test bounce. I don't know.
or obese, and 20% of young adults have non-alcoholic fatty liver disease. 77% of military-age Americans
There must be some fucking crazy
are
algo range here.
ineligible for military service.
And I have not drawn out. I don't even know, man. It has to be.
Diet-related conditions. If a foreign adversary
There's a divergence at the
sought to
roof, so they
destroy
want to
the
show
health
it
of
to
our
the fucking
children,
max that they want to clear before
cripple our
anything.
economy, to weaken our national security,
Ooh.
there would be no better strategy than to addict us to ultra-processed foods. It's shocking that our own government helped drive these cataclysmic changes in our diet. The damage is real, it is preventable, and President Trump has ordered it to end. If the United States reduced obesity, type 2 diabetes, heart disease, and Alzheimer's to Japanese levels, we would save approximately $600 billion a year. About 50% of Medicare's
There has to be some algo. There's an algo range on
deficit,
QQQ right
or
now.
$5,000 per family annually. Current policy
That shit
worsens
just went
the
too easy on
problem.
QQQ. So
42 million Americans rely on SNAP, where common purchases include sugary drinks, candy, and chips. 78% of SNAP recipients are enrolled in Medicaid, and 90% of Medicaid spending goes to chronic disease. These incentives raise healthcare costs and undermine health. This must change. The new framework centers on protein and healthy fats, vegetables, fruits, and whole grains. And you can see the food pyramid here.
up or down, it looks fucking terrifying. 1125
It's
algo
upside
ranging.
down, a lot of you will say. But it was actually
Realize
upside
what's
down
going on before it's
and
too
we
late.
just
Up or
righted
down.
it.
It looks fucking crazy.
For the first time, the dietary guidelines directly address ultra-processed foods and set firm sugar limits in federal procurement, driving a significant reduction in added sugar in school meals. I want to thank President Trump for his leadership and the partners committed to ensuring that federal food dollars support real food and better health. Thank you.
It's just better to not say anything. That's gonna.
And I want to introduce my partner and friend, Brooke Rollins, who is an extraordinary collaborator on this.
Thank
The chart is too large. I gotta remove some shit.
Well, good morning, everyone. Happy New Year. What a honor to be here. I think this is Caroline's first press conference back, and what a great way to start the new year, 2026.
I have to draw this one, so I'm gonna.
I want to thank Secretary Kennedy. Your commitment to the well-being of Americans is such a blessing to this nation. We have been working on these new dietary guidelines really since almost day one. Bobby and I were voted on the same day and sworn in on the same day. So I think the partnership from minute one has been real and extraordinary. As Secretary Kennedy mentioned, America is in the middle of the worst chronic health crisis in our nation's history. Over 40% of the roughly 73 million children in the United States have at least one chronic health condition, and nearly 90% of healthcare spending goes toward treating people with chronic disease. Secretary Kennedy mentioned that, but it is really important to keep underscoring that fact. This crisis is unacceptable. It prevents Americans from living healthy and happy lives. And for decades under both Republicans and Democrats, federal incentives have promoted low quality, highly processed foods and pharmaceutical interventions instead of prevention. As a result, nutrient-dense whole foods grown by America's farmers and ranchers have been increasingly displaced. The Trump administration is acutely aware of this danger, and today this announcement is making a major step in doing something about it. Thankfully, the solution is simple and should be non-controversial: eat real food. This is the main message of the new dietary guidelines for Americans 2025 to 2030, which encourage households and schools to prioritize whole, nutrient-dense foods. That means more protein, more dairy, more healthy fats, more whole grains, more fruits and vegetables, whether they are fresh, frozen, canned,
Eat
or
your
dry.
food
We
pyramid,
are finally
folks.
putting real food back at the center of the American diet.
Eat your
Real food that nourishes the
pyramids.
body, restores
Tesla
health,
running.
fuels energy, and builds strength. This pivot also
We're
leans
chopping
into the
5 minutes. This
abundant,
is higher time
affordable,
frame.
and healthy food supply already available from America's incredible farmers and ranchers.
Look at
By
the volume.
making milk, raising cattle, and growing
We're gonna take a
wholesome
picture of
fruits,
this.
vegetables, and grains, they hold the key to solving our national health crisis. And President Trump is mobilizing government
All right.
to ensure
We're gonna take
families
a picture of
across
this. Watch what
America
happens in
have
25
greater
minutes.
access to these healthy foods. In the past 12 months, inflation has slowed
Take a
and
picture of
wages
that and
have
send that to the
risen
WhatsApp
for the
group
first
for
time in
historical
5
context.
years. Under President Trump's leadership, prices for everyday staples are declining, and more help is on the way. Recent data show that fruits, vegetables, dairy, and proteins, including eggs, pork, and ground beef, are becoming even more affordable every day for our American people. American households enjoy the most affordable and abundant food in the world, and today's release only reinforces that reality.
This
A
fucking chop
healthy
fest on the
meal
5 minute.
is
You gotta
within
see
reach
the
for
shit in the
all
higher time
American families. These new
Higher
dietary
time
guidelines
frame,
are a
15 minute,
framework
coming
which
in
is
with a
meant to be
Doja Cat
customized to
playing
meet the
above,
needs,
below.
the preferences, and the financial status of all American families. For example, a meal including such items as pork or eggs or whole milk or cheese, tomatoes, other fresh and frozen fruits and vegetables, whole grain bread, corn tortilla can cost today right around $3 for that meal. $3. And soon USDA will finalize our stocking standards, which means that those businesses in America that take the SNAP benefit, what they are required to stock in order to take that benefit. By the way, that's almost 250,000 retailers across America. That very soon we will be finalizing that rule that will mandate all 250,000 retailers in America double the type of staple foods that they provide for America's SNAP households. This means healthier options will be in reach for all American families, regardless of circumstance, at levels never seen before in our country. These dietary guidelines are foundational to so many USDA programs, and their introduction marks the first step in connecting America's schools and dinner plates to the best of American agriculture. Make no mistake, under President Trump's leadership, we are restoring common sense, we are restoring scientific integrity, and we are restoring accountability to federal food and health policy. The new guidelines are all about putting the well-being of Americans first, exactly where it should have been all along. This is the foundation that will make America healthy again, not just for those of us alive today, but for our children and our children's children and those coming behind. I want to end by saying God bless American families, God bless the American farmer and rancher, and God bless America. What an honor now to introduce another great partner in this incredible work, and that is Dr. Mehmet Oz. Thank you.
Congratulations to Secretary Rollins, Secretary Kennedy, and do want to express my appreciation for what the President has done overall to increase the affordability of health care. The biggest accomplishment perhaps for the health system ability to drop down prices last year was the most favored nation drug pricing that Caroline mentioned. These are incredibly effective at reducing the costs, for example, of what the President calls the fat shot, the Ozempic, GLP-1s category of medications. We dropped them dramatically. But the best way to reduce drug spend in America is to not need the drugs in the first place. What you're hearing today with these dietary guideline adjustments are going to be massively effective, and not just dropping the need for us to buy these weight loss drugs, but buy the expensive drugs for autoimmune problems. We have evidence that food is medicine when it comes to conditions as varied as mental health issues from Alzheimer's and depression to fundamental realities of how children learn in school. So the question then becomes, what is this actually going to do in dollars and cents? And I had the group at CMS run some numbers for us to try to give you concrete assessments of how much this will drop the spend that the federal taxpayer must make for Medicare and Medicaid. And I'm more optimistic today than ever that we can address the fast rising rate of healthcare expenses in America because of movements like this. Right now, we're increasing health expenditures in America at roughly twice the rate of the GDP growth. We will correct that if we can get America to be healthier, because you can't be a wealthy nation without being a healthy nation. So 2 numbers for you to remember. The first is 30 billion. Why? 30% of healthcare costs are directly attributable to obesity. I'm not talking about indirect associated expenses, which are also present, but a very conservative number, 30%, are directly attributed to obesity. That's about $300 billion a year for just Medicare, just Medicare. If we were to affect obesity by 10%, which is an incredibly conservative and justifiable assumption that has been borne out in evidence-based dietary experiments and trials, just that alone is $30 billion of reduction of expenses for Medicaid, for Medicare rather. That's also obviously correlated with Medicaid reduction in spending. In Medicaid, it's a different opportunity because in Medicaid we educate children. 53% of children in America are covered by Medicaid or CHIP, and we have programs to teach kids and their parents what to eat, and how to make these dietary guidelines that Secretary Rollins and Secretary Kennedy have crafted with the teams into practice. It will dramatically change the natural history of how children are able to participate in life. But let me give you one last number. If we're able to get the average American, who today retires on average at age 61, get them just to work 1 year longer, because they feel so vital, so strong, so bullish about their future, because they're feeding their bodies nutrients that are essential to their high-functioning productivity, we will increase the overall GDP of our nation by trillions of dollars. So we will reduce healthcare expenses. At the same time, we jazz up the U.S. economy with trillions of dollars created by the productivity of American workers. God bless you both for making the DGA feasible and making it perhaps the wisest investment we could make in our communities. Marty Makary is one of my closest friends, the powerful leader of the FDA who's been taking brave steps along the line and has additional insights.
Wow. Thanks. Thank you, Dr. Oz. Today marks the beginning of the end of an era of medical dogma on nutrition. For decades, we've been fed a corrupt food pyramid that has had a myopic focus on demonizing natural, healthy, saturated fats, telling you not to eat eggs and steak, and ignoring a giant blind spot. Refined carbohydrates, added sugars, ultra-processed food. This study in JAMA now shows that 60% to 70% of kids are getting their calories from ultra-processed foods. That's an epidemic. We now have a generation of kids addicted to refined carbohydrates, low in protein. They are literally nitrogen negative because we've used old flawed studies that used urine nitrogen to estimate body protein metabolism, and they missed the mark. The old guidelines had such a low protein recommendation that we are increasing that by 50 to 100%. Kids need protein. The old protein guidelines were to prevent starvation and withering away. These new protein guidelines are designed for American kids to thrive, and they're based on science, not on dogma. We have 40% of our kids now with a chronic disease.
Wow, this Whitehouse press
conference. It is not their fault.
Flipped it.
This is something that is the result of bad advice from the government and a medical establishment that for decades peddled research from a flawed 1960s model.
HOD broke.
Today we are setting the record straight. This is not a willpower problem of our nation's kids. This is something adults have done to kids, and we're going to fix it. And so, as Dr. Oz said, the best way to lower drug prices is for people to stop taking drugs they don't need. We are going to finally address the root causes of our broken healthcare system: insulin resistance and general body inflammation, advanced by the protein-poor, micronutrient-poor, ultra-processed, refined carbohydrate diet that kids are addicted to today. And so, on behalf of the Food and Drug Administration, we are proud to be a part of this. We are grateful to be contributing to this work. Thank you, Secretary Rollins. Thank you, Kyle Diamantis.
Wow, there's no fucking volume. It just came in crazy.
Deputy Commissioner for Food at the FDA the agency has ever had. This is a historic day in America. Thank you, Caroline.
Thank you, Doctor. Thank you so much. Thank you. I hope everyone's inspired to go eat a salad for lunch after this briefing. If anybody has questions on this topic, we will take a few and then we'll get into the topic. We'll start with our new media seat. If you have a question on this topic today, Jamie Franklin, she comes from the Conservator. Why don't you kick us off?
Yeah, first of all, Caroline, congratulations on your pregnancy. We're so excited for you. Maha moms across the country, including myself, are just so excited by what this administration is doing to make our kids healthy again. But, you know, we do have concerns when it comes to these blue states pushing back on a lot of progress that we're making as an administration. And particularly, we're really excited that you guys revised and streamlined this vaccine schedule. However, what we have seen is that these blue states, whether it be, you know, no tax on tips, no tax on overtime, or pushing back on immigration, they continue to stop your guys' progress. So what has been the response from these blue states? Because as Maha moms enrolling our kids in school, this is a big issue, and we celebrate what you guys are doing, but we want to have it, you know, even in the blue states as well.
I mean, my hope is that we only released these earlier, 2 days earlier. I'm sorry.
Duck is also high in protein.
That's an interesting.
Duck is a good thing to eat, everybody.
We only released the new vaccine schedule 2 days ago. The vaccine schedule, there's nothing compulsory in it. Everybody, I've always promised, I'm not going to take people's vaccines.
627.
People who want to get vaccines, everybody who wants them can get all of the vaccines that were on the old schedule. They will all be paid for by the Vaccines for Children program or for the insurance the same as before. We release guidelines that we think are optimal to public health. They're the same with core vaccines that are required by the European community. And those nations all have much better health outcomes than we do. And they're based on their best science and also on their conviction that when you put too many vaccines on the program, it actually reduces compliance. It reduces uptake. And so we want to maximize the uptake of vaccines by making sure that Americans know we are making recommendations.
I want to add like fucking crazy at the Friday, but I'm not doing it.
That are grounded in science. And right now, that's the best science that we have. And again, there's 3 categories of vaccine. One is the core schedule, which resembles the European countries.
I wanted to short fucking QQQ up here too, but oh my god.
Who have vulnerabilities for high risk, and that doesn't change at all. And then the third is shared decision making, which any vaccine that was on the old schedule, you can continue to get. So people will make their own choices.
So fucking.
Ooh. I asked the boss, Caroline, for permission to add to this because I think it's really important. And by the way, Jamie, what a superstar you are. It's so fun to see you in this seat, Jamie Franklin. The blue state question is a really important one.
I need to drop on Nvidia and to close.
For those of us that are running agencies with these programs, I mean, I've talked to a lot of you already about how we have 22 blue states that won't give us their SNAP data so that we can figure out and ensure that those who really need these programs are actually getting these programs.
I'm not doing
Clearly,
shit
you all have
at
been
the
writing
roof.
about Minnesota. California's next. We're looking at New York, some
I
other
was
states.
literally about to add
the amount of fraud
crazy into Friday,
in
but
all
I
of these
just not.
programs is absolutely stunning. And the challenge is, I mean, for Medicaid, et cetera, I know, Dr. Oz, you've talked a lot about that. This is a significant problem. And I think who's really harmed in all of this conversation and when these blue states aren't partnering with us to try to do this right is we say blue states and red states, but in those states, there are all kinds of our citizenry and that aren't all Democrat or aren't all Republican. We had a poll that just came out that had about 85% of all Americans believe that states should turn their data over on SNAP so that we can figure out where the fraud is and ensure these programs are going where they need to go. So my request of these blue states and these blue state governors is partner with us. Let us figure out how to do this better. Let us make sure that whether it's the vaccine schedule or the SNAP program or the Medicaid program or the child care program, that we are doing everything we can to protect every tax dollar.
There's volume in the 1 to 5 minute. It's just
most vulnerable in our society
I don't think
are
this is
getting
gonna
the programs
last
they
that
need
long.
versus those who A, are not even supposed to be here or B, are
Popped
cheating
up
the system.
fucking fast and we popped up high. on an all-time high. Like this happens
that was made had to do with alcohol.
sometimes.
Secretary
Not
Kennedy or
saying
Dr.
every
Oz,
single
could
time,
you
every
explain
single
the
time
science
is a
behind
high, but
the new language on not
this
saying
is on
two
news
drinks for
too.
a man and one
White
drink
House
for a
news.
woman every day
Everyone
would
in
be
the world.
healthy, and whether or not the industry had an impact
seeing
on
the
the
same
language
shit.
of moderation versus just saying alcohol is not healthy and you shouldn't drink it.
So alcohol is a social lubricant that brings people together. In the best case scenario, I don't think you should drink alcohol, but it does allow people an excuse to bond and socialize, and there's probably nothing healthier than having a good time with friends in a safe way.
I'm just fucking
If you
waiting
look at the
for
blue
all my
zones,
shit
for
to come
example,
back
around the
still.
world, where people live the longest. Alcohol is
Hoping, I
sometimes
could
part
say,
of their
but I
diet.
mean,
Again,
I'm
small
not fucking
amounts,
going in
taken
crazy
very
onto Friday
judiciously,
here.
and
I'm already
usually in a
in fucking
celebratory
crazy.
fashion. So there is alcohol on these dietary guidelines, but the implication is don't have it for breakfast.
Friday,
There
I'm
should
in
be something
crazy
done
right
small
now.
amount with hopefully some
Fuck.
kind of an event that might have alcohol added. But the general move away from 2 glasses of men, 1 glass of women, there was never really good data to support that quantity of
Clear the
alcohol
divergence.
consumption.
That was the setup,
That
though.
data was probably
Now,
primarily confused with broader
could go
data
higher,
about
yes,
social connectedness.
but I mean, setup has played it now.
Thanks a lot, Caroline. Secretary Rollins.
IWM couldn't even go
curious
more than the setup.
about
That
with
shit
these
fucking just
guidelines.
reverted
They're not
right at
mandates,
6
they're guidelines.
to 54.
What are the practical effects of these guidelines
Shit is this?
on public schools all across the country?
Well, today begins thank you, John. It's good to see you. Today begins the first day now in a recalibration of the rules, whether it's school lunches, whether it's the SNAP program, whether it's that veterans were mentioned, our prison system, that now we begin the process of implementing and redrafting the rules to reflect what this new dietary guidelines for Americans actually is doing to our food system. So there is a lot of work to do. Nothing changes overnight, but as I think we've proven, this administration moves very, very quickly on all fronts, 7 days a week, 365 days a year, and so you'll begin to see some real changes coming very soon. As everyone is aware, for many of our most vulnerable in the margins in our communities, the school lunch is often the best place for our children to get the healthiest meal. Hopefully with stocking standards and reworking SNAP and the SNAP waivers we've done, that begins to change too. But right now, that is going to be the single most important, from my perspective, move forward, is the school lunches and making sure that we're getting the right amount, the best amount, and most nutrient-dense foods into the schools. Thank you.
You also mentioned Secretary Rollins' cost when you had your remarks a little bit earlier. Is eating healthier more cost-effective? Is it cheaper than just having a diet of processed foods?
I had a whole chart to show you, but left it in the back, unfortunately, that yes, indeed, that eating healthy, for the most part, we've got 100 simulations, is actually less expensive. The challenge is the access to those healthy foods, especially in parts of America where they have food deserts. They don't have a H-E-B or a Kroger or a Central Market. These are all Texan grocery stores, but whatever similar across the country. But that is why these stocking standards in SNAP are so important. So if you have a economically challenged family, and the only place they're getting their food is the 7-Eleven. We have a longer-term important policy priority, and that is getting grocery stores into these lower margin communities. But for now, requiring those retailers, those 250,000 retailers across America, to double their stocking of healthier foods. That will allow us to immediately get these better foods into all communities, but especially the most vulnerable. Thank you, John.
Let me just add something to that. Brooke and I are working on a program. Affordability is the priority for the president. And we know we have to make it easy and accessible for healthy foods for every American. And we believe we can do that. We think affordable food is within reach of every American family. We are working on a education and information program that will allow American families all over the country to come onto our website and find the healthiest foods at the lowest cost for themselves. I'd also just add this. The idea that a cheap meal made of processed food is cheap is an illusion, because you're paying for it on the back end. You're paying for it with diabetes, with obesity, with illness. And if you internalize that cost of the meal, it would be a tiny fraction of the long-term cost of eating bad food.
Third day bullish.
Caroline. Secretary Kennedy, you mentioned healthy fats, but also ending the war on saturated fats. Can you clarify how much saturated fats Americans should be consuming?
Why do I want to fucking short crazy fuck? Resisting so crazy.
The old dogma in the 1960s when Eisenhower had his heart attack and Ansel Keys said it was the saturated fat. That's never been substantiated. And so that flawed research has become dogma over the years, and eventually the conversation was sidelined. In this new guidance, we are telling young people, kids, schools, you don't need to tiptoe around fat and dairy. You don't need to push low-fat milk to kids. And we are maintaining the 10% of calories as saturated fat in the guidance. The real issue is protein. The fact that 60 to 70% of the calories of kids today in America is ultra-processed food. These are the issues that have become giant blind spots where we're now putting attention. And we hope that there are conversations in every school board in America, in every church and synagogue and house of worship, every home in America will now have conversations. We've got to talk about school lunch programs, not just putting 6-year-olds on Ozempic. Food can be curative. We've got to talk about the microbiome and fiber and healthy whole grains and the good soil that food comes from and the healthy clean waters and good farming techniques. So that's the focus of this guidance.
Divergence. 212.
Some of you may be wondering why Dr. Carson is here. He is our National Nutrition Advisor working alongside Secretary Kennedy, and he's played a big role in this effort. So I want to thank you so much, Dr. Carson, for being here today. And thank all of you for being here today. I know you're all very busy people, and these people have a lot of questions on things other than diet, I'm sure. So I'm going to get to work, and thank you guys so much for coming.
Thanks, everybody.
Thank you.
Thank you.
Okay, thanks. All righty. Great. Does anyone have any questions? Rachel, why don't you start?
Thank you, Caroline. The president has been adamant that he is now in charge of Venezuela, but Delcy Rodriguez said the government of Venezuela runs her country, no one else, saying, quote, there's no external agent governing Venezuela. So which one is it?
Let me just be very clear. This is the first time that I've addressed Venezuela from the podium since being back and since the historic and incredibly successful military operation, law enforcement operation conducted by our United States military that you all saw and the world witnessed.
I'm in for 9K on 0 DT,
the
6970.
skill, the might of the United States military and our country under the leadership of this president is on full display to the rest of the world. And let's just set the record straight. There isn't another military in the world who could have pulled off this operation. There is not another president in the world or in our nation's history who had the courage to authorize such a mission. And I think the world has taken notice that America is truly back. With respect to Venezuela, the Trump administration, led by Secretary Rubio, the vice president, and the president's entire national security team, is in close correspondence with the interim authorities in Venezuela. We obviously have maximum leverage over the interim authorities in Venezuela right now, and the president has made it very clear that this is a country within the United States, the Western Hemisphere, close by the United States, that is no longer going to be sending illegal drugs to the United States of America. It's no longer going to be sending and trafficking illegal people and criminal cartels to kill American citizens as they have in the past. And the president is fully deploying his peace through strength foreign policy agenda. So we're continuing to be in close coordination with the interim authorities, and their decisions are going to continue to be dictated by the United States of America.
Just one follow-up, when you talk about that leverage there, has the Venezuelan government fully committed to turning over its oil to the United States indefinitely, and what happens if they do not?
Well, as you saw, the president announced last night, this was a deal. This was a deal made by the president and his team with the Venezuelan interim authorities. This will benefit both the American people and the Venezuelan people. And Secretary Wright and the Department of Energy are working with the interim authorities and also with the private oil industry to execute on this historic energy deal that's not only good for the United States, but it's also going to revive the prosperity, the safety, the security of both the United States and Venezuela as well. Ed.
Following up on the oil part of this, 30 to 50 million barrels of oil, how exactly is that going to work? You're getting it out of Venezuela into the United States?
Yes.
And then what?
That's exactly right. So as you know, Ed, as the president announced last night, this was the sanctioned oil that was basically just sitting in barrels, sitting on ships because of the effective quarantine of the United States of America. And the interim authorities have agreed to release that oil to the United States, so it will be arriving here at home very soon. The United States government has already begun marketing Venezuelan crude oil in the global marketplace for the benefit of the United States, engaged the world's leading commodity marketers, key banks to execute and provide financial support for these crude oil and crude product sales. All proceeds from the sale of Venezuelan crude oil and products will first settle in U.S.-controlled accounts at globally recognized banks to guarantee the legitimacy and integrity of the ultimate distribution of proceeds, and those funds will be dispersed for the benefit of the American people and the Venezuelan people at the discretion of the United States government.
It sounds like it requires a lot of private sector engagement and agreement in the oil industry and the banking industry.
That's
Do you
right.
have that yet?
There's a lot of private sector engagement that's happening right now. As you know, Secretary Wright, our energy secretary who's heading up this big project, is in Florida today meeting with some of these oil executives. And as we confirmed earlier, they will also be at the White House later this week. So they are absolutely eager to invest. They're eager about these opportunities. And Secretary Wright is a very knowledgeable guy when it comes to oil and energy, and he's the perfect man for the job.
Another corner of the world, real quick on
Go
Iran.
ahead. Go ahead.
So just to follow up on the oil, 30 to 50 million barrels is an initial tranche, if you will, and then what happens after that?
I won't get ahead of the plans that the president and his team are currently speaking with the interim authorities about, but rest assured, there is a long-term plan here. Secretary Rubio and the entire team are working diligently on it, and this is just sort of the first action that you all are seeing. Ed.
Caroline. So in order to get these oil companies to invest billions in Venezuela, how will the U.S. reassure that their workers will be safe in Venezuela? Could there be troops involved?
At this point in time, as you know, there are no troops on the ground in Venezuela. The president, of course, reserves the right to use the United States military if necessary. It's not something he wants to do. Diplomacy is always the first option. As you saw, he tried that with Nicolas Maduro, but unfortunately, he was an illegitimate dictator and an unserious person. And so President Trump authorized this law enforcement operation, and now Nicolas Maduro is sitting in a prison cell in New York. So certainly the president is going to do what's in the best interests of the American people, and that includes workers from our energy and oil industry as well.
With that meeting tomorrow, what is the message the president is going to give to the oil executives, and what does he want to hear?
Well, the meeting is on Friday, and it's just a meeting to discuss, obviously, the immense opportunity that is before these oil companies right now. Stephen.
Caroline, and congratulations again.
Thank you.
The New Yorker had a story yesterday on the vice president, and it questioned his, quote, notable absence on Venezuela. And the sub-headline asked, was the vice president's exclusion from the operation in Venezuela an expression of his anti-interventionist ideology or political calculation? Would you be able to discuss the vice president's role in Venezuela policy?
I did see that report in the New Yorker, and quite frankly, I laughed out loud because it's very clear it's a fake report that's trying to sow distrust and division amongst the president and his team. Let me just be very clear. The vice president has been involved in all policy. He is the right-hand man of the president on all policy matters, including Venezuela policy. He was, of course, read in and deeply involved in this operation from the very beginning. And he was present on the night of the operation via secure communication at a different location as to not damage the operational secrecy of this mission. That was so incredibly important to ensure that this mission could be carried out successfully without endangering our troops. Sure.
The U.S. seized a tanker recently. Russia specifically asked the United States not to seize that tanker. Does this action risk a larger conflict with Russia?
I believe you're referring to the Bella 1 tanker that was seized this morning. The Department of Justice and the Department of Homeland Security, in coordination with the Department of War, did announce that seizure this morning for violations of U.S. sanctions. I've spoken about the enforcement of our sanctions policy at the podium prior to the new year, and this administration is going to fully enforce the sanction policy of the United States. The vessel this morning was seized in the North Atlantic pursuant to a warrant issued by a U.S. federal court after being tracked, and this was a Venezuelan shadow fleet vessel that has transported sanctioned oil. And the United States of America, under this president, is not going to tolerate that. I would also just add the vessel had a judicial seizure order and the crew, so that means the crew is now subject to prosecution for any applicable violation of federal law, and they will be brought to the United States for such prosecution if necessary. Kelly.
Caroline, Happy New Year to you.
Thank you. You too.
I'd like to talk to you about a couple of things real quickly. The first question about the Venezuelan people. As you know, there's some 8 million Venezuelans here, some of them celebrating in the streets. There are Venezuelans on the ground who are concerned about their safety. What does the Trump administration, what is it doing to actually help people in Venezuela understand that they will be secure throughout this transition?
I think the fact that this president actually followed through on the long-held promise of the United States of America, the bipartisan promise to take down the illegitimate Maduro regime, should give assurance to the Venezuelan people and also Venezuelan Americans who fled this communist regime for a better life here at home, that this is a president who is serious about taking down illegitimate regimes and who is also serious about securing the security of the United States of America, including the Venezuelan American people. And I would just add that this is something that not just Republicans and President Trump have talked about for a very long time, but it is also something that Democrats have advocated for. In 2020, Chuck Schumer said that that at the time, President Trump had not brought an end to the Maduro regime. The Maduro regime is more powerful today and more entrenched today than it was when the president began. Now you hear Chuck Schumer out there saying this is reckless. The American people and the Venezuelan people should be in fear. But this is something that Chuck Schumer has long advocated for. Senator Chris Van Hollen, same thing, had said that the United States is going to use its leverage and influence to push for negotiations to transition to the truly elected leader. This was under President Biden. We know Maduro and his cronies don't want to go quietly into the night. The U.S. needs to work to ratchet up the pressure. Now, Senator Holland says it's an illegal act of war to get rid of Nicolas Maduro. So the hypocrisy is really astounding here, and thank you for giving me an opportunity to point it out, Kayla. Sorry, go ahead. Yes.
So there are reports that the administration is demanding that Venezuela cut ties with China, Russia, Iran, and Cuba. Can you confirm?
I'm sorry?
It reports that the administration has essentially demanded that Venezuela cut ties with China, Russia, Iran, and Cuba. Can you confirm that?
Well, those alleged demands were made in a classified briefing by Secretary Rubio, and I know that there's a lot of leaks coming out of these classified briefings, so I'm not going to confirm or deny or get into what the Secretary has said in classified settings to members of Congress. But I think that the administration has made it quite clear to the interim authorities in Venezuela that this is the Western Hemisphere, and American dominance is going to continue under this president.
If I could just ask, there have also been reports that the U.S. could potentially buy Greenland as one potential option on the table. What would such an offer look like? Is there anything monetarily you could provide, any details there?
Well, that's something that's currently being actively discussed by the president and his national security team. And I would point out that the acquisition of Greenland by the United States is not a new idea. This is something that presidents dating back to the 1800s have said is advantageous for America's national security. The president has been very open and clear with all of you and with the world that he views it in the best interest of the United States to deter Russian and Chinese aggression in the Arctic region. And so that's why his team is currently talking about what a potential purchase would look like. Jackie.
Caroline, just following up on Greenland, why not rule out taking it by military force?
I think dump
I
is
know
imminent.
that past presidents and past leaders have often ruled things out. They've often been very open about ruling things in and basically broadcasting their foreign policy strategy to the rest of the world, not just to our allies, but most egregiously to our adversaries. That's not something this president does. All options are always on the table for President Trump as he examines what's in the best interests of the United States. But I will just say that the president's first option always has been diplomacy. Again, look at Venezuela. He tried ardently to strike a good deal with Nicolas Maduro, and he told him, I will use the United States military and you will not like it if you don't take such a deal. And look at what happened. With respect to Iran,
If shit doesn't happen
the same
today.
thing, right? He tried to have serious interest in a deal with the Iranian regime with respect to their nuclear capabilities. They were not interested, and so Operation Midnight Hammer happened, which was another remarkable military success under the leadership of this commander-in-chief. So The president keeps his options open, but diplomacy is always the first.
Quickly, just one additional follow-up on that. Does the president recognize Denmark's ownership as part of the kingdom? Because there have been some Republican senators questioning, the claim that Denmark has to Greenland. Is the president in that camp with them, questioning the legality of
I have not heard him question it personally, but you're welcome to ask him yourself next time you have
The
the chance.
purple box is most likely coming. I don't know, if they don't do it today, then I think it's going to be harder into Friday.
Talk about that just very briefly.
Yes, so the U.S. is selectively rolling back sanctions to enable the transport and the sale of Venezuelan crude and oil products to the global markets, yes. Annie.
Thank you. There are some reports from Venezuela that the country's leaders are cracking down on the population, specifically suppressing public expression of support for Maduro's ouster. Is that kind of behavior consistent with what the president wants to see, how the president wants to see the leaders take on the population?
It would not be consistent, and I'll let the president's national security team speak further on that. I know they are well aware and tracking. Kelly.
Two questions. One, on the seized vessels, the Bella, the Sophia, can you tell us where they're headed, what happens to any existing cargo, and you reference personnel potentially facing prosecution? That's one thing I'd like to follow on. And then
on the Bella.
Yes, okay. And on Annie's question, if I could also ask, does the administration believe that the interim regime should release all political dissidents and prisoners and return detained Americans?
That's not a question that I've personally spoken about to the president with, so I will let him answer that question. I don't want to make new policy at this podium today with respect to Venezuela. With respect to the two ships that you mentioned, I spoke with you about the Bella 1. There was another vessel this morning, the Sophia, that in coordination with the Department of War, the Department of Homeland Security apprehended it. This is a stateless, sanctioned, dark fleet motor tanker, and this occurred without incident. This vessel was operating in international waters and conducting illicit activities in the Caribbean Sea. The U.S. Coast Guard is escorting the Sophia to the United States for final disposition. To answer your question, Kelly, directly, this was through Operation Southern Spear. The Department of War is unwavering in its mission to crush illicit activity in the Western Hemisphere. And as the president has repeatedly stated, we're going to defend our homeland and restore security and strength across the Americas. Dasha, go.
Caroline, thank you and Happy New Year.
Thanks, you too.
Two questions,
Falling
one on
back.
Venezuela, one on Greenland. You've repeatedly at the podium called the current leadership in Venezuela interim leadership. There are Republicans and Democrats alike that say they want to see elections in Venezuela. The president has said it's too soon to do that right now, but is there a timeline for elections in Venezuela? Is he committed to seeing that this year, for example?
You just said the president has answered that question, so I will reiterate what the president has said a few times now to all of you, which is that it's too premature and too early to dictate a timetable for elections in Venezuela right now.
Caroline, you just talked to Jackie about diplomacy first, right? The Danes have repeatedly said they are willing to collaborate on all of the concerns that the president has, whether it's more troops, mineral rights, intelligence sharing. Why does the president feel he needs to own Greenland and not and put out the threat of military action when this could be done through diplomacy?
Well, who said diplomacy isn't taking place behind the scenes, Dasha? I mean, the president is interested in diplomacy. His national security team is as well. And of course, he's always willing to pick up the phone for everybody and hear out their concerns. But the president is the president of the United States of America, and he's always going to be very clear about what he views as being in our nation's best interest.
I need a fucking $2 dub.
Caroline, I have a question for you on Venezuela, and then I'd love to ask you about Minnesota and Tim Walz.
Sure.
On Venezuela, I'm wondering, does
Wow,
the
look at the drop. It's counting as a 0.5 fit bullshit now.
or have them self-report
It created cycles on top of it.
As far as I'm concerned, the policies of the Trump administration and the Department of Homeland Security have not changed. All those illegally present in the country are subject to deportation. And I would just like to add, how we got here.
Come on,
the president was
$3
very clear on
down,
the campaign
and then go
to
fly.
the
I
American
don't give a
public,
fuck,
and it's one
man.
of the
Go
many
do it.
reasons they resoundingly reelected him back to
Go
this
to.
office, that he was not only going to crush foreign drug
almost
cartels,
put blood
but that
down
he was
below.
not going to stand by and watch as the illegitimate Venezuelan regime was sending illegal criminals and gang members and rapists and murderers to our country, which happened to the tune of thousands under the previous administration and president. And so there could be nothing more America First than this operation that took place last week. And I would just remind all of you in this room that there were innocent Americans like Jocelyn Nungare who lost their lives at the hands of dangerous Venezuelan criminals who were sent here by the Maduro regime. And that has been the president's North Star and guiding principle throughout his entire policy since January 20th.
Tim Walz in Minnesota. Does the administration believe that
It's
Tim
all an
Walz
options
potentially
game.
dropped out of the governor's race because he could be under criminal investigation?
I don't know if there's a criminal investigation. If there was, I wouldn't be able to comment on it from up here, to be honest with you. But I think Tim Walz probably dropped out of the race because he realizes he no longer has the support of the people of his own state, which is a remarkable downfall considering he was the #2 on the Democrat Party's ticket just about a year ago. When it comes to Minnesota, the fraud that we have seen, the wide scale of fraud is really remarkable. It's egregious. I would encourage every single journalist in this room to go to Minnesota and to cover it yourselves. As for the Trump administration, we have officials who have been on the ground almost every day. Secretary Noem was there yesterday. Secretary Bessent will be traveling there later this week to talk about the fraud and to do a roundtable on this very topic. And I would just like to leave you with an update. To date, the Department of Justice has charged 98 total defendants in several Medicaid fraud and related case programs. 64 were convicted, and 85 of the 98 charged were of Somali descent. The DOJ has also issued over 1,700 subpoenas, executed over 130 search warrants, and they have now added more attorneys to their office there to absorb the case flow. DHS is on the ground going door to door conducting large-scale criminal and HSI investigations. They have also sent approximately 2,000 agents to Minneapolis to assist with law enforcement and immigration enforcement. As I said, Secretary Noem was on the ground yesterday. The Department of Health and Human Services has also begun requiring a justification and photo evidence for all child care related payments nationwide, and they required Minnesota to conduct a full audit of all child care centers. They also froze $185 million in funding to Minnesota. And Dr. Oz, who was just here, also notified Governor Walz they're going to begin auditing Medicaid recipients and deferring payments on claims based on waste, fraud, and abuse. The Department of Labor is also conducting a targeted review of Minnesota's unemployment program. Department of Agriculture requiring Minnesota to conduct recertification for SNAP recipients, and HUD has launched investigations into the public housing. SBA has also suspended nearly 7,000 borrowers amid suspected fraudulent activity. So, with all of that, rest assured, this is an all-hands-on-deck effort from the entire administration to get to the bottom of this and to ensure that the ripping off of taxpayers in the state of Minnesota, and it won't just be Minnesota, it'll be any state across this country where fraud has taken place, and we are protecting law-abiding, tax-paying American citizens. Phil.
Thank you, Caroline. Just to follow up on Greenland, there are treaties already on the books that give the United States access to the island. They can construct and maintain military bases there. We can house personnel on the island. The U.S. has control of landings, takeoffs, anchorages, etc. So I'm curious if you could just spell out for the American public, what specifically would the U.S. gain by taking control of Greenland that the U.S. doesn't already have access to right now?
More control over the Arctic region and ensuring that China and Russia and our adversaries cannot continue their aggression in this very important and strategic region. And there would be many other benefits as well that, again, the President and his national security team are currently talking about. And Jeff, I'll give you another one. Welcome.
A broad sort of stand-up question on foreign policy. Are you concerned about increasing tensions with Russia because of the tanker seizures? And how does the U.S. action in Venezuela impact the ongoing relationship with China and the President's relationship with President Xi?
I think the President has very open, honest, and good relationships with both President Putin of Russia and also President Xi of China. He has spoken with them numerous times, as you know, since coming to office about a year ago, and I believe that those personal relationships are going to continue. But as for the President and the United States, he's going to enforce our policy that's best for the United States of America. And with respect to these ship seizures, that means enforcing the embargo against all dark fleet vessels that are illegally transporting oil and only legitimate commerce, to answer your question much earlier, Rachel, determined by the United States is going to be permitted. And that's the policy of this administration, and he's not afraid to implement it. Go ahead.
Unusual fucking cycle.
I remember asking the president at the very beginning of his term if he was committed to Article 5 in NATO, and he said yes. Has his stance on NATO or his commitment to NATO changed?
Did you see his statement earlier today? He said we will always be there for NATO even if they are not there for us. And I think that answers your question directly. Yes.
Just to follow up on what Jeff was saying there, will the president commit that if any NATO members are attacked, the United States would come to it?
Again, the president addressed this directly himself this morning after seeing the coverage from all of you in this room on television, and he made it very clear we're always going to be there for NATO, even if they have not done right by the United States of America. And they have not, they have finally increased their defense spending at the request of this president, but it was only because of this president that they did that. We'll take a couple more. Michael, go ahead.
Thank you, Caroline. Happy New Year and congratulations.
Thank
Two
you.
questions, if
You
I may.
too.
One on healthcare, one on Mexico. On healthcare, the president says he wants Republicans to be flexible on the Hyde Amendment in order to pass healthcare legislation. What is the White House's message to pro-life voters who say federal funding for abortion goes against their values?
Well, the president did not change the administration's policy. It was President Trump who signed an executive order protecting the Hyde Amendment. It's the Trump administration that has taken multiple actions on various fronts to ensure that taxpayer dollars are not funding the practice of abortion. What the president was saying yesterday was Republicans, and frankly Democrats too, need to show a little bit more flexibility so we can actually get something done with respect to the issue of health care. Republicans have amazing ideas. The president himself, as we spoke about earlier, has launched this Most Favored Nation drug pricing initiative, has cut good deals with Big Pharma. He wants to see Republicans and Democrats too, if they're willing, codify those executive orders into law so that these good deals can remain and these prices can continue to be lowered long after this president and this deal maker in chief is gone. The president's talked a lot about health savings accounts and giving more money back to the healthcare consumer rather than to these giant insurance companies, and he's been very outspoken and tough on them too, and I think you'll see more and hear more from him directly on that issue. So he wants to see Congress get something done with respect to healthcare, and that was the point that he was driving home yesterday.
Mexico, Caroline, President Trump says the drug cartels are running Mexico. What action does he need to see Mexico's president, Claudia Sheinbaum, take to prove that she's in control of that country, in control of those cartels? And does the White House believe she's able to do that without U.S. intervention?
Look, I think the president was speaking very candidly and frankly about the reality on the ground in Mexico. Haley.
Caroline, Happy New Year. I wanted to
Thanks,
ask
you
you
too.
about the seized tanker, the Vela. There were reports before this that Russia had sent a submarine to escort it. Was there any engagement with that submarine? And then was the deconfliction line of Russia used ahead of boarding that?
Again, this was a Venezuelan shadow fleet vessel that has transported sanctioned oil. The vessel was deemed stateless after flying a false flag, and it had a judicial seizure order, and that's why the crew will be subject to prosecution. Mary.
On Colombia, the president talked over the weekend and suggested that he would be open to an operation there. Should the president of Colombia be expecting Delta Force anytime soon? And then I had another one for you on California.
That would be a very unwise question for me to answer, to weigh into. What's your next question?
On California, can you share any more about the fraud investigation? The president said that there was one. Who's being investigated and where is it starting?
Again, this is going to be a all-hands-on-deck government-wide effort. The president has directed all agencies across the board to look at federal spending programs in not just Minnesota, but also in the state of California to identify fraud and to prosecute to the fullest extent of the law all those who have committed it. Take one more. Sure.
Thank you. Carolyn, yesterday was the 5-year anniversary of January 6th. Democrats and mainstream media continue to push their big lie that it was an insurrection and that police officers died that day. The reality is that 4 Trump supporters died on January 6th and 2 women were killed by January 6th police. Everybody knows Ashley Babbitt was shot in cold blood by Capitol Police Officer Michael Byrd, but there was another woman, her name was Roseanne Boyland from Georgia, and she was pepperballed, gassed, and ultimately brutally beaten with a stick by January 6th police officer Lila Morris. The Biden administration and mainstream media lied and told Americans Roseanne Boyland died of a drug overdose on Capitol steps. Her family is now asking for an investigation. Is the administration aware of the circumstances of her death, and will there be an investigation finally?
Well, for investigation, I will have to defer you to either the FBI or the Department of Justice, and I'm sorry to have to do that. But with respect to all of the facts that you just laid out, the White House relished the opportunity yesterday to actually create a new website to share the facts with the American public, but also all those in this room. We knew the media would be covering January 6th quite a bit because they think it's something that the American people are still believing their lies on. They think it's something that still helps their case against this president. Obviously not, or else he wouldn't have been reelected in an overwhelming fashion in November of last year. And so I would encourage everyone to take a look at the website. It's quite well done. And thank you all very much. It's great to be back with you.
Thank you.
What a fucking godly timing. At the top. Godly timing at the top. I don't know what these people are doing, man. Mess. I don't even know if it's gonna dump. I said that shit here. I don't know if you're trolling or not, so I removed you, bro. We can talk later today if you want, but just right now, it's just too much crazy shit going on. Way too much crazy shit going on. Double top maybe? 12.10, 12.25. I need to focus right here. I'm sorry. I need to focus real hard. Alright, I might have rushed on that, Harry, but yeah, we'll talk later. 12.25. I really don't know, dude. It's too fucking wild. I mean, everyone can see that in the world, dude. It's not just an easy thing. This purple box is what's most important, basically. Not going lower than 12. Man, what a live stream. What a live stream. That live stream only has 4K views on it too. Like, what the fuck? What a live stream. Scary as fuck. I was gonna put it into Friday,
Elon
but
Musk's
zero
XAI
DT.
just closing an upsized $20 billion round. For today's Tech Check, Kate Rooney is back. She has more on why this one is different than the rest. First of all, welcome back, Kate. It's so good to see you, and congrats on second baby.
Thank you, Sarah. It's great to see you. Great to be back. And this funding round we're talking about, it is similar to other mega rounds we've seen from OpenAI and Anthropic, but gotta say, XAI is different for a few reasons. So for one, Musk's world is extremely insular. So if you look at the cap table for this round, it's mostly his inner circle. Notably, Valor's Antonio Gracias, close friend, Tesla board member. You've got Ron Barron, Fidelity with pretty deep ties to Musk as well, and Emirati and Qatari wealth funds. Those I'm talking to say This group doesn't underwrite in a traditional way when you think about it. It's not the near-term revenue goals. It's more about muscle memory for this group and conviction in Musk's ability to execute. So one person telling me, XAI, they don't really go out and publicly fundraise like you see in Silicon Valley. You compare that to OpenAI, Anthropic. Those rounds are a knife fight, as one person told me, widely known when they're out raising, and it is an absolute battle to get in. XAI's strategy overall is different. They say in a press release yesterday they're going to be competing for enterprises. There are some questions over Fortune 500 companies, their willingness to partner, given some of the controversy around XAI and Grok. I also spoke to some competitors, some investors who did point out XAI, they have almost no enterprise footprint. Noticeably at this point, it's been a profitable battleground, though, for OpenAI and Anthropic. There is some optimism about Musk's ability to weave XAI and Grok into his own enterprises. You got Tesla, robots, SpaceX. We've already seen XAI merge with X, formerly Twitter. Nvidia, we should point out, also a strategic backer here. A bulk of this money is going full circle back into their H100 chips, and the money is also going to help Musk expand his data center footprint. This is really key. Folks I've talked to argue building data centers fast, that could actually be XAI's moat. Musk
I'm looking for like
has a history, a lot of people know, pushing technical limits
least.
And moving faster.
That 9K
What about
on my
the models
SPX,
themselves?
break even
what do we know
basically.
about how they stack up with some of these other big competitors?
It's interesting. I was talking to somebody who said, the models at this point, there's been this argument over are they a commodity or not. It's, they don't stack up to OpenAI, Gemini, Anthropic in the same way. That is sort of the consensus view. It's, used within X and Twitter. The moat here is sort of like a core weave. Somebody described it as if you're going to look at the business model here, it could be the type of thing where they're building these data centers. They're going to start competing more with an AWS. They're sort of betting that they can build infrastructure the fastest. You've also got this race, this battle for H100s. They might actually be ahead if you look at sort of that side of it. I would say on the model side, they're not really seen as a leader here.
The market is making it so fucking hard
technical talent, if Musk
make
can
a fucking good
compete
scalp
on sort of
on
recruiting
Nvidia.
people,
Fuck
they could
me.
gain an edge, and you sort of blink and you got somebody moving into the front row. So it'll be interesting to see in 2026 who is sort of seen as the leader. I don't know, they could be a dark horse. We'll see what happens.
Kate, you mentioned some of the controversies. Do we know why they haven't taken a firmer stance against Grok's ability to create, in some cases, fake porn of women without their consent?
We don't know. I wouldn't dare to guess that. I think it's sort of subjective. I mean, there are people that sort of use X on Twitter within sort of that ecosystem and like the ability that there's not as much censorship, there's not as much oversight. So that is more speculation. I couldn't say, why they haven't come out more strongly and pushed back against that. But I would say that is the #1 controversy if you look at a Fortune 500 wanting to partner with these guys. That is going to be top of mind for any company wanting to use this model. They're going to have to think about that.
Right now. I'm trying to text and message back on WhatsApp. I can't do this right now during market open, so.
Welcome back. Markets kicking off 2026 in a record-setting strong note, already hitting fresh record highs just 4 days into the new year. The Dow topping 49,000 for the first time ever yesterday. The S&P also hitting a record high, and the Nasdaq pushing higher. It's not just equities moving. Commodities are also heating up. Nickel posted its biggest gain in more than 3 years. Gold and silver also climbing toward record highs yesterday. Investors trying to suss out what 2026 holds, from monetary policy to geopolitics, and whether the gains can sustain in a more volatile environment. Joining me now is Niles Investment Management founder and portfolio manager, Dan Niles. Dan, great to see you. Happy New Year.
Happy New Year. It's so disgusting.
And you said that you're expecting a choppier year for the markets. Give us the setup.
God.
What do you expect 2026 to look like from an investment perspective, and how are you positioning yourself?
Well, I think it should start off pretty strong for a couple of simple reasons. Number one,
oh
the
my
Fed
gosh,
started
come on.
doing quantitative easing
Drop it
light,
a little bit.
if you want to call
Let's
it that,
fucking
in
go.
December, where they're buying $40 billion a month
go.
in short-term treasuries after they were doing quantitative tightening before that. And then you should get a new Fed chair in May, appointed by President Trump, and the only way he's going to get to be chair is if he wants to cut rates by another 100 bips at least. And so that should keep the easy money flowing, which is obviously positive. And then you've got the big, beautiful bill benefits giving you about 100 to 150 billion in extra tax refunds for consumers and accelerated R&D and investment tax credits for corporations. So those are the positives. Now,
I'm in 6970 on SPX.
I think people are going to start to get concerned about the midterm elections. You know, what if the socialist Democrats continue to make gains, and that's not viewed as good for big business. And you've also got multiples that are at very high levels at 26 times trailing for the S&P versus about 19 times, which is the historical average when inflation's sitting up at this 2.5 to 3% level. So I think those are the positives at the beginning of the year, but then I think things get a lot tougher at the end of the year.
Yeah, that makes a lot of sense to me. I mean, look, we're seeing this melt up in equities now continuing, but you even have interest in commodities. And we've had people like Stephanie Pomboy and Larry McDonald on recently saying you have to own hard assets as well. What's your take when you look at things like gold, silver, and nickel, Dan?
One-third, two-third, three-third.
Gold for part of last year. I mean, we don't own it currently, but I think in an inflationary environment, because don't forget, I mean, easy money is great for the stock market, but it's great because it's inflating, you know, stock prices. Well, it happens to inflate commodities as well, unfortunately.
Three-third bearish cycle is here.
But that's not necessarily good for inflation, and it's not good for global growth. So I do think commodities does deserve a place in everyone's portfolio. You know, we like it as well, but at these levels where you're kind of seeing some of these assets go parabolic, it's not something I'm interested in here, but certainly on pullbacks, commodities are a lot more interesting.
So let's talk about some of your top picks. I found the first one interesting. It takes me back all the way to the dot-com boom. You've talked about the AI wave and shared a few stock ideas that you like. You're looking at strong opportunities still in technology. Tell us about your picks. Cisco is one of the names in the tech sector. Why are you putting Cisco as one of your top picks for the year? Tell us about it.
12,
sure. I mean, Cisco actually has one of my top picks for 2025. Stock was up 30%. My thesis back a year ago was that Cisco would start to enter the AI conversation in that they were going to start providing networking gear for AI. And what you saw was their presence actually got stronger last year. Stock finished the year up 30%. Which is better than the Magnificent Seven, which averaged up 22%, and certainly better than the S&P up 16%. And going into this year, I think what you're going to see is that momentum continuing because corporations now need to get access to all that AI-generated data. So I think you're in the beginning of a multi-year upgrade cycle. The growth was 1% per year before last year. Last fiscal year, it accelerated to 5%. This year, I think you can get into the high single digits. And as I said earlier, the market multiple is about 19 times trailing versus the S&P at about 26. And so I think the multiple can expand further as well.
I'm almost at 10K.
Are you interested in any of the other high-flying names within AI like an Nvidia?
Well, yeah, actually, when I look at Nvidia, it's down to about 25 times earnings. And so that one's actually interesting. It's not one of my top 5 picks, but we actually have a pretty substantial position in it. One of the concerns, which we can talk about, is you get to the back portion of this year and have an issue in that one of the big players or one of the private companies like an OpenAI has trouble, at which point people start to wonder, hey, is this bubble in AI bursting? I think the first part of the year is going to be very strong for AI in that I think OpenAI is going to raise that $100 billion in funding. You're going to see a lot of the stocks in that ecosystem do very well. But I think as you get towards the end of the year again, you could run into an issue where you figure out all these companies that think they're going to do well in AI are not going to do it.
Yeah.
And you could see a hiccup there.
Yeah, I mean, yesterday when I was talking to Larry McDonald, he made the point of the banks could be left holding the bag on some of these loans gone bad on data centers, which is what he was expecting. Is that what you're suggesting?
100%. I mean, you and I, Maria, lived through the 90s, right?
Yeah.
It was wonderful. 1999, NASDAQ was up 86%.
Yeah.
It started 2000 up 24, and then it went down 78% over 2.5 years. And nobody can argue the internet's not an amazing thing. but it didn't stop stocks from getting killed, and a lot of companies left holding the bag, in your words.
Yeah.
On the other side of that break. So I think that's why I'm really bullish on the AI related stuff.
Nobody
right
likes
now, like
Dan
Nvidia.
Niles, dude.
Later this
Get Tom
year,
Lee on the fucking line.
it becomes potentially a lot more problematic.
All right, well, we're going to watch that. I think this is an interesting story that increasingly you've got this worry that some of these loans could actually default on this data center build out. You also like Boeing. You say, I love big backlogs, I cannot lie, and ramping cash flow. And you like Nike, just do it. And Apple, better late than never, you say. And then you've got the time has come for RFID tech at an inflection point. You want to say anything about those top five list?
Sure. I mean, I think with Boeing, you're going from losing $2 billion in cash flow in 2025 to getting close to $10 billion by the end of this decade in terms of positive cash flow. I think with Nike, you brought back a 32-year veteran, which is getting Nike back to its roots about a year ago, having a strong retail presence, focusing on sports and innovation. Yeah. I think with Apple, you're going to go through changing to a foldable phone. And in the past, you've seen changes in size drive big revenue increases. The iPhone 6, you went from 4 inches to 5.5-inch screen size. Revenues accelerated from 7% to 28%. And RFID's been kicking around for 50 years. You're entering the food category. It's 10x bigger than apparel. At 80 billion units, you're going to a 1 trillion units potential per year. So
I love your analysis, Dan. You know how much I love your analysis. You think things out so clearly. Let me get your take. I'm worried about this Supreme Court decision. I think we could get the Supreme Court decision on President Trump's tariff authority on Friday, because the Supreme Court has declared Friday, January 9th as an opinion day on its first day back from a 4-week break. Opinions will be unsealed shortly after 10 a.m. We don't know what opinions will be unsealed. I'm making a guess that the opinions could be around the president's
I want them to flash down so I can get the fuck out of zero DTs and move on to Friday. That's my honest fucking opinion. I want to get the shit out.
I think they'll probably decide against the president, but I think the president has other options to keep the tariffs on. So I don't actually see it being that big of a deal. Obviously, when the market's ramping into things like that, you worry that there is some issues, but everybody knows that decision is coming. I'm much more concerned about earnings coming up, and you've got, as we said earlier, right, entering the year, you've got some pretty big other positives. So I'm kind of looking through that, and I don't see that as a big issue, but you know, we'll see what happens.
Yeah. All right. We will leave it there. Dan, great to see you this morning. We so appreciate your analysis. Thank you, sir.
Thank you, Maria.
All right. Dan Niles joining us.
Fuck is this Venezuela oil shit? Free oil? Cheaper oil? Just chopped. This feels so fucking chopped. I'm just getting trolled all day using QQQ almost. Well, on the Whitehouse live stream did its thing, but I'm actually getting trolled on this fucking QQQ Nvidia too. $6962. Sheesh. shit. Alright, well, let's see it. HOD on QQ. Divergence on the roof. All day long. All day long.
Welcome back. Goldman Sachs out with its 26 equity outlook, seeing, quote, great potential for the year ahead. Joining us here at Post 9 this morning is Goldman Sachs' new chief U.S. equity strategist, Ben Snyder. This is Ben's first appearance in the new role, and we should congratulate you, Ben. It's nice to have you.
Fuck, give me a dump.
Same to you.
Costin who? Just kidding. We love David.
So you're looking for a good year?
We think so, yeah. As we've discussed many times on the show, earnings are the most important driver of stocks. And last year, the S&P rose 16% in price return. 14% of that was earnings. As we look forward, there are a lot of good reasons to expect continued good earnings growth. We have 12% growth and a 12% return for the S&P.
Right. Driven by the kinds of sectors that have gotten us this far?
We think the tech spending and the tech earnings continue. So a big chunk of that 12% earnings growth is the largest stocks that account for 30% of earnings. So of course they're important. But one change we do see this year is a broadening. We are expecting economic acceleration. We've been recommending small caps. We've been recommending stocks exposed to the consumer. That's very different from most of 2025.
So this pro-cyclical stuff you think is for real? The trade that we've seen develop?
We think it's for real.
Right.
Yeah.
Would you go equal weight over cap?
I don't think for the full year, but if you look at the first half of the year, our economists are expecting GDP growth of north of 3%. That is a very pro-cyclical environment. Over that period, yeah, I'd go long the equal weight S&P.
And full year in the mid-twos? Where are you on?
We're in the mid-twos.
Still looking for 3 cuts?
Looking for 2 cuts.
2 cuts. And how does that square with a reacceleration in the economy?
I think the risk in the short term is that the market doubts that a bit as it sees the economy accelerate. That said, as you get towards the second half of the year, once that acceleration is peaking, growth is still healthy, but it's peaking, and inflation is starting to decline or continuing to decline, really, I think the market can regain confidence. And so if you look at our interest rate forecasts, we have 4.2 on the 10-year at the end of the year, about where we are today.
So I guess, what's the biggest risk, do you think, to your forecast at this point?
The biggest risk for equities always has to be growth. You know, if you look at the unemployment rate, it's hard to ignore that. Our view is the labor market stabilizes, but I do wake up every Thursday excited to see jobless claims. If those start to tick higher, we'll change our view on the equity market.
You're pretty constructive on this Friday, right? Are you around 70?
That's right. And we have a tick down in the unemployment rate as well.
Back to 4.5?
Exactly.
Which would be fine for stocks, I assume you believe?
I think that's right. You know, one of the ways we're characterizing this cyclical outlook is a mid-cycle acceleration. You know, sometimes when the economy is accelerating, for corporates it's a mixed bag because you also have to deal with higher input costs, higher wage costs, maybe some Fed tightening. In the current backdrop, I think corporates are going to be able to enjoy that revenue acceleration without worrying about those other headwinds.
Do you get a lot of pushback on already high valuations?
That is by far the biggest pushback. You know, it's hard to ignore we're stepping into this year with a PE multiple of 22 times. That's about as high as we got in 2021. And just a couple turns shy of the record multiple in 2000. So can't ignore that fact. That said, the multiple today is also just about where we were at the start of 2025, and that didn't stop the equity market from a very good year last year.
You're pretty constructive on the ability of hyperscalers to continue their capex, right? At least as a ratio to cash flow.
That's right. So we think capex growth will continue this year. Consensus estimates are at around $530, $540 billion of spending this year. That's about 40% increase from last year. If we continue the recent pattern, or we look at the strength of those cash flows of those balance sheets, I think risk to that number is skewed to the upside.
Screaming into the mic. Do I have to start screaming into the mic to fucking break this fucking pattern? Like, I'm sorry.
Lots of things have taken place already in 26. You're a man with fingers in a lot of pies. Can you talk to us about how the stage is set for corporate America in 26?
Well, corporate America has recognized that President Trump likes to make major decisions that can affect corporate America. So I think the CEOs of corporate America, when invited to the White House to do something with the president, are likely to respond favorably to what he wants to do. Now, obviously, some may not politically agree with him, but generally, they recognize that he can block a corporate deal. He can do things in terms of regulations that other presidents couldn't do. So I think he's obviously got the attention of corporate America.
So when they sit down, and have a conversation, they being the oil executives, with the United States and the President of the United States, does that have to factor into their decision as to whether to deploy capital in a place like Venezuela?
Well, I think they recognize
Come on!
that the president is going to do
Yes!
something
Oh my god, it's working! Oh my god, it's working! Oh my god, it's working! The more I scream, the more I talk loud, the better it is! Oh my god, it's working! Actually, it's
he's likely to do it.
Let's go!
And so many of them are fairly responsive to him.
1.2K
They
now, let's
recognize
go!
that he's different than most presidents of the United States who don't usually get that deeply involved in corporate mergers and acquisitions, but this president is different.
Give me fucking
We've also
3
talked
minutes
about
here.
the idea of a sovereign investment fund or something like that, and some equity investments on the part of the U.S. government in a number of different companies. Based on your conversations with chief executives, is this something that's welcomed? Is this something that's even solicited?
It's not a major subject of conversation. Remember, we have a budget that is so gigantic that it's not going to be affected, and corporate America is not going to be affected by a sovereign wealth fund all that much because it's not going to be that big. Right now,
I'm leaving for right now. $6,200.
$2 trillion overall.
I'm out 50%. I have 4 left. $6,200 still. I'm holding for a minute or two here.
It's going to be big enough to
Please,
impact
time is 12:50.
And
I'm gonna fucking go into Friday puts right now with my $6,000
sovereign wealth fund
on
have any real
SPX. I'm
impact on
adding
the federal deficit, in my view. But I think there should be a sovereign wealth fund. We've had one for years. It's called the printing press. Basically, by printing dollars, because we're the only reserve currency, we've had a sovereign wealth fund, and it's been enabled us to kind of do things we wouldn't otherwise be able to do because we're printing $2 trillion every year of money that we're spending that we don't really have. So we've had one.
My IWM got toast unless they fucking dump, then it's really coming
You have
back.
these wonderful
I can't really
conversations
actually believe
with
it's coming
leaders
back.
in markets and
Nvidia,
companies, and the
this shit
latest
needs to
Ray
drop
Dalio
it
has
to
been pretty
close.
vocal about how the era of Americana is coming to an end in some way or another,
yes!
and how there is this trajectory. As the head of a company, as someone who talks with corporate executives, do you get the sense that they feel that when they talk internationally with their peers?
Well, remember, for such a long time, since World War II ended, we've been the only reserve currency in the world, and we've pretty much dominated the global economy. We have about 5% of the world's population, and we're about 18% of the world's GDP. So we're disproportionate in our influence. And I think it's very difficult for people to step back and say, all of a sudden the world's going to change. It happens more gradually. But people recognize that we're not going to be the only reserve currency forever. And we recognize we can't keep running up these deficits forever. And so I think corporate America is probably expecting some changes to occur. But I think a lot of people are waiting to see what happens in the midterm elections, which are going to happen this year. The president himself has said that he's very upset if the Democrats were to win the control of the House, because he said yesterday that they might try to impeach him. So a lot lot of people are going to look at the midterm and see what happens there. But right now, I would say the economy in the United States is in reasonable shape, leaving aside the deficit issue. Unemployment numbers are tolerable. Inflation is tolerable. If there are going to be big problems, we don't know exactly what they're going to be. Geopolitical events are probably more likely to impact the economy than anything that we're going to do ourselves. So what could happen with the Russia-Ukraine war? What could happen in Iran? What could happen in China, Taiwan? Are more likely to affect the economy and the markets than anything we're going to be able to do by ourselves.
How much is geopolitics weighing on corporate America right now? How much is this the conversation in boardrooms?
There's no CEO that doesn't have a geopolitical advisor these days, because everybody recognizes that geopolitical events can affect them dramatically. For example, if you're in the oil business, look what's happened just recently.
Rejection 12-10, rejection 12, right?
Agricultural business, Ukraine has gone through a major change, and they were a major exporter of wheat. So I think everybody has a geopolitical advisor, and everybody's sensitive to it. But in the end, you can't anticipate certain geopolitical events. When you tend to anticipate things that are going to happen, they usually don't happen. And when you don't anticipate them, that's when they happen. So it's very difficult to think your geopolitical advisor is going to make you much richer or smarter, because they really don't know that much more than you know yourself.
That is previous all-time. That is previous all-time high. Previous HOD. Right, HOD. All-time high breakout point. Okay, now the market is playing here with the bulls and the bears all trapped at the tippity bottom, tippity top. Let's see. I have no, you guys want to do a poll? Let's do a poll, right? I think it's time, guys, to do a poll. All right, time to do a fucking poll.
Thanks, Dave. Yeah, I was just speaking with David Lee about this, co-founder and CEO of Hersey Technology, about the analogies you might want to use in this situation. And I just taught you a new term.
Higher or lower, folks?
Launch, and that's exactly
HOD
what you've done with Nvidia,
or
LOD?
LOD?
Like you guys have actually been working on
or
this for quite a while.
Yeah,
chop
exactly. So
or
the news
VWAP.
came out
That's
yesterday
the last
about
poll of the day.
Nvidia. To me, it's like we use analogy. It's almost
Where
like
are we going?
I've been secretly dating a supermodel for a long
HOD?
time. Even when I tell people, like, no, I
Or
don't believe you,
VWAP?
right? Of course, the news is official. Now people know that we're officially on the new Hyperion 10 platform,
Or
which
LOD.
is extremely exciting.
If you're
definitely
not
for us,
sure,
and I
you can
think
vote
it's also
VWAP.
great for the OEM customers who are interested.
Everybody
in
vote
taking
before the
Nvidia
candles come,
solution.
please. This is the
Here's
last
reason
poll of
why
the
it's
day. My
very,
guide
very
to
important.
fix the internet is
It
coming
used
at
to be that when OEMs
2:30.
think
I
about
hope to
a
God I'm here
autonomous
with you
driving
guys
product,
while this
you
shit happens.
chop
But I
that
mean,
into sections of
if the
the
guy
software,
comes,
the
you know, I want to
hardware,
go fix
the
my
data,
internet so the
and
fucking
the
shit
training and
never goes
everything,
down.
right?
So,
And then you think magically they will be put together and it will work. Well, it turns out it's a little more
1250
complex
is
than that.
bouncing.
So now Nvidia has this entire platform who has all the proven already working with vendors like us and the suppliers. It's an ecosystem. So now the OEMs will know when they pick this solution,
I'm fucking
they don't
terrified.
have to
I'm not
redo
gonna
the
lie.
hardware.
I'm still
They
in.
don't
I'm wanting
have to
VWAP at the
retrain the
minimum.
model because the data is there. So
On
it's
my
making things
zero
extremely
DT, I want to fucking
simple
leave, and I
and
don't even know if I
streamlined,
want to
and
add
also
more into
low risk
Friday, but
because
I'm
it's
in
proven.
fucking hefty on
We saw that
Friday.
share price move
I
off
mean,
the back,
I
but
need
can you just
Nvidia to pull
quantify
back.
it for us? What's the
This shit
actual
is
size
scary.
of this opportunity for
This
you?
shit
What
is
does it
scary.
actually mean in
I have
financial
a
terms?
decent amount of fucking shit on
We
Nvidia on
actually
190
don't know
this
how
week,
big this
and
could
it is
be,
fucking
but I'll give you some numbers to justify that. First of all, China
man.
market is anywhere between 25 to 28 million cars.
Oh my
but
God,
the
there were so
global
many people
is
voting.
more
3
than
people
80
said
million.
HOD,
So that's a
4
factor
people
of
said
roughly 3.
VWAP,
And
chop,
also
not sure.
on the product
And then 4
side,
people voted
the global
LOD.
OEMs tend to think
Nico
more
said
higher end,
LOD.
more advanced,
Follow
higher
says
quality
chops.
parts,
So Zach,
and
so
that
2
also
people
gives
saying
you an extra
LO3.
benefit of being able to work with
3
customers
people saying
globally.
LOD.
So if you multiply them,
YouTube chat,
it's
and then
actually
we have
a
people saying
much
HOD.
much
1,
bigger
2,
market than
3,
China
4.
alone. That's
4
why people are more
saying
excited about
HOD,
it.
So 7 V.
Obviously, we're in Las Vegas, and
7 V7.
it's a huge
HOD
automotive
versus
market
LOD,
in North
and we
America
have
as well. But how do you
basically
think about the opportunity
one
here,
person saying
particularly, of
chop,
course, you guys have faced
so we have 6
tensions
people
with
saying chop,
Washington
VWAP,
as well?
not sure.
Definitely. Well,
6
there isn't a perfect
V7,
solution to
V7.
fully solve that problem, but here's what we have done, right? The first of all, we publicly announced also at Bloomberg that we are in the process of building a factory at Thailand, and which will be in production early 2027. And that is going to be our new manufacturing facility to support the demand from the global OEM
creating
side.
at the middle, 1255.
At the same time, we're also building advanced products for those platforms that the global OEM is requiring, because they're doing long-range, high-definition Level 3 applications, which we're also super excited about. And also in the meantime, of course, it's a necessary step for us to make sure that we're fully compliant with all the regulatory effort, including on the hardware side, on the data side,
they want to go
and
lower.
also on
They
the
want to go
software
lower.
side.
They
For
want
the
to go
software,
lower
most
here.
people think
They want to
LiDAR
go a little
has
bit
software,
lower.
but actually by the regulatory definition, we have firmware, which is the software you use to control the device.
Go lower a little bit. Let's get a $2 pullback from new all-time high. Come
China
on,
manufacturing
reasonable,
for China and Thailand
reasonable,
for
healthy.
global.
China for China.
Yeah, okay. And what's the
694,
breakdown then to anticipate?
692,
What are you actually expecting to get out of
reasonable,
that Thailand
healthy.
factory?
That's something
Today, as
reasonable,
I said,
healthy.
it's still mostly China because
QQQ has been on a meteoric rise,
leading
right?
the global market
This
on
shit,
the volume and also on the product
healthy.
side. But in the end, we do expect
Whatever
a
the
more
fuck
balanced
they're
mix
doing, healthy.
between China and Europe and
Okay,
the US and
there's
a lot
another
of the
trend. Like
third
I'm
world
telling you,
countries.
there's many trend lines.
You are the
I don't
world's
know
biggest
if you want
LiDAR
to fucking
maker,
draw them or not. I don't know. It's
and
up to you. But
your market presence
doing
is
what they're
felt.
doing.
I know, for instance, RoboSense is another one of your peers in China. They actually had to pivot some of their business away to try and capture new markets, just given the heft of her side. But what about in the US market? Because Luminar is another company that recently actually declared bankruptcy. So who do you see as your competitors, and what are the pressures that you see on that front as well?
Constant
the
bounce on
competition is
Nvidia
always
today.
going to be there because LiDAR is a super important product and the market is massive. I think some people half-jokingly say our biggest competition is from the people who don't want to use LiDARs. I feel like that's more important for us to make sure we convince those people. And today, we want to do that via data,
Multi-range
right? And
Tesla
Tesla
in the
has
purple
shipped more than 2 million units for the past few years. And most of them are saving lives. Like We already have
crazy,
public statement from the CEO of some of our customers saying that in critical cases, fatal accident, LiDAR could save up to 90%.
Wow.
So we want people to look at the data. That's one thing. Safety. The other thing is we want people to look at how far we have gone in reducing the price. Because in the end, it's a return and it's an investment. If you remember from 8 years ago, that was $50,000 per LiDAR. Now it's below $200. We feel like we've done a great service to the industry by making this reliable, effective, life-saving sensor affordable.
Now that you get to that price point, you also open up new opportunities and new markets, because you're not talking about a car that's, say, 50, 60, 70,000 US dollars. You're talking about maybe a humanoid robot that's far cheaper.
Remember,
so what are the opportunities you see outside the EV space?
Remember that, right?
That's great. First of all, there isn't really a
remember this shit for the future. If this is good for you, remember. If this is bad for you, remember. Trust me.
Here's why.
That's how I remember.
In the end, they leverage the same capability. It's a manufacturing, it's a vertical integration, it's a globalization, it's the ability to control the cost. They actually are the same. So for us, we're lucky that we build the strong capability from automotive, and especially China automotive, which is super competitive. And then we leverage that to products outside automotive. We're on humanoid for sure, but I don't know about being cheaper for those products.
Why you so mad? Why you so angry? I have no clue. But man, did I do anything? Nah. Just the market doing market things. Man, yo, my screen capture is kind of broken. What the why am I... Okay, why do I have 3 different screen captures? 1 second. 2. The fuck? Alright, there it is. Yeah, why are you so mad, man? Relax. Relax. Let it be. Market's gonna cycle on your ass, whether you like it or not. Might as well be okay with it and to learn something out of it. Man said mute it. Like what? Talking about Bitcoin.
The market is durable. What is it making it so durable right now?
Well, you hit the nail on the head in your opening statement, right? It's broadening out, right? We have tech, which is actually underperforming, yet we got industrials, you got SMID, you got transport.
Thank you so much for hitting the like button, folks. Let's get the likes up. We have 120 people here. We could easily push that up to 110, 100 right now. Thank you so much. All we need is about 20 more. Thank you so much. So I'll hit the likes.
Happening across the board. Now, I highlighted some of those sectors. You know, the best performing ones, and I understand we're only a week and a half into the year, but you can already see industrials, basic materials, financials, and healthcare all outperforming the rest of the market. And I think that's good, right? It suggests signs of a healthier market, not in a market where investors are running out the door because they're nervous.
Ken, do you think we're seeing lost in the sauce? And I think you touched a little bit about it in your note this morning.
Look at this insanity
that we are
on
seeing
QQQ today.
AI fatigue. We know all these stories. We know Nvidia's going to crush it. We know Microsoft's going to report in a few weeks. Their earnings growth, double digits. They're doing great. There's no juice necessarily to squeeze out of these
Same
rocks.
thing as IWM, just on QQQ today.
In the sense that they've had a big run. I don't. To your point, the story's not over. But look, we're in the middle of Consumer Electronics Week this whole week.
QQQ today.
Hear it every day when you turn on the news. What's going on? You turn on the cable stations, whether it's Yahoo, whether it's Fox, whether it's CNBC. You're hearing all about what's going on.
Thank you so much for hitting the like.
Consumer Electronics Show, and it is nothing.
A lot of people watch and don't hit the like. I don't know why, but thank you for watching. But thank you so much for deciding to choose to hit the like. Thank you all. But I really, really do appreciate
and as I love what Kenny's talking
hit the like before I even ask.
And you and I were talking about
it really helps the algo.
It's good to see that moment is happening now. now that people are remembering.
Happy to know that people are
other stocks in the S&P 500.
truly there to say
and you're seeing
and other
to
sectors
support.
besides tech. And if you take a look at
It means a
the
lot to
trading
me.
days
So
of 2026,
when you guys say, "Hey, I'm here, I support, and I see you
that
guys,"
the,
I see you,
sectors that you guys have been
and I really want you to understand.
Have been,
Thank you. You
have
are
been rallying. You've seen
here,
other
and you
sectors
are.
besides
I literally see.
taking
You know what I mean?
the
It's
lead.
literally.
And I will point out
We all know each other
when we're
at this
talking
point
about the
now.
Dow
Come on,
which
the
touched
community
a new high yesterday,
is all
we
just
also
so
have to note
active.
that we are
It's
seeing
nice.
energy prices lower. You're seeing
beautiful.
gasoline prices going into 2026.
It's actually kind of cool
They
to see
are at their
community
lowest
sentiment
level
polls
since
too,
March
right?
2021.
Other people's
And President
opinions,
Trump,
like
in a rally back in
just
December,
like, oh,
had said that his
these
biggest
people think
priority is
HOD, LOD, oh,
affordability.
the miracle,
Of course,
oh, so
going
this
into the
might get sick,
midterms,
oh,
this is
thank you,
something
like,
that is going to be
thank
played
you
out
all for
more and more.
participating. You know what I mean? It's
These
literally
energy
not
prices,
possible
gasoline
unless
prices,
we all
jet
participate.
fuel
So.
prices lower, and this is going to be a tailwind for the economy as well.
Brooke, speaking of tailwind, right in your wheelhouse, the U.S. consumer. Rates lower,
flip the
potentially
VWAP
big tax
is
refunds
what I
this
need,
spring.
what I want.
I cannot wait
I am
to hear
nice
from some of these
up
early consumer
on
reporters,
my
whether it's Starbucks
6970s.
or restaurants
I
in a
just
few
want
weeks. I think
my
they're going to
Friday
all these
puts
things
to
out as
all
potential catalysts
fucking
for earnings.
comeback. I want this shit to really go into the 9:30 open candle here at 6/9/40, 9/6/9/43. Anything above 6/9/50 today got trapped. Anything below 6/9/50 today got trapped. That's what I see in my eye.
Analysts on the street, experts telling
me
that maybe we're in more of an alligator-shaped economy.
But it could be wrong.
Economy call out, Brooke.
I loved it. I loved it,
that's
Brian.
what
I mean, the bottom of the K maybe moving up just a
They
little
could
bit.
come
That
back to this
low-income
6/9/30
consumer
candle.
from
Or
these
sorry, what am I
tax
saying?
returns, and
They
that
could
was
come back to
largely
this
what Oppenheimer
9:30
said
open
within this
candle and
note.
SPY
Could these further
and
tax
be like,
refunds
oh,
really
we were
fuel
bullish,
that
oh, we were
low-income,
bearish, and
middle-income
then they
consumer
bear
to
trap everybody
return to
down
some
there
of
and
the
they
spending
bull
that
trap
they haven't
everybody
done
up there.
in quite some time? They also cited
Or
within
they
that
fig
note that
everybody
McDonald's
out
could
here
also
and go
see a
higher too.
return because of the fact that there's this
That's true
regained
too. You never
momentum
know.
about what
The
they're
environment
doing
could be
about
so
value
damn
and finding
bullish.
the right price point
But I mean,
to get
something
these
different happening at
consumers
this point.
within the
So
door. And that's not only the
something
hope for
was
McDonald's,
different. Something
but
was
also
happening
fast
earlier, and they
casual
faked
players
that
as
out
well,
too,
like
and they
Chipotle
created a
and Cava.
huger channel,
Kenny, let me get
bigger
back to
channel,
you.
and they could fake
If
this
you want
out
to
too.
comment on the alligator economy, you're more than welcome to. But like,
They could fake this shit out too.
What could go wrong this month?
No, I want to make one comment.
Time is
on what you said. Lower
10,
rates. The Fed's going to cut rates.
107.
Bloomies and Sacks and
We're
the
algo
rest of
ranging
them
at
lower
1.
their credit card rates. They don't. So the consumer is not going to get any help.
That's just
Bouncing from 105. 105 is algo ranging or some shit, and then 110 is now deciding inside all these little weird little tiny little algo ranges here. Building liquidity as we go lower.
Which is expected to be fairly robust.
But I mean, it could flip at any point. This is the 3/3 bear cycle. Nobody fucking knows if it's going to spike down and boom up green and be like, oh, bear trap. So no one knows. But I mean, it's going lower right now since 12:40, which is 25 minutes.
You could get, more commentary out of
Time
the Fed.
is
I saw Stevie Mirren on Fox yesterday
IWM decided to bounce at 1 into 110. Fair. Let's see what it does. I want this shit to break the fucking floor and plummet on IWM so I can get released. I have 2K on 255 on IWM that I never left. I know, I'm a greedy little pig. That's what happens when you're a baconator and cheese sometimes. They get fucking grilled like bacon. But it's okay, because I had a good Monday, I had a good Tuesday, and I had a great week last week. It's just, I kind of got a little bit... I went all out on a lot of things.
Well, Kenny,
it's kind of a dog shit idea to look at QQQ and do IWM, and IWM do looks, you know what I mean? I literally did SPX, I did IWM, and I did Nvidia, and they fucked me on QQQ alone. They royal fucked me on QQQ alone on Nvidia, so...
We already know that, because they're going to be in Trump's pocket, and he wants to plug it forward. But there are 3 or 4, maybe 5 current voting members that are in this camp going, well, slow down a minute. We don't really think we need to cut rates. Because remember, they can cut rates. They risk igniting the fire under inflation again, which is where they do not want to go, in my opinion. So I'm in the camp that the Fed should do nothing. I think rates are good where they are, neutral based on the economic data that I'm seeing. If Stevie Mirren and the rest of them are looking at a second set of data and they're playing I Got a Secret, I can't help you. But based on what I see, I don't think they should be cutting rates at all. But I think the market is expecting 1 or 2 cuts just based on the rhetoric and the narrative that they're pushing.
And Inez, as we're watching stocks move up and to the right, Bitcoin is finally getting some love again.
Yes, Bitcoin has been seeing a bounce, and strategists are expecting that you would see a bounce this month. You had 3 straight months of losses, so that sets Bitcoin up for a nice bounce into this month. There's some divergence as to whether the rally will continue through the first half of the year, but you have strategists that are pointing to higher Bitcoin prices by the end of the year, whether it be 115,000 targets or even 150 targets. So there's divergence on those targets, but certainly
I wish I had all my 0 DTs now. This shit's going crazy.
That have been
I'm not gonna lie.
Crypto in general.
Oh my God.
Brooke, I'm still waiting. I did a check.
Oh.
The show, lower rates theoretically should help the housing market come the spring.
Go to the purple box now.
I look
Come
at the
on.
Home Builder Index X HB. That's not doing much. Home Depot Lowe's not doing much. I was a little surprised by that.
Brian, to be quite frank, I think that this catalyst that everyone's been waiting for within this home improvement retailer, home builders sector just hasn't quite hit yet. And now, as I mentioned before on the show, is that now the rhetoric is sort of changing. Instead of these consumers or Americans moving out of their homes, maybe, increasing size, now the name of the game is renovations. Could lower interest rates push consumers to take on loans to ultimately build their house into what they want it to be, instead of taking on that 6% mortgage rate after they've had 3% for a number of years.
If Nvidia drops $4 today, you guys will hear me cry in the live stream.
Rhetoric from Home Depot, and I think that
Enjoy.
that catalyst that everyone has been waiting for.
Yo!
See where flip coming. Even
you went flipping
before, this is going to be a key issue heading into the midterm elections. Affordability around the housing market, and what exact candidates are going to say about that. That really is going to persuade Americans.
I've been in since fucking
their
12.
voting power, but also how they're thinking about the state of the economy.
Oh my God, they're
because
finally
they
going crazy
just
now.
don't
Let's go.
feel confident
Now
enough
they're
to
overextending
move on
the
their
bearish
homes
cycle.
and take
3/3
on higher
bearish
mortgage
cycle.
rates,
Extended,
but also
extended,
perhaps
extended
the
3
renovations
times.
that
The
come
1/3,
with new
2/3, 3/3
Kenny, you've
extended.
seen a lot
1,
of
2,
stock
3,
market
4
records, a lot
time
of them
extended.
spent
Now they're
before
going
the New
lower.
York Stock
Time is to
Exchange.
110.
When you see a round number crossed, in this case,
Things are
Dow 50,000,
expediting almost. Things are dumping
you?
almost
Should
from
it
the
mean
top.
anything
Not
to
dumping,
investors?
but it's
Do we
pulling
care
back.
about this?
QQQ, not really.
Listen, it's a
But I mean,
round number. It's
you
gonna
could
be
say
very exciting.
IWM
Like S&P 7,000 is going to be the
deciding
same thing.
whether
The
to
Dow
go
50,000
or
is
not.
really going to be kind of a
It's
bigger
literally
celebration, but
$1 away.
The truth is, it doesn't really matter to investors. It's great. It's going to be a reason to celebrate. Everyone's going to
lot
point
of
to the
fucking
fact
bears
how
here.
strong the economy is. But in the end, it's just a number, right? Exciting, but it's just a number.
Lastly, Kenny, at this point in time, just given the momentum
And
in so
I
many
am
other
out
areas
of
of the
2
market,
more
do you
SPX
use
puts here for
Mag 7
$3,600.
weakness
I
as
have
a
2
source
left.
of funds and look for more opportunities on those 493 other names?
So I wouldn't use the Mag 7 weakness as a source of funds because I think the
I have
weakness
2 left.
is temporary, right? So I'm not selling
0
any of my Mag
DT.
7 names at all. I'm just taking
I'm
new
going
money
into
that
Friday.
I'm adding into the portfolio
More.
and using that as a source of new opportunity, right? I love the tech space. I'm not selling the tech space. There's no reason to it. It's not falling apart. This small little pullback of 1% in the Mag 7 means nothing to me in the long picture. Remember, I'm not a day trader. I'm a long-term investor. So that is not a place where I'm going to go to raise money to
I love
reallocate.
this guy.
I'm taking new money to reallocate.
Kenny,
I'm in 6,920 and 6,950 now into Friday on January 9th.
I don't know,
SPX.
maybe a nice ossobuco.
Ossobuco.
Listen, Dow 50,000 and ossobuco. Good, sounds good to me.
All right, we'll drop the mic there. Invite me over, baby. That's what I'm talking about. Appreciate the opening bid roundtable. Y'all are the best.
You know, maybe if I was to fucking do something, I was maybe brainless to do SPX right now and do QQQs. QQQ is not fucking pulling back at all here. I'm about to leave my rest of my SPX today and do QQQ into Friday. On another dip down, hopefully here. It's about. We're up $6 on QQQ today. $7 on QQQ today. The fuck is this on the video, man? No movement at all. Truly some sad shit. IWM going to the LOD possible. This is now bears in control. Bear territory. Bear territory. Bear territory. VWAP flipping. Bear territory. Bear territory. Bear territory. Bear territory. Oh my fuck. Now feeling massive FOMO. I don't have jack shit, but I have 2 left. I mean, all my shit. I want a nice down now. This is now $2 down from the top. 694. We are at 692.5. 692 is most likely here. I don't do jack shit off price level. Fuck price level. But hey, $2 down, here we are. $2 down, here we are. Motherfucking market crazy, right? All time highs. This is motherfucking crazy shit. Just fucking crazy ass fucking. Oh my god. Look at this fucking cycle crazy today, bro. I'm telling you. Look at this fucking cycle insane today. What did they do, guys? Please, somebody please tell me what they do. Did they candle trade this bitch or no? No, they setup traded this shithole, right? They set up fucking traded this shit like crazy, right? Now it's 50-50. Now that we're in the purple box, now that we're below VWAP, if we are below VWAP, if they dump, they're gonna dump so fucking fast to 691.06. It's gonna be most likely go there and then bear trap them too, but it's gonna be most likely that's the next target. Bears are here. 3/3 big ass cycle. Bearish. Dump. Dump. LOD incoming. LOD incoming. Or LOD testing coming. Sorry, LOD testing coming. LOD testing coming. This is below VWAP is now LOD testing. We are in the purple box. This is the 3/3 bearish cycle. Bigger picture. Bigger picture. Intraday. Intraday cycle. Going from the tippity fucking top to the bottom. Dude, this shit is fucking crazy. On the way down, it looked crazy. The realists remember when I was like, oh, double top question mark? It looked fucking insane to say that. It sounded insane to say that, I mean. It sounded like motherfucking Chicken Little to say that, right? It sounded like fucking, you know, some crazy ass fucking, you know, some stupid thing to say that, but wow. Look at this shit. And they were like, oh, forever. And then, no. Using IWM at 1210. Oh my lord. Let's see it, man. Purple box. Let's rip it down. Alright, in 2 candles, I'm leaving. And if there's a 2 big ass red candle in the purple box, I'm fucking out. I don't care. Let's see it. This is now LOD testing, LOD hoping. If it happens, I'm leaving 0 DTE and I'm going to join QQQ into Friday here. Alright. At 626, right where fucking price is right here, right now. We are below VWAP. SPX is at 6950. We were at 6966. Right, I was in 6970. SPX puts from fucking 12 p.m. today. 12 fucking p.m. And time is 1:20. It's so fucking dark. It's so close to end of the day. They're burning all the fucking calls, and then now they're fucking going lower. Burn all the puts too, and now they're going lower. VIX got crushed. Smart money might have went in. Hedging. don't know. It could flip here. This is the 3/3. It's pretty. It's pretty.
House Armed Services Committee member Carlos Jimenez joins me now. Carlos, security forces have been patrolling in the streets of Caracas. Gunfire was reported overnight.
Everything coming down, bro.
There is
Cuba coming down, Venezuela coming down, motherfucking Greenland coming down, stock market coming down.
I think the president, I'm sure, has a plan, along with our Secretary of State and Secretary of War, to transition to a democracy in Venezuela. That's easier said than done. It's going to take some time, but this has to happen in a matter of months and not a matter of years. Now we have captured some oil tankers, and we're going to bring them to U.S. shores. We're going to refine that oil, and the president has said that oil will be used for the benefit of Venezuela and the United States. So that's what we should be doing, looking towards establishing a free and democratic Venezuela.
Do you think there's a deal here? President Trump is going to get 30, 50 million barrels of oil or more. Is he saying to the leaders in Caracas, we're going to get the oil and you're not going to do anything about it, and if you do, there'll be hell to pay? Is that the deal?
Well, that oil is sanctioned by the United States. They have been using that to finance their illegitimate regime for a long time. Now we need to make sure that the profits of that oil benefit the people of Venezuela and not the regime. Now the regime is going to have to play ball with President Trump. And I am sure that part of the plan, it will be they have to be in power for a while in order not to have civil war and bloodshed. We're at the
9:30 open level right now.
But the plan,
I literally said they're about to do this shit 15 minutes ago, right? We're at the 9:30 open level right now, right here, right now.
Venezuela. Part of the first part of that would be the freeing political prisoners, and also allowing the opposition to return to Venezuela with security guarantees. I mean, there is no playbook for this, but I'm pretty sure that's the path we're headed into.
There's no playbook for this, but I'm pretty sure that's the pathway it wants to do.
50, 60 miles away from Cuba. You obviously know what's going on there. How close is Cuba to collapse?
Pretty close. They can't keep the power on. They can't feed their people. They don't have any medicine. Venezuela was one of the leading sources of income. Venezuela was gifting Cuba billions of dollars in oil. They would then sell it on the market for currency. Now that's being negated. Unfortunately, Mexico's trying to make that up. So Mexico's now trying to prop up the Cuban regime.
Man, it looked crazy bullish when we were up there.
Under a communist dictatorship for over 60 years.
How bullish this bitch looked at 12?
It's time for the people of Cuba to be free too.
Anybody?
Cuba's going to be a tougher nut though than Venezuela. Cuba doesn't have the natural resources that Venezuela does. Venezuela can lift itself up, fairly quickly.
Does anybody remember? Does anybody fucking remember? I fucking remember it. My fucking heart, like fucking goddamn PTSD, like World War II, bro. Oh my lord, I fucking remember. Oh my god, I'm fucking feeling shivers in my body right now, bro.
The White House is still interested in Greenland. It says it's crucial for national security. Press Secretary Carolyn Levitt also says using the military is always an option.
I'm telling you, this is how they get the majority down here onto this fucking new shit. Majority up here, like this is insane.
Of Greenland?
I don't think. Look, I think that's negotiations. I don't believe we're anywhere close to that. There's no need for that. And so, is military action an option? It's always an option on everything, all right? But I don't think that's where we're at. There's no way we should be there, and I'm not too I know that there's not support for that kind of action in Congress for Greenland.
Two contracts for fucking
it is in the national security interests of
$200 each. Like,
but I think we can negotiate.
I had fucking 8 contracts for fucking $8,000. They're at fucking $16,000. Are you fucking kidding me? Oh my fuck! If I fucking had everything too, oh my fuck.
Congressman, I think you're a happy guy.
I literally left as they were going down. I literally left that when 12:51. Look at how fucking goddamn high that shit is up. I left half at 12:51 and I left 2 here. Look at this shit, man. I leave so fucking early, but I also, you know, the cycles are so fucking goddamn strong and so extended and so trapped and so much that
And a man who knows all about music from his hometown in Brazil, you'll be able to cope with the noise level, Cristiano, but you're part of not the noise, but the statements being made here at the moment. Robotics, when it comes to the future of autonomous driving, when it comes to physical AI. Talk to us about robots. Where is your technology really leading the charge there?
Well, we're incredibly excited about this. This is a new chapter, I think, of the Qualcomm expansion and diversification. I think we're going to robotics. We
trying
like
to leave
robotics
fucking
a lot
IWM at
LOD.
LOD.
Is an edge AI problem to solve.
I'm still trying to leave my IWM.
You cannot put
I
a
need to
server
leave.
in a robot. You need
I'm leaving SPX somewhere here so I can join QQQ.
And physical AI is a massive opportunity, and it's an edge AI opportunity. So as we look at this transition of Qualcomm into new industry, we went to automotive, to PC, to industrial, to data center. Now robotics is the next opportunity.
They have a lot of fucking people trapped today. They have a lot of bears trapped today, and they have a lot of bulls trapped today.
Demonstrating training, humanoids, industrial. I think we started the year working with some great companies, German, KUKA, Figure AI, and I think it's going to be a great opportunity. And robotics, it's perfect for you to have high-performance computing
Every
and
single
low-power
green
connectivity
candle being used
is
to
an
go
edge
lower.
AI problem, and I think it's going to be the next big wave of AI, physical AI.
How soon is that reality? Already we have robots in manufacturing and industrials.
Every single green candle being used to go lower right now.
The humanoid versions in our houses.
Every single fucking
the way we
green
think about
candle
this
being
is
used to
things
go
that
lower
you
right
didn't
here,
thought were
right now.
possible to do with a robot, you can do it right now using AI. I think
Candles
industrial
fucking
robot
not
is the
standing
big,
supporting at
largest
all.
opportunity that we see in front of us, and it's probably
There's
starting
waterfall down.
as early as 2026. When you train,
5 minute
use
back
AI
use,
to
too
train
bearish.
your robot on one given task, it's a very well-defined problem, and you can do this and you put it into production. Consumer robot, the one that is going to be in your house and do everything for you, it's going to take a little bit of time, but it's going to happen, and it's going to be a big opportunity. I like to do this parallel with what we saw with automotive. When we start
Look
talking
at that
about
fucking
autonomous
hard-ass
cars,
rejection.
a lot of companies went in and said, we're
This
just going to get the
fucking
full
rally
autonomous robotaxi.
to new
But
all-time
until
high
you get there,
on
you
low
can
volume
do
again.
assisted driving to
1
every
hour
car on the road,
rally up,
assuming that the driver is
1
there
hour
to pick
drop.
it up. And we've seen ADAS level 2,
That's
level
what it's
3,
really showing
highway
as 1 hour
autopilot,
up.
highway autopilot. That's what we're doing. I think the same
1 hour down.
parallel applies to
We'll
robotics.
trap people.
First, you have
2
a lot
hours,
of enterprise
1 hour up,
and
1 hour
industrial
down.
applications. We see companies, for example, in retail, at night, robot, go to the aisles of the supermarket, and restock the shelves. Something very simple.
Bulls
That
are trapped now at the
opportunity is
top.
happening right now.
A lot
Over
of
time,
fucking
we're going
bulls.
to have the domestic robot that will do everything for you.
Okay, let's go to
It's a lot of fucking bulls trapped at the fucking tippity fucking top.
But autos is where you've dominated. Jensen Wang on
That's
stage
how.
saying,
That's
hey,
why.
I'm getting into
That's
the
why I
world of
fucking
autonomous
saying. That's why I'm
driving
saying in the chat.
platforms
Does
too.
anybody
How
remember?
do you see that ecosystem
Because that's
evolving?
why.
Okay. The most
There's a lot of
important
bulls
thing
trapped.
is to really understand what's happening in car. Car becomes a digital product. So from Qualcomm, we're going to have a slightly different perspective. We
This is
think
clearly
that the
why we're here
most
fucking
important
now,
part
honestly,
of the
right?
car digital
We're in the
experience is
purple
the
box,
digital
so
cockpit. Because the digital cockpit
I'm expecting
becomes a
somewhere
new
here. I'm
computing
honestly
surface.
expecting
Like your
somewhere
phone is
here.
a
I do
computing
not
surface,
want to
the
make
laptop's a
anything
computing
look
surface,
bare,
now the car. And when you think
biased
about
right here,
AI
but I
coming
will
into
say,
the car, agentic
they nasty
experiences,
with this bitch. So if
that
they
is
go
very
down
natural,
here, they
voice is
extend
very
the
natural,
bear
that's
cycle,
gonna
and
happen
then they
to the
bear
cockpit.
trap, I would
Today,
not be
I think
surprised,
we
right?
just
Even
announced
if
we
they
have
break
now
the LOD
75
and then they do that
million
shit, I
cars
would
now
not
on
be
the road
surprised.
with the
All
Qualcomm
they're
digital
doing is they're
cockpit.
fucking
Our
cooking it.
pipeline is transforming into revenue,
Cooking it.
and
We're
we're
at
designing
yesterday's close,
virtually
4 p.m.
every
level.
car
This is
company
fucking
using
cooking
the
it.
digital cockpit. The next part
Bullish
is
today,
what's happening
but bull trap
in
ish.
autonomy.
That makes
And
sense.
in autonomy, you have
Bullish today,
you
right?
have
But bull
this
trap ish,
transition.
if that makes
You
sense.
can
Bullish
bring
today.
to-
I don't know about
to
Tesla, by
bring
the way. I don't know.
safety and reduce
Bullish today on Nvidia,
accidents.
but
You
bull
can
trap
bring
ish.
assisted driving
That's
to
what it looks
every
like.
car,
IWM
starting
bullish,
with level
but
2 all the
you
way
know,
up,
bull
and
trap
then you're
ish.
going to have full autonomy. So we
Or
have been
IWM bearish
actually
and then bullish, but
driving
like,
the
look at the
processor,
candle going.
For this
Look at the
assisted
candle
driving,
going.
and now with a
Look at the
stack
candle
that we
going. I
developed
am
with
still
BMW,
in
we launched. It's available.
SPX
People are
6970
testing
here.
car here is
I'm almost at 5K itself with 2 fucking contracts. I will not lie. This shit was getting grinded and grinded from 12 to 12.10, and it was getting hurt and hurt and hurt. And now it is fucking going crazy and crazy and crazy because we're literally down fucking 20 points, 30 points. 6,970 to 6,950 is 25 points, 30 almost.
But you're going to have.
It was grinding and grinding and grinding crazy. It was grinding and grinding and grinding against me fucking crazy.
Like Elon Musk has said he's not losing sleep over Jensen Huang for that piece of the pie, and of course they have a client relationship too.
They extend cycle so much. That's why it's so important to know cycle, and time confirmation, and to understand the deductions and
Some
to
people
hope to
want to
God.
have an assisted driving.
It's
Some people want to not own a car. Some people want a robotaxi.
Someone out there in the world getting it right.
It's a big opportunity. I think there's going to be multiple players
someone out there in the world getting it right.
The issue of fully autonomous
big
cars,
bounce
the
happening.
biggest feature that you have to sell is safety.
Big green candle coming.
How safe is your solution is, and I think those takes time. One of the advantages of Tesla is they've been doing this for longer, so they have a lot of miles, real-world miles, not only simulation, to perfect the solution. But it's going to happen. It's going to be a reality of many car companies in the next few years.
And of course, you've got a strong relationship with Google when it comes to being within the auto as well in many ways. Take us, therefore, where you see the next innovations. Robots were almost there. Cars were already there. Everyone I'm seeing is getting excited about the wearables, the pendants, the jewelry. Where does Qualcomm play in that? Because that's an edge device.
Is this candle going to be used to go lower? I don't know. Is this candle going to bounce here in reverse? I don't know. I don't want to guess.
We are probably now willing to make a statement
I care.
that is the evolution
because I'm still short zero DTE, but I mean, I'm not going to fucking sit here and be like, oh, this is going to go higher or going to go lower here and do this and pull my fucking, you know, horse fucking out of my asshole and do magic and then fucking be like, oh, I'm a magician and Lord of the Rings, I'm a guru. I don't give a fuck about that. So I actually give a fuck about the reality. I actually give a fuck about the real direction, trend direction, setups. None of that. So
humans
none of
already
that shit.
decided what they're gonna wear. They're gonna wear glasses and jewelry and watches and rings, and you can put an agent, connect to it, give you context because something you wear all the time. So we're starting the immersions.
Look, this is what's going on. This golden box, 930 open AM level. This is what smart money is looking at. You realize this, right? Smart money things are happening right now. This golden box is the 930 open AM level. Purple box is the range from the intraday market.
Device is designing
right,
with
mark
Qualcomm
that.
right now. We have every design, and some of those are being announced at CES. Some will be announced throughout the year. But personal AI devices are the new mobile platform.
Wow, okay. So if that's the way we're going to be doing wearables, where is the future of PCs? Because
yes, you got to have a perfect understanding of fucking cycle and time and data burn, Ochoa, which is takes a lot of time, a lot of months, and a lot of effort, and a lot of trial and failure and error and success to understand here and there and there and here and up and down.
And you're starting to see a lot of the SaaS companies.
That's why you usually wait until 3:30, 4 p.m.
Going to the cloud,
sometimes people wait from 4 to 4:15 too, because prices get so fucking dog shit, fucking cheap that it literally one DT becomes 0 DT.
More of an enterprise play than a consumer
like what happened on IWM yesterday,
it will be part of a lot of consumer use cases. And I remain optimistic about it. Our PC business, we just started. We have about 150 designs. Most of our designs is because people wanted to do a thin and light and multi-day battery life. But now that you're going to put AI running all the time, that's where we're going to shine of unplugged performance. And it's going to happen. I think it's going to happen. In the enterprise boom of AI, you're going to see a lot of AI PCs associated with what's happening on the data center as well.
So, Cristiano, for all those people out there who are like, this is a bubble, this is hype, the real return on AI investment isn't coming yet, what do you say to that sort of critique?
Well, not for us. I think we're doing things
IWM
on the edge,
eating
the stuff
the
that
greens
humans
almost.
are buying, and I think when we're going into the data center, it's for
I just got too greedy that morning.
But here's the answer to your question. Everybody's
now,
playing
if this
to
shit drops into fucking 253 end of the day, I'll cry. But it's fine. That's some bullshit, though.
Will everybody win?
I'll tell you
Probably not. There are going to be few winners.
I went so fucking much and the market did nothing.
I think the way to think about this is
people at IWM.
Maybe in the short term, you could argue that maybe there's overinvestment. I think it's a natural It's a natural consequence of everybody playing to win. But in the long run, I still believe AI is underhyped. And the way I'll do this parallel for you, the internet in the year 2000 was probably overhyped. But in the year 2000, when people thought what the internet will be today, was a fraction. It's much bigger than what they thought it would be.
I don't know if I should fucking leave right now and wait for a bigger bounce and join QQQ or what, but I did not leave at 1:30. The rest, I only have 2, but they're up crazy anyway, so it's not really that big of a stress. But I mean, yeah. Another LOD test, and I guess I'll leave, and then I'll figure it out. If they bounce here, then I probably have to leave too, and I'll figure it out at the algo range. But just because it rejects or fucking bounces here does not mean it's gonna do that shit in the fake out on a real or whatever. It really just means it's building cycles.
House Armed
So
Services Committee member.
yeah, best to not get ahead of yourselves is the best thing to remember always. Always.
Trade Live. It's time now for the big picture. So let's welcome in the team from Charles Schwab. We've got Kevin Gordon, Head of Macro Research and Strategy, Schwab Center for Financial Research, and Cooper Howard, Director of Fixed Income Research and Strategy as well. Kevin, I do want to just start with you, of course, given the news update we've got around Venezuela.
Thank you so much for hitting the like button today, guys. Please hit the like button. I don't know why we are only not getting the likes, but yeah. There's about 50 or 40 people that come every other day, every day, and watch, and then, you know, I don't know if they are happy or not, but I mean, they never hit the like button, so I do not know, but thank you so much for hitting the like button, and
what this could mean sort of longer term for oil
please realize
how you and the team sort of thinking about this story this morning.
Yeah, thank you.
Yeah, so it's, I mean, it's still
it's not that hard.
I think to the extent that we get more details.
Want to come watch, and maybe they
what
want to
the
go.
U.S. How the U.S. stands to benefit versus how Venezuela stands to benefit in terms of the proceeds. I think we have to wait for a lot more information. So I wouldn't try to front run it. But I think just in terms of the amount of oil that it is, it's not necessarily that economically significant to the United States. So I don't really see it as any near-term needle mover in any direction. I think that path of least resistance, assuming we have some sort of improved access to more oil reserves, and that does boost supply to some extent around the world. Path of least resistance for oil prices is probably lower, and that's not really a new phenomenon. That's been really the trend.
I'm glad you're happy.
So it's not entirely
I'm just saying, like,
experiencing. So
like
this
happens on good days and bad days too. But it's just like I don't understand, like
because
like a good day or a bad day,
especially on the energy side,
doesn't really matter.
But
it's really your mentality.
The best for the energy sector in
Those
terms of in stock market.
Understand what
so
I'm
there is
saying.
a little bit of a
mentality of it.
nature to this, especially when it comes to looking at
What
this
is
from
the
investor's
mentality?
point of view.
What is the
versus
outlook?
looking at
What
this
is the
from
goal?
The
What is
consumer's
the
point of view.
Okay. So Cooper, we're
dreams
obviously
of what they
tracking
want?
headlines
That's
coming
so
out of the Trump administration and
just,
Venezuela, but we got a lot of information
Oh,
as
good
far
days,
as labor data this
oh,
morning,
bad
as
days,
well as
oh.
ICE and services
Nothing
PMI,
really
which
is gonna
looked pretty
come
good
out of it.
actually, reading of 54.4.
All that's gonna come out of it really
line,
is
but it's
just
sort
a
of
lot of
bit
time
mixed
wasted.
when it comes to
Like,
hiring and job
what will
openings,
come out of
continuing to point to low hiring, low
spending a lot of
firing.
time on what
did
you
make
care
of it and
about,
the moves
good or
that we
bad,
saw, or the
and
lack of
doing things
movement,
that
you
you
could say, in
don't
the
like
markets
most
this morning?
importantly, and being happy and
So if
being
we look at the labor
contentious and
market
being
and the data
loving
that
about
came
it
out
and
this
being
morning,
caring about it and
obviously
doing it
Kevin
till
can
the
comment
end
on some of it 'cause
is
he
how
covers
you
a lot of the
become the
macro side of
best, how
things.
you become
But to
great.
me, it really
So
confirms a lot of the
that's
trends
why
that
I'm
we
saying,
have
like,
seen, that
like
no
it's
labor,
really
no
sad
hire,
to
no
see
fire
people get
trend
sad, or
that's
it's
going
sad to
on.
see people get
And also really
dismotivated, or
just
it's
a
sad to see people
labor
get happy
market that
because
has
it's
been
not the
softening,
point.
but
The point
ultimately
is
isn't
to
falling off of a cliff
learn. The
altogether.
point is to
Now, obviously,
remember.
we
The
have the
point
big
is to
report that's
become
coming
better.
up on
And the point
Friday,
is
so
to,
we'll see if that confirms the trend.
maybe,
Expectations
like,
are that it's going to be a little bit
see
of a
things in a
softer
different way,
print,
I
so
guess.
$60,000,
I'm not gonna say do
60,000
things in a
gains.
different way, but I'm just saying, like, yeah.
Now, I do
It's the thing.
expect that
Hypothetically
if
speaking,
that were to be
that is the whole
case,
point of
looking at how
learning
that
every
could
day
influence the treasury
of the market, because the market does this
looking
every
at
day.
longer-term treasuries, they
It's not.
continue to be range
It's
bound
not
state.
just a today thing. The market going up and then going lower. It's not just a today thing. The market went lower into the news conference and went higher. It's literally an everyday thing. So, whether that's good or bad, up or down, It's better to understand that, oh, they did set up into blah, 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 and then there was set up into news, and then there was set up, and then they did set up based on blah, 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 and it's like, oh, a lot of people, dude, going forward will not remember what has happened today or not remember what has happened. But what is important is those that have remembered, those that will remember, are going to continuously become the people that are remembering what they want to remember, if that makes sense. and yeah, I truly mean this shit, man. It is success is
for quite some time over the past couple of months or so, and
something
I really
you gotta
don't
almost
see them
fight for.
breaking
It's
out
not
one way
easy.
or another on that. So really, if we were to see something move significantly one way or another, that breaks the trend or breaks this range-bound narrative that we've seen a little bit lately. But going forward, it doesn't look like anything
Third,
major is
two,
going to
third,
happen
three,
to
third cooking
bust
here.
us out of that one way or another.
Okay, and yeah, obviously, Kevin, just to get your thoughts on
Fucking
what
cycling.
I mean, you have said that you view the labour market as both a headwind and a tailwind moving into 2026. How are you thinking about that?
Yeah, I mean, it's
Time
been
is
a headwind in
140.
the sense that, unemployment has been picking up over the past couple of years. And if you look at the move off of the trough a couple of years ago for the unemployment rate, it is consistent. The magnitude of the increase is consistent with what you've seen in prior recessions. But we also know that this is an incredibly unique cycle, and it's been the slowest increase off of a trough for the unemployment rate that we've ever seen. So it's been more marked by and characterized by this incredible churn at the industry level, where there are pockets of labor certainly in their own recession. The youth being one example, areas like manufacturing, and certainly the federal workforce being other examples. But then we've had relative strength in some of the services parts of the economy, especially health and education. So there have been these really interesting offsets where it hasn't led to this recessionary-like spike in unemployment. And per the JOLTS data that you were just talking about with Cooper, even though that's for November, so it's a little bit lagged, there was a move down again in the hiring rate to a cycle low, but there was also no major pickup in the layoffs rate. So that dynamic has been, again, something that's been with us for a couple of years now, but has been really, I think, the sort of poster child or the poster child, children set of data for this unique cycle where you haven't seen that material, a pickup in the layoff rate. So assuming that continues and you go through, more of this soft patch where hiring has slowed down a lot, but we look to maybe more of a rebounding in the private the private workforce, and we'll be, watching
Wow,
for
it's
that on
actually
Friday.
regained 140.
That could be a dynamic that maybe defines more of 2026, where there is
Algo
some
range.
stabilization in the private workforce, but you don't necessarily get that aid from the federal side because there has been so much cutting there, and there really is no sign yet that there's going to be a pickup in hiring at the federal level.
Okay, yes, I mean, it certainly is an uneven jobs market
Man,
right now.
QQQ is
fucking
flying.
If there's any movement there, I mean, certainly as far as the next cab off the rank the jobs data on Friday. But for now,
Tesla is
wondering,
leading.
How you're thinking about
Market
things,
is cycling.
with respect to the job situation, the macro data, the geopolitical tensions, that the market seems to be largely looking past as far as the risk premium being priced in here. But what's the sort of next catalyst for some sort of meaningful move here? Or do you anticipate that we stay relatively range bound for now as we just wait for these big question marks to be answered?
Yeah, so I do expect that we'll continue to stay range-bound for now on longer-term treasuries. And really what you can do is if you boil down the movements in treasuries to changes in Fed funds rate, changes in inflation expectations, and then the term premium, which is kind of like a catch-all. And it's really that uncertainty, instability, which that's a term that Kevin and Lizanne have used in their 2026 outlook. So I think that it's very appropriate looking at the treasury market as well. And so long as that instability continues to remain, whether it's issues with Venezuela, issues with Greenland, issues with concerns over where Fed policy is going, a lot of different concerns and a lot of different dynamics that are out there in the market, that should keep instability relatively high, and therefore it should keep the term premium relatively elevated. So I would expect that probably puts a little bit of a lower bound on where we could go for 10-year treasuries. So yes, Sam, I do expect that we'll probably continue to be this range-bound narrative going forward. Now, longer term, looking out for the rest of the year, I wouldn't be too surprised if we start to see a moderate uptick in longer-term treasuries. And our call in our 2026 outlook was to see a little bit of a steepening of the yield curve. We still do expect that the Fed is going to cut interest rates. Looks like maybe 1 or 2 times this year.
All right, I left
probably starting maybe middle of the year.
6970 for $1,780, and I am in QQQ into Friday.
And a lot of different
2K.
catalysts, whether they're a black swan or not, that could potentially
Right
move
here.
that direction one way or the other.
Okay, we'll be watching. Gentlemen,
627.
Always appreciate your insights. Thanks so much for joining me today. Kevin Gordon, Head of
I have
Macro
1-0
Research and
DT
Strategy.
left
Cooper
here.
Howard, Director of Fixed Income Research and Strategy, Schwab Center for Financial Research.
697D. I joined at 12, so I mean, there's no need for me to fucking be so greedy here. I am taking some risk off. I am watching. This could be the bounce. This could be part of the bounce to go higher on QQQ. So I mean, I'm okay with taking a little size here on QQQ here.
Hi there,
well
this is
Friday.
Tom Lee. I'm the
Now
Chief
I am
Investment Officer of Fundstrat Capital.
decently
and the
sized
Chief
into Friday
Portfolio
going
Manager
lower market.
of
QQQ,
Fundstrat
fucking
family of
SPX, and
ETFs.
Nvidia.
Granny,
And
SMID,
Nvidia,
and Granny
so.
Income. This is our update for the week of January 5th. First, let me start with some particulars. As of January 2nd, the price of GRNY was $24.99, NAV of $24.98, and total assets of $3.926 billion. For GRNJ, Fundstrat's U.S. Small and Mid Cap ETF, the price was $26.41, NAV of $26.38, and total assets of $202 million. And for GRNI, Fundstrat's Income Large Cap Granny Fund, the price was $20.39, NAV of $20.35, and total assets of $38 million. I wanted to recap the performance over the past week. Over the past week, GRNY
IWM 1 minute gap
fell 1.13%, which was also a weak for the S&P 500, which fell 1%, or roughly 13 basis points of underperformance. GRNJ rose 0.23% in the past week compared to a 0.68% decline of the Russell 2500, or relative return of 88 basis points. And for GRNI, price return was minus 0.72 compared to 1% decline for the S&P, or roughly 13 basis points of outperformance. And to recap 2025, GRNY gained 24% compared to a 17.8% gain for the S&P, or roughly 614 basis points of outperformance. For GRNJ, since the launch on November 17th, gained 5.66% compared to a 5.97% return for the Russell 2500, or 31 basis points of underperformance. And for GRNI, the S&P, total return was 1.8% compared to 2.76%, or roughly 95 basis points of underperformance. Now, every month we want to give you an idea of flows into the ETFs. December was a weak month for stocks, which meant it was a slow month for inflows. $288 million flowed into Granny, $159 million into GRNY, $114 million into GRNJ, and $15 million into GRNI. Okay, well, let's think about macro, because it's the start of 2026, and I want to go over the rule of the first 5 days. Now, if you're not familiar with the rule of the first 5 days, it's the idea that stocks and how they perform in the first full week often directionally tells you what the full year looks like. I think it makes intuitive sense. It's basically saying if stocks are strong at the start of the year, it's because there's a lot of demand, therefore it should be a good year. If stocks do poorly in the first week, well, I mean, it could be the start of a bear market. Now, I think a lot of folks are saying, how can 5 days determine the full year? They think it's a crazy idea, but let me just show you the stats prove this out. Since 1950, well, first of all, since 1950, there's 76 years, and the average return to the S&P is 12% a year. But look at the contrast. If the market is up the first 5 days, and that's happened 49 times, the average full year return is 16%. If the market is down in the first 5 days, the full year return is 3%. And look at the win ratio, 84% versus 56. So you can see the math kind of proves this out.
Hit the 0.618 perfectly.
We've had 3 back-to-back years of the markets gaining more than 15%. In fact, that's only 5 times that you've had that 3 years in a row since 1950. So let's look at the full year returns in that case. Well, of the 4 instances when the market was up the first 5 days, the total return was 20%. The other 3 instances, the market was down,
is creating a cycle.
And the average return is minus 10. That's a huge differential in performance.
Artificial cycle.
And look at the win rate.
Extension cycle.
20% versus 33%. So again, I don't think it's so crazy. So what does that mean? Well, the S&P closed at 68.45 on December 31. And so far, it's been up for the first 2 trading days of the year. But the key is closing above 68.45 on January 8th. So that's the key level by Thursday. And just to remind you, on our general composite for the year, we think stocks kind of are so much strong out of the gate. They'll decline in the middle of the year as much as a 20% decline before rallying and recovering at the end of the year and getting to 7,700.
Stop talking crazy,
and
Tom
this
Lee.
Is a time when the earnings picture actually still remains pretty good.
Speculating. No, I'm kidding.
We're forecasting earnings growth of 15% in 2026. That's an uptick from 12% last year.
Massive speculating.
And finally, let's go over Granny stock individual stock performance. The top 5 performers in GRNY and GRNI were AMD, Lam Research, Caterpillar, GE Vernova, and Vistra, which, by the way, basically semis and AI. Among the bottom 5 names, you can see it's really software stocks and partly Tesla here. Okay. As for the mid-cap side, the top
this is
5
the price
performers
level
are
where I
Bloom,
sold half my shit.
Rocket Lab,
So wow,
Reddit,
they're
Chemical,
back.
and Galaxy Digital, and the bottom 5 are
Bulls
Qualys,
are back.
UiPath, Samsara, MongoDB, and Pegasus Systems.
Oh my
so again,
Lord.
AI infrastructure leading, software declining. And as far as themes go, looking at mid-cap, energy and cybersecurity was the top performing theme. Millennials, number 2. Global labor shortage, AI, number 3. That's it for now. Thanks for listening, and I'll speak to you soon.
Thanks for listening. I'll speak to you soon. Well, they went super extended down, and now it's actually
chasing 50K on the Dow. We're chasing 7K on the S&P, and the futures are outrunning the markets today.
Well, the March futures are now trading 7,000. They've done so here in the last 20 minutes, and that's the expectation that the market continues to move higher. And I think the price action over the last 4 days is indicative of that. The market seems to be going to different areas, very tactically trying to find opportunity. Today, it is about software. Finally, the long-awaited mean reversion. It appears in 2026. You have names like Datadog, Synopsys, Cadence that are moving higher. IGV is higher on the day. I would also focus on Microsoft of the Mag 7. That's the software name that I think if we get a continuation of this mean reversion that you want to look at. But I think the message over the first 4 days is the market's not running away from risk. It's looking to actually accept risk, create some alpha opportunities rather where it can, very tactically. We've talked about a variety of different places, financial sector, technology, healthcare, biotech, and I think you have to like that.
This is a Stephanie Link market. That's the way I'm looking at it.
It's been a good couple of days, yes.
It reflects your portfolio.
Yes, it does.
A little bit of tech and a lot of everything else. And that's very much where we are, because the S&P, as it does head towards 7K, it is doing it without some of the very biggest names taking it there. The equal weight is coming off a fresh record high of its own, and we know the areas in the market that have been off to the races to start the year. Banks, industrials, and all the stuff that you've been talking about because of the economy. And as one business executive said to me today, he's surprised with all of the business activities going on post-holidays.
That's crazy.
Quote, like the floodgates instantly opened. That's kind of reflected in the market.
We talk about loan growth as being very, very important from the banks. And I cite this really wonky statistic from the H8 data from the Federal Reserve. It's just loan growth data. It's activity from the banks.
That's crazy.
We've had 11 consecutive weeks of loan growth. We're at record highs. And why do we care? Because if they're lending, then the activity in the economy is actually building. And that's exactly what we are seeing. We're at record highs in bank loan growth. 11 straight weeks, by the way, Scott, is at the best consecutive weeks since the second quarter of 2022. So banks are lending. That's good. The consumer has been spending. They're consuming. We're looking at retail sales. I look at credit card data. $1 trillion in holiday spending this past season. You have the AI momentum. You not only have the growth
might go back
from
down
AI,
here.
you have the food chain that's
6,949.
benefiting.
I'll be back in 2
and
minutes.
You have productivity that's happening. All of this leads to double-digit earnings growth. Is it going to lead to 16, 17% like some strategists are thinking? I don't know. I'm going to point to you on that. I don't know, but I think 10 to 12% is very reasonable in a 2.5%, 3% GDP world, given all the things that I'm talking about.
You get the feeling from both what you say and what I heard from the person that I was quoting there. It's like animal spirits were delayed, not denied. Coming into 25, everybody was like, I remember it, late in 24. It was my conversation with Todd Bowley of Eldridge out in Beverly Hills was talking about animal spirits, and you had the Trump election and taking office, but then you had the tariffs, and it upset a lot of that. But now it feels like you may actually get what some thought was going to happen a year ago, and the market kind of reflects that. If you look at the equal weight, that's really doing great. What do you think, Liz?
Yeah, I mean, if we look at just cyclicality in general, we're almost hitting on all cylinders. All of the indicators that the market would give you for
IWM
cyclicality,
1 minute
things
gap.
like consumer
filled.
discretionary outperforming staples. We had the value index hit a new high before the growth index. Some of the recovery that we had after that pullback in November. All of the cyclicality stuff is here, even in commodities, right? Copper is doing well. Gold obviously still doing well, but all of the stuff that would tell you economic activity not only is picking up, but is expected to stay strong. To Steph's point about consumer spending, I think that's a really important thing for investors to realize is that despite the fact that we didn't have the year-end rally or the Santa Claus rally that we all hoped for, the consumer kept spending. Retail stocks should benefit from that. The economy should benefit from that. And I think sentiment will start to recover after the soft patch that we saw in the fourth quarter of 2025. So I am still cyclically bullish. I like materials for the year very much. I like healthcare as a place for investors to rotate into looking for growth exposure, and that continues to do well. And I just like how the market's shaping up, especially after a geopolitical shock coming into the year to kick it off with a bang.
Especially, Jason, when you had so much conversation last year about valuation of the market.
Yep.
Well, it's rich at 22 times.
Yep.
You're not going to get multiple expansion this year, so you have to have a really strong level of earnings growth.
We're taking a screenshot of this for history, folks.
Going to go higher. I love a note from Barclays today, which takes on the valuation question and comes back with the fact that they say they look reasonable to start off this new year. Quote, while 22 times is not cheap by any stretch, in our view, current levels have not historically impeded returns, provided EPS growth remains positive. While we do think that current street estimates are overly optimistic,
this is how smart money does, folks, every day. Remember this shit.
Double-digit EPS growth this year.
Remember this shit.
It better.
This is how smart money does.
It has to. It has to justify that valuation,
Shake
which may, in fact, grow a little
like
richer.
A motherfucker and do the real direction, the traps, and the setup using time, setup, and nothing more.
13, 14, 15%, somewhere in that neighborhood, I think, what we hear from strategists. And I think, the multiple on the market historically is not a great timing mechanism for markets, right? That's what we do know. And I guess my impression of the market and what's been going on the early part of this year from a positioning standpoint and just the breadth that we've all talked about is this is durable. This is a healthy market. We want to see, to Steph's point, the other 493, the other sectors starting to perform, whether it's the KRE, regionals, financials, industrials, transports hit an all-time high the other day. So these are all positive momentum factors for me, and I think it spells to the durability of this market.
Dow Jones and the transports. Dow Jones.
I think we have to appreciate it at the start of the year. We typically do see some of this last shall be first kind of rotation where the names that had lagged start to lead, at least for a short period of time. What's interesting is that actually started back in November. The rotation really kicked off in November because that's when we saw the blow off top and some growth shares. They traded to an 85% premium to value at the peak in October. So there was a lot of room for valuations to come in. And I think the character of this rotation has been one that's been very pro-cyclical. If you look at what's leading, it's things like banks, and you have industrials doing better, industrial commodities doing better. So it appears that this pro-cyclical rotation is coming with a narrative of global reacceleration, which I think remains to be seen if the data actually supports that.
Boy, I'm thinking about my inbox over the last, 6 weeks from the sell side and their 26 outlooks, almost universally positive, bullish, 10%, 12%, 15% expectations for S&P stock performance in 2026. That makes me nervous. Does that make you nervous at all?
There's not a single strategist who's expecting a down year in 2026.
Are you?
No. We expect we think that we'll have volatility along the way, but that there's still room for the market to push higher through the end of the year.
That's the right word.
The key point
Lots of
is that in the
volatility
fourth
along
year
the
of the
way.
bull market, we've had 23 bull markets that have been 3 years over the last 50 years, 50, 60 years or so. And the conclusion is about 50% of the time, they're able to get to that fourth year of positive returns. So we have a 50-50 chance of being able to deliver positive returns in 2026.
Earnings, I guess that's the good news for bulls out there because of the expectations are in 2026. Again, double-digit growth in earnings, 12, 13% growth in earnings. Is that enough to support this valuation, this market?
That has been what has supported the valuation through 2025. The fact that you saw the vast majority of returns in 25 driven by earnings growth, and that's expected to continue.
I'm going to send the SPX put to call ratio here.
2026
if you want to see it.
Number. It's $310
it will be posted
a
in the
share.
WhatsApp
That
group.
implies an acceleration in the top line.
See it along with
That's
SPX
interesting
chart.
because if you look at consensus forecasts for GDP, consensus is expecting a deceleration in nominal GDP growth. Remember, sales are nominal. The other important point is that you have over 200 basis points of margin expansion that's already being baked into current forecasts. So we think if we're thinking about what could drive markets over the course of the next couple of months, it's whether or not you take the over or under on that earnings number.
Cameron Dawson with New Edge Wealth. We welcome all of you across the nation, including her Florida. We're doing Florida music today for Cameron Dawson. Do you know who Leonard Skinner is?
Oh, I was thinking you were going to go with Tom Petty, but yeah,
Yeah,
sure.
we have Tom Petty as well.
Yeah.
I
And
just
he's
thought
from the
you were
swamp.
too young to know Leonard Skinner.
Yeah.
Yes, folks, we're going to play Freebird. Get over it.
I'm more of a simple man.
Yes.
Yeah.
Okay. I look, Cam Dawson, at this equity market. I don't see the exuberance out there. I know there's Robinhood exuberance and, Lisa's kids are trading on the couch, but it's not like a 3-year double-digit OMG stocks are going up feel, is it?
And to support your notion of there being a lack of exuberance, you look at the Deutsche Bank and Goldman Sachs positioning indicators, and they're showing that institutions are effectively neutral. You cannot say that about households, though. Retail investors are max overweight, max all in. You've seen huge growth in margin loan balances. AAI positioning is at 71.2%.
Wow, I didn't know that.
That's back
huge.
to the peak from 2018 and 2021. So
Wow.
households are all in.
So institutions under-own Nvidia?
Likely, yes, simply because they have positioning size caps. At the end of the day, when you have a market that's so very concentrated and you have certain mutual funds that cannot own positions as large as what some of these names are, by definition, they're institutionally forced to being underweight some of these leaders.
Fixed income was a great performer in 2025. What do you think about the bond market in 2026?
Yeah. So because we're starting this year at lower yields, we're actually in our strategic tactical asset allocations, I should say, actually taking some money out of fixed income and allocating into other areas, simply because you're not getting as much of a return as you were at the beginning of the year, given yields are lower and the strong performance that we've had this year. So we don't think that there's a lot of room for spreads to compress that much further in high yield and investment grade. They're pretty darn tight. But note that they are 30 basis points wider today than they were at the start of 25. So you can, in fact, squeeze blood from a stone.
Just a fuck ton of puts and calls here. Grind, grind, grind. Grind, grind, grind. Things aren't even aligning that much. They're just all doing their own thing. Nvidia, Tesla, QQQ.
Bitcoin prices have rebounded to start the year after trading in a tight range following sell-offs in the fourth quarter of last year. Forced liquidations and selling by long-term holders pushed prices down as much as 35% from the October highs. You know who hasn't forgotten about Bitcoin? My next guest, John D'Agostino, Coinbase head of institutional strategies here. John, good to see you again. Good to see you live in person. Appreciate it.
Always love coming to see you.
So at its very simplest level, what is happening in Bitcoin? Help us understand this mini rally.
Sure. So I can understand why people think it's happening suddenly, kind of post New Year. The reality is, Bitcoin has been quietly recovering since a liquidity crisis around early October. Now, liquidity crisis in cryptocurrency is a bit different from other markets because, unlike equities, for example, the market makers, the participants who usually buy and sell and bridge liquidity, they're not obligated to post bids and offers like they are in equity markets. So commodity markets and crypto markets are similar in that way. So on October 10th, we have what we call a liquidity crisis, which means people got scared. They got scared they were overextended on their balance sheets, and they pulled liquidity away. They just exited the market. And when that happens, you tend to get these violent gaps down in price because people are very, very scared about not being able to get out of their positions, and they'll sell at any price. That happened. It happens in, you've heard of flash crashes in equity markets, right? That's the equivalent.
I've tried to forget those, but yes.
Right. It happens in all markets. When it happens in markets like crypto and commodities where the market makers are not obligated to be in the market, they tend to be a little more severe. So that happened on October 10th, and it was scary. Here's the good news. The good news is you didn't have this rapid, violent unwinding. There were these support levels of institutional buyers. So retail panicked a bit. They needed to get out, but institutional buyers kept that ground, that foundation. Now, it was reported that there was this horrible liquidity environment, and so crypto kind of fell out of the news cycle first 2 quarters, and you saw this sort of grinding down, sideways movement, boring price
grinding down, sideways movement.
What was happening for those of us who kind of stayed active in the market was we were a bit confused because you had this horrific retail sentiment. You had this, crypto Twitter and just Twitter X overall just being very bearish on the asset class. But what we were seeing at Coinbase,
Chino's tweeting at Michael Saylor,
all over,
like,
it's dead, it's going to zero, everything.
I hate it, brother.
And that's fine. I actually like those environments because you get to buy cheap things that people forget about.
Something.
But what was happening at Coinbase is you were noticing, institutions were just gaining interest. So that period from October to December was probably one of the most active institutional buying periods. And there wasn't a single institution that was looking at Bitcoin and crypto prior to October 10th that suddenly stopped because of October 10th. So there was this huge bifurcation of interest. You had massive institutional interest and horrible retail sentiment. And so what's happening is, since October 10th to now, is you're seeing a bit of a catch-up of retail sentiment, recognizing that institutions are still building and still growing. So I think of it less as a short-term spike and more as a sustained recovery.
Someone that I know told me yesterday, they said, Brian, this will be the year of tokenization in crypto. When you hear someone say that, what does that exactly mean?
Yeah, so it's a bit of a buzzword, right?
It is very much a buzzword.
And so
what a bunch of cycles.
So, I'm not that old, but when I got started, my first job.
The call is on
thank you,
the top
thank you.
today, but like they're cooking
the
puts all the way down there in the morning too, like this fucking
and this
beta
is
game and
everybody.
everybody.
This is like 2005. And it
Look at the purple box. All right, Bears. Time is 2:10.
And my first job was to help shift that to electronic trading, which is basically removing the physical floor traders and what's called going upstairs. So digitizing
Bearish.
And that took a decade to do. And so think of tokenization as just the next step in that evolution. So it's shifting from the current way in which we record these transactions to recording them on blockchain. Now, why is that useful?
That's called setup.
Blockchain is just better technology.
Alright, I'm gonna send this shit in the fucking group chat. Remember this shit for the future.
You can inject
please remember this shit
into those tokens. They become
called setup.
Smart contracts or smart
remember
tokens.
this shit for the
then
future,
you
man.
Really
you let the thing do whatever the fuck it wants, go where it wants, and then once you see setup, once you see them do what they want to do, that's how it's done.
So tokenization.
That's how it's fucking done,
dude. It's not a scary technology. It's just simply that
6975, and we are literally at
that transfer of value across
9. That's a 10-point drop at the end of the day. That's a 10-point drop end of the day. That's a fucking delete fucking calls going lower type of day.
Base allows you to trade all those different assets on one platform.
Alright, look at that shit, man. I'm telling you, they're about to go fucking test LOD now.
Elon Musk likes to say
they're gonna go LOD retest, LOD retesting coming right now. Incoming. It's so fast. It's so fast. This is it. I'm pretty sure this is it. They're about to go do it right now.
You can buy everything
they're
from
so fucking fast
on real estate to Bitcoin to
my
tokenized equity.
Oh my god, purple box setup.
Not only is it convenient, it
from
can be
12,
cost efficient.
Right, at
because
the pure
over
top.
time we'll figure out ways to cross margin all of those assets.
It's not even that close to fucking 3. It's 210.
Less margin as
they're really doing this fucking 2 fucking OPM
if we're having this
continuous dump,
2 months from now,
continuous 2 p.m. push into 210.
What will have been
LOD retesting, LOD hoping now incoming.
My interview here.
QQQ is going to the 0.5 Fibonacci.
It's not.
0.5 Fibonacci.
There's no. Again, we love to ascribe. Humans love to ascribe
but
causality,
they do what they do.
Correlation to causality, or confuse the two, I should say. So I think it's all the same things that's made Bitcoin valuable over the last 17 years since Satoshi wrote the original white paper.
Fuck this video. Fuck Bitcoin. Fuck Bitcoin. Crazy. These puts are fucking crazy now. Each contract, I have one contract is at $2,400. Fucking crazy. This shit was literally fucking half price. Less than at the fucking HOD today, bro. Wow. There's a 1 minute gap here at 6952. They could push down here with the 1 minute gap, but that could be a trap. If they do not fill this gap, they could leave it for some other time. They pushed down so hard just now, they created a 1 minute gap on the SPX candle at 6952. Deciding what to do. This shit could be a bull hope. This thing could be a setup to go bounce back. Right now, they're going lower off it. Right now, bulls are getting crushed off today at the tippity top where there was no volume on the 5 minute, and they went high as fucking went all-time high, and they pushed on the play in the 3/3, and I literally called out 3/3. Hey, we are playing in the 3/3 today, right? And yeah, we did go high, but this is what I mean. This is what happens. This is what I mean by short term, yes, scalping, yes, deduction, yes, but hoping long term, tomorrow, next week, I don't know. That's a whole different fucking story. That's a whole different motherfucking story because this is a deductor's world and things change and things cycle while they go down, things cycle while they go up, and they go crazy. QQQ bearish here. They go fucking crazy. Silent. Cricket. 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 Is this world a deductor's world? Or is this world a candle trader's world? I don't know. I don't know how candle traders can look at this shit and be like bullish, bullish, bearish, bearish. All I can say is scam, scam, fucked, fucked, liquidity to liquidity, every day, nothing changes, cycle, cycle, every day. Motherfucking roaring 20s, they're going lower with setup. They're going lower. Bulls are hoping on this 1 minute gap on a comeback, and they are not. IWM is IWMing. QQQ. Want to go lower. Wow. SPX puts going fucking crazy now. I'm at $2,700 on my last SPX put here on 6970. 6970. That I got at 12 fucking PM today. 12 PM was here at 6963 and we're down 20 fucking points now on SPX testing the low of the day. LOD testing, LOD hoping. They fake out all the fucking candle traders. They fake out all the frustrated, right? Speculated, estimated guessers with no setup. And then they do the setup. Is this just a today thing? Is there news? No. It's every day. There was news, yes. At when Caroline came out. God bless America. I love Caroline. Caroline came, Caroline did. But, wow. There were setups. Wow. There were deductions. Wow. Did they just do what they did? Bears are still here crazy. I'm wanting one more candle and I'm leaving here. I'm wanting 3K and I'm going into QQQ. Fucking nuts. I'm leaving right now. $2,780 for one contract. I'm out. I'm going into QQQ into Friday here. Adding into 627. Okay, I'm in stacked into Friday now, QQQ. And some SPX. Holy shit. I'm in SPX, man, into Friday, 6920 and 6950 when they were up here. Oh my god. I am now. I just need I need this shit to come down $5 fucking into close and I'll fucking be golden. I'll be up so fucking hefty. I'll be crying. If this shit drops to 185 tomorrow, 180 today, man, today, what the fuck, tomorrow? That's all I need now. Holy shit. Look at the 9:30 a.m. candle being played right now, right? I literally said they're gonna come back and play with this, right? And they're gonna be like, oh, we're back at the 9:30 a.m. candle. Oh, ha ha ha, right? That's what we're doing. 9:30 a.m. candle open range, right? Where are we doing? Where are we going? The intraday purple box range bottom. Somewhere at 6,937. We're 5 points away. This shit could spike down. I don't know. Or it could stop right here. But it's making everybody hope now. Let's see what happens, dude. Time is 2:20. 2:15. Bounced at 2:15 into 2:20. Thank you guys for hitting the like button, folks. I think the people that were here until the end, 93 to 95 people that have hit the like button till the end, were the people that saw what truly was cooking today behind the curtains, behind the candles, and behind the curtains. Oh, wild. Someone said I just got 500%. There's no fucking way. Are you serious? What the fuck? Well, market went down fucking $3, huh? That actually went down $2 perfectly. It went down $2.50. What the HOD to the LOD. That's how it's done. HOD to the LOD. Low of the day. High of the day. 10, 20. It's actually kind of weird. There's not a divergence on SPX. Never mind. And this is what happened today, guys. Please understand what happened today. 1040. Low of the day. 1210. High of the day. And they just cycled upon fucking everybody, and they fucking deleted all the puts, overextending puts that printed already from here, deduction or whatever, and the news came out, and they burnt the 3/3, burnt the 3/3 into the 1/3, 2/3, 3/3, and they cooked the 1/3, they cooked the 3/3, and they cooked the 1/3, 2/3 bull cycle to go 1/3, 2/3, 3/3 from the top today at 1210. The top was in at 12. Right. Market moves so crazy, but the market moved so crazy. That's why it's able to do this shit. There's so much power behind this shit. This is now 1/3, 2/3, 3/3 from middle of the day, 12:10, and then it got fucking super extended at 2 p.m. They went way more at 2 to 2:15. Right? That was the ultimate fucking bounce, right? When we were literally looking at this live stream. Who saw this rejection at 155 and was like, that's the weirdest fucking weird ass fucking rejection. A previous high today / all-time high breakout point turned into resistance and a support, right? I literally wrote this out as they were going higher. Then they fucking rejected it, and now it's like, what the fuck? That's weird, right? Who remembers? Right? Don't forget, man. I'm telling you, do not forget what has happened today, because this shit happens a lot. You'll see this happen another time when we're at another all-time high. You'll see this happen when we're not at an all-time high. You'll see this shit when we're going down. So remember everything the market is doing. It's wild. Remember everything the market is doing. It's wild. Whether you're suffering, whether you're having a great time, whether you're having fun, whether you're crying, remember why the greatness, the joy, the happiness, the point is in the suffering. I know that's the fucking worst, terrible shit someone could say. I know that's the worst shit you want to hear as a human being that wants to just joy, right? And we want to feel happy and we want to be smiley and good all the time. But I'm telling you, the joy comes after a period of suffering to find the joy, to find the happiness, and to journey through it and to have the confidence to actually get happy. So that's all I'm saying. This shit is not a fucking some type of day thing. This is the everyday thing. Everyday thing. Know that before it's way too late, right? Just fucking understand that and just be happy with it. They were at the purple box bottom. They're testing what to do. This is the bottom of the intraday low testing. The low is 75 points away. 30 points lower. I mean, it could happen. I think it's going to happen, but I don't know. I don't want to speculate, but I mean, I feel like a deduction would be that they're about to go lower. But I mean, I don't know. What do I know? All I know is that things are playing like crazy today on all things. All I know is that there's a low of the day at 1040 saying the wind direction is south from pre-market into 1040. Wind direction was north from 1040 into 1210. That's about an hour and a half, 2 hours. Wind direction was south from 1210 into 1215. That's about 2 hours as well. Time is, 2:15. Time is 2:15. There is 1 hour and 45 minutes left in the market. 1 hour and 30 minutes left. We are near the floor. That means mathematically speaking, statistically speaking, cycle speaking, time speaking, we are testing the floor. We are playing in the 1/3, 2/3, 3/3 bear cycle. We are pivot point testing. We are bottom of the purple box range testing. We are 9:30 a.m. open. So a lot of things happening, but I mean a lot of things were happening always. So man, is it good. Man, is it fucking good. Look at how fucking crazy low they're going though off the top, right? This shit is now turning into like a fucking 100 and something percent too. Up ride was 100 and something percent too, I ain't gonna lie, and then now it's turning into the same shit, up and down. Just right time, right cycle. Man, that is crazy. FOMO. I really was scared they weren't gonna do it today though, but I mean they went up so crazy high and now they're coming down crazy. Down. Look at Nvidia pulling down into market close here too. Alright, let's do a poll, guys. Who was surprised by today? Who was expecting today? Who what today, man? Did you think today was good? Did you think today was scary? Did you think today was amazing? Did you think today was what? Let's see it in chat, man, please. Everybody, please type in chat, please, 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 pretty please. Oh my lord.
Memory stocks like Micron, SanDisk, Western Digital, and Seagate all up sharply to start the year.
Look at this
as
shit
demand
on
for high-performance
SPX.
memory surges. Nvidia CEO Jensen Huang is giving them a shout-out, calling memory a completely unserved market at this year's
Fire
CES.
day today.
So is this the next leg of the trade, or was it already?
Guys, hit the subscribe button and please hit the like button on the video if you have not already today. Today, fire day.
Such a hot space. I mean, they are, though, traditionally cyclical. Does it matter right now? Do you worry about that in a couple of years?
Fire day.
I don't think we have a reference point. Over the past 20 years, memory has been a kind of famine or feast in a 6-month frequency, and it was pretty much driven by a smartphone cycle. Now we're in a different paradigm shift. Over the past 18 months, we have been highlighting the importance of DRAM. And as of last
Monday so much
night,
when they do
here
this.
We are. We don't have.
They went so much when they went bullish, and they went so much when they go south.
We do need a lot of storage.
Oh my god!
More tokens are created. We need to store them and move the data around, and storage becomes very critical. I think when you think about the big picture, when you look at these very expensive AI racks, sooner than later, over the next 12 months, the cost of memory, including storage, including DRAM, is going to account for more than the compute. So as much as DRAM, as much as we talk about the compute, either GPU or CPU, sooner than later, your DRAM or your caching storage is going to account for more. And this is the reality that is coming to the market. Manufacturers are now ready. For the past 20 years, we have been spending a lot and waiting for prices to adjust. And now, given the secular trends, everybody
Big
is
bulls and
kind of
big bears came
confused
today,
as to
huh?
how to plan. And prices
Look
are
at
going
QQQ,
up
0.5
more than
Fibonacci.
anticipated. And the
Went higher
next
to
question is, well,
1245.
how
That's how
quickly can we
bullish
add
this thing was.
capacity? Keep in
It's
mind,
divergence
it
today.
2 years to add incremental capacity. And I think maybe on Monday, somebody told Jensen or reminded him, we need more memory, we need more storage
Well, not
capacity.
just that, Many, but as I understand it, the Korea Economic Daily reported that SK Hynix and Samsung were going to raise prices 60 to 70% this quarter versus the fourth quarter. So it's not just Jensen Huang talking about this. Who pays that bill? When you say that the memory is going to cost literally more than the compute, is it Nvidia paying that memory cost? Is it the data center? Is it the client?
Well,
time is only 2:30.
Prices are going up, but sooner than later, we're
I
going to
feel
run
like
out
it's
of
about to
physical,
happen today, so they trapped the fuck out of
space
everything
to
today.
make the memory chips. And this is where
I
these
may be
memory
wrong, but I
manufacturers
mean,
have to decide, and Jensen has to make a commitment that yes, we need to spend billions
that's why
of dollars
every
to
single
build the
bounce right
factories
now
that
is
make the
kind
memory
of
chips. And to
scary
your
as
question,
shit.
I think
The floor
26 is going to be
of
who's going to
today.
preserve and
If they
expand
break it, they
margins.
go
Is it
fucking
going to be the
extend
memory
it and they
guys? Is it
destroy
going to be Jensen,
everyone up
Nvidia?
there.
Is it
So
going to be TSM? Or is it going to be Dell, HPE, and so forth? Who can be squeezed to extract more margins? I think.
man, I was feeling hella confident just on the fact that it looked crazy bullish.
I think memory guys should be able to
I remember how
maintain
crazy
or expand
bullish it
margin.
looked up there
TSMC
at
as
12.
the only foundry should be able to do the same. As to who is going to deal with extra costs is going to be a debate between Jensen and the rest of the supply chain.
But my next guest, well, he's turned bearish on U.S. equities more broadly and sees better opportunities overseas right now. Let's bring in Marco Papich. He's the macro.
Damn, they say this shit
strategist
after
at BCA
all
Research.
the good shit
Marco,
happened.
it's great to have you here. I've been waiting to speak with you. Where have
Good
you
and
been?
bad.
Happy New Year, Kelly. It's a pleasure to be back.
Happy New Year. I don't know where to start, and we have to kind of do this quickly. So let's just do what you do the best, which is cut right to the chase. Why are you turning more cautious on U.S. equities right now?
You know, last year I was bullish bonds. Bond yields coming down is good for U.S. equities, and that definitely turned out to be the right call in 2025. I'm worried that there's stickiness to U.S. 10-year yield. 68% of the U.S. GDP is U.S. consumer, and U.S. consumers do need lower borrowing rates in order to sustain the health of the economy. It can't just be AI capex. So I'm looking for a resolution to the current status of the 10-year yield, which has been stuck at 4.15 for basically since late October. I don't like that. That makes me cautious. Second, AI capex story doesn't look as great as it did last year. Just some doubts about adoption. And then finally, we need some global growth concerns to be resolved. We need to see a little bit more out of China in order to be overall just bullish on risk assets.
Yeah, now I don't like this call because, you know, first of all, we all
every day there's setup, guys. Every day there's levels, and every day there's boxes and things they create.
I think your point is really interesting about the 10-year.
These hybrid traders, these deductors, just have a algo. You know, these Jim Simmons are they just have a system to figure it out faster.
More on the shorter end,
better.
You know, maybe the shorter end of the curve as the Fed lowers rates. So it's
but
not
ultimately,
a great formula. The 10-year matters more for mortgage costs, a lot of borrowing rates, and so forth.
That is something that will never change throughout history. That is something that needs to be learned, and that is something that needs to be appreciated, and that is something that needs to be
more aggressively than the market thinks. But that's also in of itself bearish, particularly if borrowing costs don't come down. Now, look, overall, for the next 12 months, I remain, modestly bullish. My S&P 500 target for last year was much more ambitious. It was 6,950. For 2026, it's 7,500, which is kind of meh. But that's because I expect some volatility in the next 3 months. I expect some downturn. But over the course of 12 months, I think the focus of the Trump administration will move from Greenland to more market relevant things such as housing policy. That's what really Scott Bessent was flagging last year. Donald Trump talked about it over Christmas. Focus on affordability, lowering borrowing costs. If they engage that U.S. consumer who is
taken advantage of,
then
basically,
things can still look good for the U.S. economy over the course of 12 months.
A couple of positive leading indicators. We've had the semis at an all-time high as recently as yesterday or the day before. Dow transports were at an all-time high. Caterpillar's doing well. Copper, Dr. Copper, those prices have been
all
on
right,
an upswing.
3/3 is cooking now.
There's a lot of factors, actually. I think even Nancy Lazar was writing this morning. There's some good kind of green shoots and leading indicators. And our guest yesterday was saying maybe GDP is actually starting to accelerate. So what I'm thinking about as I rattle that off is the 10-year yield moving higher because of that? And are we sort of trapped, right, where if the prospects look better enough that we don't need more Fed rate cuts, like the market still wants the story of falling inflation and falling interest rates for this rally to continue. I think that's probably even more important than AI.
I'm open for that. Like I'm completely. That's why I'm not in a recession camp and haven't been really for a very long time. So I'm 100% open to the possibility that a 10-year yield is actually telling us something positive. The reason I hesitate to be fully on board with that view, even though I am long copper and industrial metals, is that I do worry that we have been in a cash-driven economy for a very long time. And what I mean by that is that the U.S. government's fiscal outlays have been gargantuan, and they've trickled down to the consumers, and they've spent the cash. The problem is that is finally now out. We need them to start leveraging themselves. And that's why I do think the 10-year yield still does matter. We need it to come down a little bit, not too much, and then we're off to the races, particularly if the Trump administration focuses on lowering that spread between the 30-year mortgage rate and the 10-year yield, which is still, I think, 50, 75 basis points to fall.
Yeah, it's crazy. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. Oh, that's not bad though. 18 people saw it right when we were up here. This rejection, the picture I sent in the WhatsApp group, man. So, wow. It was sent at 1:58. So, wow. Everyone else saw the picture late, but hey, at least there are some that actually do pay attention to what is posted sometimes. So good for them, man. Wow, good for them. This is so evil today, Nvidia. Consolidating, whatever you want to call this is pure evil. On Nvidia.
To restore American uranium enrichment. One of the companies receiving some of the money is Centrus Energy. We're joined now by CEO Amir Vexler. Amir, welcome to the show. It seems to me we're scrambling to restore uranium enrichment to America. How long will it take to restart your nuclear fuel production?
Good morning, everyone. I got two answers for you.
Okay.
The process of enrichment really comes in two stages. The first stage is we have to build the centrifuges and construct the plant that will house the enrichment, and then the actual enrichment process starts to take place. We've announced in December that we have actually kicked off our centrifuge manufacturing process. Our teams in Oak Ridge and our teams in Ohio and Piketon, Ohio are working hard to actually start the manufacturing of the centrifuges, and we're in the middle of it. So when we're talking about reindustrialization, and President Trump talks a lot about that, that real industrialization has already started. This is a skill set that we have not had in many decades that we are sort of resurrecting now. And to your specific question, the enrichment will commence right before the end of the decade in 2029.
Okay. Does the government have a stake in your company, or did they give you the money as a grant?
These funds were appropriated by Congress, and the government has no stake in Centrus.
So essentially, you got a grant. They've given you the money.
That is correct. I will point out to you that the grant that we're getting is a very small fraction of the total cost of what it would take to build a plant like that. We view that as a kickoff point, a starting point, and as the market and as demand grows, we certainly have our own private investors partners, and obviously Centrus investment going into this project.
We're using nuclear power for these data centers. It seems that's what I'm talking about. Do we have enough uranium enrichment that we need in the immediate future, or are we in short supply?
That's a really good question. So I will make a point to the viewers that all nuclear plants that either running today or we're designing or planning to be running in the future all require uranium enrichment.
Yep.
As it stands now, most of our enrichment is imported. Some of it is imported from Russia, and that's going to come to an end in 2028. As it stands now, the capacity that we're building out is going to be covering some of the Russian supply that's not going to be coming into the market anymore. If we truly are going to quadruple nuclear energy, as is being planned by this administration, and by the way, planned by the previous administration as well, there has to be a significant increase to the enrichment capability.
Got it.
And I will make this point, Stuart. It's not only for commercial reactors. We have a significant demand for our national security needs as well.
Got it.
And Centrus is the only capability to do that.
Amir, I'm sorry to have to do this, but I've got to cut it short. Thank you very much for being with us today. Good stuff indeed. Thank you. All right, Mark.
It's time to spotlight CES 2026. Joining us now to help us do that, Stephen Dickens, the CEO and principal analyst at Hyperframe Research. Stephen, we appreciate you joining us from Las Vegas. I hear you're at CES.
Yes, it's a crazy show, so I'm coming to you
All right,
from
guys.
my hotel room, so apologies for the somewhat simple background.
Oh, no apologies needed. We appreciate you taking the time before your day kicks off there in Vegas. So as far as what your key takeaways are, obviously AI, the big story. We're not just gadgets now, almost signaling a shift in direction here. You know, what are some of the major themes that you're noticing?
So, Molly, this show's fantastic. It's huge. We're across multiple hotels and convention centers and conference centers. And there's everything from AI-powered swimming pool cleaners and toothbrushes right through to enterprise tech being launched. This is no longer just a consumer show. I've spent time with
My internet guys
from a
here,
semiconductor
so
perspective.
I will
spent time
have to be on the
with
WhatsApp group,
Global
folks.
Foundries this week. So this is really becoming an automotive show. It's becoming a semiconductor show, and obviously we've got the consumer piece. Particularly impressed with a 130-inch Samsung TV that I saw on the show floor. But joking aside,
Created a
two big things that
W.
kicked off: Jensen Huang and Lisa Su in their keynotes making announcements. Nvidia launched their Cosmos World Foundation model, and AMD announced their Ryzen AI embedded P100 series. What this is about, we're starting to move beyond physical AI. From generative, we're moving beyond the generative to the physical AI and robots. I've seen a lot of robotics companies.
I'll try to keep on